companies have signed up under the USMC. Now, the United States, Mexico, Canada trade deal was a deal that was inked actually in the first Trump administration, Trump 1.0, and it actually it gives some concessions. It insists that some parts of those products are made in the United States. We'll get you a detailed take on what is USMC as well. So that becomes important. Those concessions have come in. But he's saying very clearly that those concessions are only till April 2nd. So what is the market looking at now? Market is looking for some stability. Market is looking for some data points that makes the picture clear. All eyes are now on non-farm payroll data, which will be out on Friday. Jobs are expected to increase by 170,000 in this data figure. Unemployment rate is expected to remain at 4%. We had jobless claims that came out yesterday, which were a tad lower than expectations. That's good for the economy, but no clear indications yet. That's probably why you're seeing Dow futures up in the green. Bond yields have also dropped on tariff uncertainty. The 10-year at 4.26%. Oil has stayed steady after a choppy session. Crude is below $70. Let's pull up Asia for you as well. Japanese bond yields are off the charts. They are at new levels of highs. China trade data and 2 months data is going to come together because of the Lunar New Year break that was there in the middle. So that's why you're seeing Nikkei under a lot of pressure because of those Japanese bond yields. Asian markets in the red. We are probably going to start in the red as well. Let me pull up the implied for you very quickly, and that's clearly showing that we're going to have a weak start to the day. We'll see if we can sustain the kind of strength that we saw in yesterday's trade, because the last two trading sessions have definitely been a positive.
Yeah, and just, I mean, you maybe briefly mentioned it, but I think the other piece of the puzzle is, and what the ECB has done and what's happening to German bonds is a
yields
big, yields are spiking. Yeah, the bonds are really selling off. So there is a bit of how do I say, delirious dichotomy between German equity markets and German bonds. Now, usually bonds are a lead indicator of what's happening, but the equity markets are choosing to do otherwise because the spending from Germany is becoming very large. Now, one just hopes that there are no accidents at the European end while we are looking at this trade war between US and China. So we have issues here, US and everybody, but let's say US and China predominantly. We just hope that Europe, which has been quiet in a slumber, doesn't quite explode under any kind of debt issues, because the bond markets are clearly looking at some very interesting moves.
So you mentioned uncertainty, but then just to very quickly round off that point, it's not like they're completely well, not slumbering, because there's so much happening under the surface.
Until 2024, they were in a slumber, right?
Yeah.
We didn't have Europe doing anything.
So my only point is Germany, you have uncertainty on the leadership front. Italy is okay, but France is uncertain. UK is also uncertain. I'm talking about Europe, the larger region. And you have a situation where Ukraine is not yet resolved. Yeah. So there's a lot happening there as well.
Yeah, so geopolitically, a lot of confusion, I would say, for lack of a better word. But, you know, I think it all emanates from what Donald Trump is saying right now. So every statement becomes important. In fact, we just got this excerpt out for you. So he had a briefing yesterday with reporters, and one of the questions that were asked to him was what he made of Wall Street's reaction. This is what he said.
Have you been influenced, some of these exemptions that have been announced and some of these temporary delays, have you been influenced in those decisions because of the market reaction?
Well, there are no delays at all. No, nothing to do with the market. I'm not even looking at the market, because long term, the United States will be very strong with what's happening here. Now, these are countries and companies, foreign companies, that have been ripping us off.
Steel and aluminum tariffs are due to kick in next week on Canada, Mexico, and every other country. Are those going to be modified as well?
No, those are unmodified. Those are happening next week. And the big one will be on April 2nd, when reciprocal tariffs. So if India or China or any of the countries that really, India is a very high tariff nation. I'll tell you what's a high tariff nation is Canada. Canada charges us 250% for our milk product and other product, and a tremendous tariff on lumber and things as such.
Okay, so the tariffs are definitely not off, but there are some exceptions under this USMCA. I think we should just take a second to talk about what is this USMCA, because you're probably going to hear this term a lot in the next few days. This is sort of the cover under which blanket tariffs are seeing some exemptions. So this is what it is. It's an agreement establishing a framework for largely tariff-free trade among the three countries, that's US, Mexico, and Canada. It's the trade pact that replaced the North American Free Trade Agreement during Trump's first term. It governs economic relations between the three countries. It addresses issues like digital trade, intellectual property, and labor standards as well. So it increased US access to the Canadian dairy market. It allowed tariff-free exports of up to 3.6% of the market. It had agreements for automobiles as well, which is what is now being implemented as an exception under Trump 2.0. There are measures for intellectual property to strengthen protection of intellectual property. There's labor standards as well. So it's a very complex deal, and it seems to be very much around. So watch for the USMCA's sort of exception to all of the tariffs come in. But having said that, as far as India is concerned, reciprocal tariffs are on the 2nd of April. So there's not going to be any relief over there, guys.
Yeah. Let's talk about what happened as well in trade yesterday and whether or not it sets the context today. Of course, you pointed out that the implied open is negative at this juncture. But day before yesterday, I will remind you that this was a similar picture, and you saw a completely different end, and the texture shifted completely during the course of the day. Yesterday as well, you had a very sharp recovery from the low point of the day for the benchmark Nifty 50. We ended at very close to the high point of the day. But let's start as we normally do with the flows. And once again, you had foreign institutions selling to the extent of 2,377 crore rupees, domestic institutions buying to a lesser extent, about 1,600 odd crore rupees or thereabouts. And let's also address what happened in the broader markets, because I've already talked about the fact that the benchmark Nifty 50 gained 1.3% from the day's low, but you had the broader markets that cooled off just a tad bit. By the way, when we're talking about the Nifty 50's move, and I'm sure that Neeraj is going to talk about this just a bit, Reliance Industries rose about 2.9% and contributed nearly 52 points. The mid-cap index ended with gains of about 0.5% or thereabouts, and the small-cap index ended about 1.5% higher. The primary gainers were crude sensitives, as the oil prices have been on the down below $70 at this juncture. Just a few examples of that. Chennai Petro gaining about 11.8%, Castrol 10.6% higher, HPCL, BPCL, IOC all close to 3% or more higher, and Asian Paints as well taking a bit of a breather from the selling that it has faced in the recent past, gaining close to 5%. Metals, energy, pharma, FMCG all ended the day with gains. You had realty and IT as well as banks that relatively underperformed Neeraj in trade.
Yep, they did. But the interesting part is how does the market behave in the face of today's slight pullback. So the global cues may impact the markets today, but the trend definitely seems higher. Yesterday, we had 4 technical guests, 2 who look at long-term trends, 2 look at short-term trends on the closing show. All 4 of them unequivocally believe that the trend is higher. The support's taken at 22,000 or thereabouts. Not 22,000 per se, but that range.
That range, yeah.
Yeah, very, very crucial. And in fact, Nuvama, Manav Chopra was on air, and he said that they believe that the large portion of the 15% up move that they believe could happen in the next 3 months could happen in the first 1 month itself. They are targeting 15% upside for Nifty in the next 3 months, forget calendar year, in the next 3 months. So there are a lot of bull calls that have come in after this stability that we've seen in the last couple of days, so could be interesting. I don't know if Reliance potential bottoming out may help the Nifty. And what I mean is that if 2024 and the recent past, Reliance was a drag. You don't want Reliance. If Reliance doesn't contribute on the upside, it's fine. You don't want a heavyweight to be a drag. So if Reliance stops or ceases to be a drag, that is an added positive. And I think it's after 4 years that Macquarie has turned out and given a positive note on Reliance.
Oh, I didn't know it was that long.
After 4 years.
Wow.
Kotak, after a really long time, turned constructive. So if Reliance stops contributing negatively, that is some bit of work done, because IT is in a bit of a flux right now. Yeah? So therefore you want Reliance to do okay or not do badly. But the consensus seems to be metals guys. Almost everybody saying, and I think our guest made a very interesting point as well, that it is so under-owned. From the long side, institution side, forget FIIs, even DIIs, metals are so under-owned that there are no big sellers out there in the case of the stocks rallying. Now, of course, it depends on China predominantly and maybe safeguard duties, etc. Those safeguard duties, the JP Morgan note today says they could take 6-9 months, so don't know what is coming soon. But if China does deliver a little bit, then the sector which is completely under-owned and the valuations are not that rich in select cases, who knows, could do well. So watch out for this space.
Yeah. I think what is also heartening is that the broader markets have been rallying, and I know we focus a lot on the Nifty, but in terms of people's portfolios and where the deepest cuts have been, the fact that broader markets have held up in the last couple of days of trade, and we're showing you the 1-month chart which shows all the pain coming in, but if you see the last 2 trading sessions, the fact that selling pressure has not come in massively at those levels gives some heart. So, one would hope, if nothing else, your advanced decline ratios, your larger picture remains robust as well. Hence, all of the stocks that we're putting on our watch list today. So let me start off with that. First one on my watch list is Bharat Electronics. A thumbs up there. The company has secured additional orders worth 577 crores. So that's the official exchange filing that they put out, the notification they put out. So total orders received during the current financial year now stand at 13,724 crores. A lot of those orders are for airborne electronic warfare products, advanced composite communication systems for submarines, etc. There's a note out on BEL from JP Morgan as well, which is why I think you might want to watch this for moves today. They've maintained an overweight with a target price of 343 rupees. They say structural growth with strong order announcements ahead. They've seen a 20% correction from peak and say this presents a good entry opportunity. I thought that was interesting. BEL is the most diversified and consistent play on the defense capex, and they see a revenue, EBITDA, PAT, CAGR of, and respectively 15%, 17%, 16%, and 25%. So let me say that again. 15% CAGR or increase in revenue, 17% for EBITDA, 16% for PAT, and 25% increase in average ROE, return on equity, over FY24 to 27 is compelling. So for the next 3 years, FY24 to 27, in that period, they see good growth. They see a high possibility of BEL announcing 12,000 crore worth of orders by 31st March. That's important. And say this would act as a near-term catalyst for the stock price, which is why BEL, first on my watch list, with a thumbs up from my end. Kalpataru Projects International is the next one that I'm talking about. They've secured new orders worth 2,306 crores for transmission and distribution businesses overseas and for building projects in India as well. The order book position till date is at about 22,500 crores. It grew by 19% year on year to 61,429 crores in the 9-month period of FY25 so far. So Kalpataru Projects is the other one that you should watch out for. Brigade as well is something on our radar. We'll be speaking with the management today. It's a thumbs up. They've launched a premium residential project called Brigade Altius in Chennai. The total development area is of about 1.4 million square feet with a revenue potential of 1,700 crores. They have upcoming projects of about nearly 12 million square feet, which will be launched in the next 4 quarters, including 9 residential projects in Bangalore, 4 in Chennai, 1 in Hyderabad, and 2 in Mysuru. Their forward guidance is maintained at 15 to 20% growth in the pre-sales metric for FY25. So watch out for Brigade, because if you're seeing a turnaround, if at all, then the sectors and stocks which have been beaten the most, and real estate is perhaps at the top of it, might see that bounce back as well.
Yeah, and very interesting set of stocks. I'm hoping that mine are equally interesting. It's not a very big development in terms of the details for the first stock that I've picked, but this is a stock that you should definitely have had on your radar, and if not, you should put it on right now. TCPL Packaging. In a scenario where a lot of stocks in the broader end of the spectrum have lost a tremendous amount of value, in the year to date, this company or this stock has gained about 35%. Let's talk about what the latest update is, however. TCPL Packaging has inaugurated a facility in Chennai to increase its paperboard carton manufacturing capacity. If you're unfamiliar with what this company does, essentially everything that you consume in terms of tea or coffee or even pizza to a certain extent, this is a company that manufactures the containers that go, that all of that goes into. So if you think about it, if all of these things get consumed more, this company benefits. Q3 was actually quite good for them. They've seen a 45% increase in the PAT number and over 30% increase in the top line. Margins shrank just a tad bit. But if you're talking about a commissioning of a new facility, one would assume that you have higher scale, and that should reflect going forward as well, particularly in the first quarter of the next financial year. Let's talk about the next one, Avenue Supermarts. And on the other end of the spectrum, right, this company has seen quite a bit of a drag in the recent past, the shares being sold into. In fact, it's only about 6% off its 52-week low. But the latest update is that it has opened 4 new stores in Tamil Nadu, Karnataka, Madhya Pradesh and Punjab. And this has brought its total number of stores as of Thursday to 396. The headwinds that the company is facing have not gone away in terms of discounts and in terms of pricing and in terms of the threat from your quick commerce. But the fact that it is adding new stores is still a positive. Watch out for the quarterly updates. And the last one is a note that I saw, Goldman Sachs on Adani Ports. It is a thumbs up based on that. In fact, for them as well, they've maintained a buy with a target price of 1,400 rupees, and that implies an upside of 23% from the current market price. Remember, this is a stock that has gained quite considerably in the last couple of days. Yesterday it was 2% higher. The day before that it was close to 5% higher. And what they're saying, Goldman Sachs, is that the new port ramp up and the growing inland logistics, as well as the reasonable valuations as they stand right now, make it a positive bet as of now. Port volumes are set to be driven going forward by the ramp up in Vizhinjam, as well as Gopalpur, Tanzania, and the new port that they're commissioning in Colombo. They're likely to see early double-digit volume growth going forward, and in fact the logistics revenue and the EBITDA are set to grow much faster in the medium term, according to Goldman Sachs. They pointed out that Adani Ports currently trading near about 12.3 times the FY27 enterprise value to EBITDA, which is one standard deviation above the median long-term average, which they're seeing is a positive, Neeraj, at this stage.
So interesting names, some of those. I have 2 stocks which are positive on a negative day and a brokerage note which is positive on a negative day. So excuse me. Quest was known, but they finally received the NCLT approval for the 3-way demerger, which the company announced about a year ago. This was, I think, in Feb 2024. Now, remember viewers, usually demergers are done because they are meant to unlock value. The fact that this may happen for Quest is an interesting one. Now, does this react today? Remains to be seen, but I would suspect that it could be active in the session today for sure. How strong a reaction remains to be seen. Remember also, it's a stock that to the best of my memory hasn't gone anywhere. I mean, 1 month down, yes, but if you look at the 12-month chart or maybe a 3-year chart or thereabouts, it's just not performed, and therefore you might write about 25% over the last 12 months. So therefore, could be interesting to see if the demerger brings about a spurt in the stock. I don't know if TCS reacts on a deal announcement or no, but this is the third announcement, second or the third announcement from an IT company in terms of deal wins. Mastech did it maybe 5-6 days ago. Then Coforge did 1 day before, and now TCS has signed an expanded deal with Northern Trust, which is a large institution, right? And the deal is to centralize and standardize the custody operations across 99 direct and global markets. I bring it more from a perspective of IT companies winning deals as opposed to this particularly having an impact on TCS, but you never know. So watch out for this one too in the session today. And real estate has been active. A lot of experts are saying that they are good from a trade perspective too. So here's the Jefferies view on DLF. They maintain a buy with a target price of 1,000 rupees on DLF. And Jefferies says that strong cash flows and response to the Dahlias project launch shows that the Gurgaon market concerns are likely overblown. Well, NCR had a 23% uptick in prices in the October to December quarter, by the way. Jeffrey says that the lease income is set for a 20% uptick as several properties get completed or are complete, and the stock is trading at a 30% NAV discount, which makes them believe that that is an attractive proposition. Now, let's see if DLF does react positively to this one or no. So, guys, from my end, these three, and there are a clutch of others, of course, which might come in, which we'll talk about a bit later on for sure.
Yeah.
But steel is something that we've been speaking about, and steel stocks have been on fire for 2 days now on China stimulus hopes. JP Morgan has now weighed in with a fresh brokerage note. What's driving the surge, and can the momentum last? Mihika is joining in with more.
Let me start with what JP Morgan's strategy is when it comes to the Indian steel sector. They do maintain a positive bias on the industry, and they suggest investors to accumulate the stocks on dips. They are overweight on stocks like JSW Steel and Tata Steel, but neutral on something like a Steel Authority of India. Now, steel stocks have rallied in the past week 2 to 4%. Because of the positive policy tone, whether this is the China NPC meeting commentary or Germany's infra fund announcement, as well as the potential safeguard duty imposition by the Indian government, which has been in the talks for a while now. But the problems with these factors that have been causing the rally, well, JP Morgan notes that the scale of the China steel production cut is yet to be known, and the 500 billion euro Germany infra investment announcement is going to happen, but it'll be spread over a period of 10 years. And the safeguard duty investigations may take 6 to 9 months longer as per reports, even though the industry expected it in the first 2 weeks of February. So in terms of whether this rally is sustainable, well, the brokerage, according to the Europe and Indian steel spreads, they do believe that the EBITDA per ton is likely bottomed out for Indian steel makers. The potential demand destruction from the US tariffs, however, can cause investor concerns. Furthermore, JP Morgan also sees very low possibility of a supply side reforms being announced by China. And even though the stimulus measures have been announced, they do expect the housing sector in tier 2 as well as tier 3 Chinese cities to see a mild downtrend.
Okay, speaking of steel, we had this conversation, very interesting one, with Manav Chopra of Nuvama Institutional Equities, and he believes that the metal index can see an upside of, hold your horses, as much as 30%. Let's hear from him.
Currently, we have taken a big call on metal as a sector. We've called it as the hidden gem of 2025. If you ask me, this is the call that we have initiated already. I think in the absolute basis, the index has just rallied 5%. But what are we looking into it? We are looking for the commodity cycles to come back with the emerging, especially we've seen historically whenever the dollar index is below a certain level, the commodities usually come up well. There is no concern in the larger time frame for the dollar index in general. Emerging, also like I discussed about the MSCI emerging market, this angle is quite favorable for the commodities. Specifically, the another aspect of metal sector, it's one of the most under-owned sector when you look at Nifty 500 versus the long-only ownerships. Okay, so long-only ownership is very subdued, and FIs has very minimal ownership in that. The recent decline we witnessed in the high beta was in real estate, cap goods, infra, because of heavy ownership. So this sector itself is very under-owned, and the kind of tailwinds that we are seeing on the macro front which is coming in, I think it will just act as a very strong chase coming from the metals, which we have actually seen in last few sessions. But largely speaking, I think this is just the first stage of the larger setup that we are looking into it. I have given a base case of 30% upside on the metal index, but very much likely I will not be surprised to see that if the sector front we are seeing a 30% move, the stock specifics can be anywhere between 40-50%. My top bets is Tata Steel, Hindalco, followed by SAIL, NMDC, but largely very, very constructive and bullish on the metals as a space.
All right, so echoing some of what we've already said, and watch out for the metal pack. According to Nuvama, there's a considerable upside there. Let's talk about Adani Ports, I believe. And in fact, it's going to remain in focus on account of Goldman Sachs maintaining a buy rating on the stock. I spoke about this. This was one of the 3 stocks that I had on my radar. Somit is joining to tell you exactly what they're saying, though. Somit, what are they saying? Okay. So, all right, let's instead talk about, Okay, let's talk
Adani
about it.
Ports? You want to
Yeah,
try
let's
and
talk
talk
about
about
that's
Adani
what I
Ports?
thought we were talking about.
All right, let's take a very short break at this point and we'll
Let's
come
do
right
that,
back.
yeah.
We'll come right back with more and just pull up the implied open before we get into that break. We're looking like we're going to have a bit of a tough morning perhaps, but will we see inherent strength coming into the markets? That's the big question. We'll be back right after this break.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every anlom, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Headlines you start your
Welcome back. You're watching India Market Open. The stock we're focusing on this morning is Adani Ports. This is after Goldman Sachs has maintained a buy rating on the stock. Harsh joins in with more. Yes, Harsh.
Well, 24% upside, Tamanna. So, interesting one here by Goldman Sachs. 1400 being the target price. Why are they positive? Three key factors. One, growing inland logistics is one lever. The other one is reasonable valuations. And third is the new port ramp up. All of these make for a good combination confluence. In terms of revenue and EBITDA, well, the logistics revenue and EBITDA will continue to grow much faster in the medium term is what Goldman Sachs is penciling in. Adani Ports with close to 27-28% market share in the India port volume continues to be in a position of strength is what they say. And FY26 growth outlook for the company looking better than FY25. And along with reasonable valuations, risk reward is attractive is what they are suggesting. 1400 being the target price again, 24% upside.
Got it. All right. So stock has gained, as I pointed out, over the last couple of sessions, and you should keep this on your radar because 23% upside even from this point. Let's talk a bit about the stocks that we've not mentioned so far, and there are quite a few that you should watch out for. And Mahima is joining in to round off the list. Mahima?
Right. So in terms of the stocks that are on my radar today, the first one is Jindal Stainless. It has completed stake sale in Jindal Coke. This means that they have completely divested their entire 26% stake in Jindal Coke Limited. 4.87 stake was sold to JSL Overseas and 21% stake sold back to Jindal Coke via buyback offer. Jindal Coke now is no longer the associate of the company. The total consideration was around 195 crore, out of which 36.5 crore was from partial divestment to JSL Overseas and 158 crores was from buyback offer. Just a brief about Jindal Coke. It's a manufacturer and dealer of Coke and Coke products. FY24 turnover stood at 1570 crores and net worth stood at 684 crores. In terms of contribution to Jindal Stainless, it accounted for around 4.1% of total FY24 turnover. The second one on my list is Biocon. In terms of the company, it has the company Biocon Biologistics Limited and Civica Inc. have announced a strategic collaboration. This is an agreement to expand the access and affordability of insulin aspart in the United States. And this collaboration is in addition to Biocon Biologics' own insulin aspart drug product for the US, which is already under US FDA review. The next one on my list is BEL. The company has secured an additional order of 577 odd crores. The total accumulated orders received by BEL during the current financial year now stands at around 13,724 odd crores. And major orders include airborne electronic warfare products, advanced composite communication systems for submarine, etc. So these are some of the stocks to watch out for in trade today that have news flow post market hours yesterday.
Got it. All right. Thanks, Mahima, for that list. In fact, let's also give you the watch list today, and you will see some familiar names because we've been speaking about these stocks already. The first one on the list, of course, is Adani Ports. Goldman Sachs seeing a 24% upside from the current market price. It has laid out why. The cliff note, of course, is that there's an expectation that volumes will pick up quite significantly going forward. BEL has gotten another order, this one worth 577 crore rupees, and it is a thumbs up as well. Brigade Enterprises has launched 1,700 crore project, and it is in the ultra luxury space. Watch out for this one. Canfin Homes, Ambit Capital has upgraded the stock and sees a 17% upside from the current market price. FSN E-commerce, UBS has upgraded the stock to a buy with an 18% upside. So a slew of brokerage notes coming through on companies with potential upsides, even reviews of their ratings. On the downside though, you have a few names here as well. Infrastructure, or rather Afcon's infrastructure is something that, actually this is Nuvama once again that initiates with a buy, and there's a 27% upside, so it's still in the green. We have all stocks that you should watch out for on the upside today. Kalpataru Projects has gotten new orders worth 2,306 crore rupees. Quest Corp, Neeraj spoke about this today. It's gotten an approval for its demerger. The NCLT process is what the latest is. RVNL has gotten a letter of approval worth 156 crore rupees, and this is another counter that in the recent past has been getting quite a few orders. All right, let's talk about the latest updates on the tax front. 30,000 taxpayers have declared assets worth 29,000 crore rupees, and this is the result of the nudging campaign that was initiated by the Central Board of Direct Taxes in November last year. My colleague Shrimi is joining in to tell you more about that. Shrimi?
See, India has been receiving data since 2018 from 125 countries under various automatic exchange of information and reporting standards. And in September 2024 itself, it has received a massive chunk of data from 108 countries, where thousands of individuals were featured where they having a foreign income through accounts and interest and dividend, etc. And under that CBDT, the nodal tax department decided to initiate a voluntary compliance and nodal campaign rather on November 14th, where they sort of tried to nudge these individuals to, disclose their foreign income from various other sources in the foreign countries and come clean and sort of revise their return. So the rule at this point says that if you have a foreign income at the foreign land and if you are a resident Indian, you are supposed to declare that in your tax return, and failing so could lead to a penalty up to 10 lakh rupees, and you may also face prosecution under Black Money Act. But this time the department has changed its strategy. It has taken the voluntary route instead of going through the enforcement route, and sort of nudge around 19,000 such individual based on the data through emails, outreach program, and sort of try to convince them to come forward, come clean and declare their foreign asset in the tax return. And this time very interesting point has also emerged where India also shared the similar information and exchanged the data with US under the FATCA 2010, and details of that is not known yet, but that will be a very important step in terms of having more information exchange from the foreign counterparts, which will help tax department across the globe to nab tax offenders and use these strategies to get revenues and lead to more tax payment in future.
Okay, so all ongoing attempts by the government and the tax department to widen the net and increase revenues by doing so. But let's talk about markets once more, and let's bring up the week so far chart for the Nifty 50, and it's been a good week considering the last couple of days, and you have gains of about 0.7% or so. But let me go also to the Nifty Bank, because I want to elucidate this point before I go to Kush. And you've not seen a tremendous participation by banks, not just yesterday, but over the course of the week. And I'm just wondering what he thinks about when this catch-up will take place. Kush, good morning, and thanks so much for joining us this Friday. What do you think?
First up, a very good morning. I see you guys are already in the Friday mood. No ties, t-shirt, looking good.
And you got inspired.
I did. I did. So, on a very light note, okay, since it's a Friday, you know the one guy we never really give too much credit for reviving the markets? Neeraj? Virat Kohli? You remember why? It was Neeraj who highlighted this fact that it is about 2 weeks after an India-Pakistan match where India wins that markets revive. And ever since he mentioned that, being a cricket and a market fan, I've been tracking that. It's come out to there. 2 weeks now. So guys, Virat Kohli turning fortunes not only for Indian cricket, but
really?
Oh my God.
his statistic.
So October 2023, India beat Pakistan October 13th or 14th, and we made a bottom on 27th October. So this time around, it was what, 23rd of
23rd, correct. That, yeah, 23rd.
So it's about 12, 13 days or whatever. Yeah. I mean, circa 2 weeks.
Yeah.
Urban legend.
Yeah, so technical fundamentals ab chodo. BCCI ko bolo India Pakistan ki match rakha hai, and every time we win.
Imagine what if we lose.
That's still an indicator.
I'm saying whatever works. Whatever works.
Exactly, whatever works. No, but coming to the actual data and statistic, the FII positioning on index futures that was around that 87 to 85 zone for a while now has actually come down to 82%, and we are seeing why, right? Nifty is actually kind of given us a good move over the last couple of days. What is heartening is not only the action that we've seen in the small and the mid-cap space, but what happened yesterday, where we actually went to the lows of 22,200 thereabouts, and actually rebounded from there and closed, near the high point of the day. That is some strength, that the markets are witnessing. Now, there's this channel, or rather we've spoken of the gaps. Remember, 22,500, 22,800, the first one's been filled, the second one comes in at 22,800, and thereabout lies the 20-day moving average as well. So once that is crossed, I think that's where the real party begins. Also, right now, you're seeing a straddle around the 20 to 500 strikes. The premiums put together is about 300. So the range is very clear, 20 to 200 on the downside that we saw yesterday, and 20 to 800 on the upside that we just spoke of. Still bullish on the Nifty, and there's a good possibility that this run, might continue for a little longer. Very interesting point that Alex mentioned, and I want to take it up now. Bank Nifty hasn't outperformed in the last couple of sessions. So, Alex, the outperformance that the markets, or at least the Bank Nifty saw, was on the way down, and what it was in the terms of it not falling as much as Nifty did, not on the way up. Sadly, that's been the story for Bank Nifty for the last 5 years. It's been one of the rank underperformer indices, amongst the major sectoral indices. So I'm not sure if that outperformance is going to come in. A couple of last points on this. The percentage weightage for HDFC Bank and ICICI Bank on Bank Nifty is 55%.
Right.
Two stocks carry 55% weightage. So unless these two guys or these two stocks start a rally, we are not going to see that outperformance. So bias is positive on Bank Nifty. Not sure if there will be outperformance.
Okay. Bank Nifty on your radar, specific stocks that you should watch out for this day, and we'll keep giving you some of those over the day. But let me go across to Chakri as well to get his take. Chakri, very good morning to you. Do you think that markets have sort of shaken off the funk? I don't know about this Virat Kohli connection, which Kush has discovered this morning. I mean, the fact is, if it doesn't happen, will we blame Virat Kohli? Then the reverse should also be true.
He gets blamed for a lot of things already.
So why not?
Anyway, okay, but do you think that we're shaking off that funk now, Chakri, as we get into business updates maybe in the next couple of weeks? There is a sense that maybe tariffs will not hit with that ferocity from an Indian context or a global context. Do you see a sigh of relief there, or it's too early to tell?
Good morning. Yes, I think I do agree. I think we're getting out of the funk, and so is Virat Kohli. And hopefully on Sunday it's all good news. And I think 2-3 things. One is in terms of tariffs. India, is a very different from other emerging markets for the sense that it is primarily a services-driven economy, very less manufacturing intensive. And the tariffs on each of the sectors, whether it's metals or whether it's Indian pharmaceuticals, textiles, leather, are all very different. And so it's not that a blanket 25% number. For some, it's very low, much lower. And for things like healthcare, it'll probably be even lower. So given all this, I think the Trump impact of tariffs on India is far lower than feared. Second is, India is trading, the Nifty is trading at probably one standard deviation below the last 5-year multiple. Now, if you look at the last 5 years, it also includes the COVID lows. So which means the market is very reasonable. It's bouncing off the bottom. And third, lots of sectors and stocks have corrected significantly, 40-50%. Index itself are down. So I think it's a great time to start buying again.
Okay, so that's Chakri's opening thoughts. And Chakri, so much more to talk to you about, but let me get Kush Bora's stock ideas out of the way first. Kush, a lot of people would want to know if you are still as bullish this morning as you were last afternoon.
Very much so.
If so, are you balancing it out, or are you going all long?
No. Very much bullish. I mean, nothing has changed overnight for me to change that bullish stance on the Nifty, especially given the risk-reward ratio. But even on stocks, both ideas on the long side today. PG Electroplast, a good recovery, a good rebound, close above not only the 20-day but also the 50-day moving average. And as I always mention, volumes for the last 5 sessions have been staggering. So on the upside, 895, 920 are your targets. 845 is where you place that stop loss. Along with that, AMI Organics, fair degree of volatility, but the last 3 sessions have had the stock run up quite a bit. Good base formation around the 2000, 2100 mark. Yesterday the closing was above the 20 and the 50-day moving average. On the upside, you're looking at targets of 25.25 and 25.90, and the stop loss comes in at 23.99.
Okay, that's interesting, because after a while I'm seeing, for example, an AMI Organics come into the fray, and that's largely a CDMO play. But Chakri Lokpriya, I would love to understand from you, because I'm taking that cue forward, whether it's AMI Organics, a CDMO company, or a chemical company. If Europe is seeing this revival in spend, it may be spread over 8-10 years, agreed, of course, right? And maybe uncertain right now, but could it spur interest in chemical companies? Because Indian chemical companies do a lot of business with the European nations, right? And that was the problem for Indian chemical companies. Can this spur interest in the chemical stocks?
Chemical companies have underperformed for a long time now, for various well-known reasons. Slowdown in Europe, slowdown in the US. And a lot of capex by the Indian chemical companies also at a time when the economy was slowing down, which hurt their earnings a lot. Now, if you flip it, that might probably help now to their benefit. CapEx is done. They have lots of capacities, and if Europe revives, the US is, of course, strong. And domestically, India is also kind of at a cyclical weak low and kind of moderating low and moderating upwards. So you take all these three things together, and in terms of as far as US is concerned, tariffs on some of the higher end chemicals is actually is expected to be far lower. And as far as Europe is concerned, now chemicals have a wide range, right from including defense to agrochemicals, and many of these companies are branching into various sub areas. And so, therefore, long story short, I think therefore the chemical valuations are good. Might as well start looking at them, but there are no immediate catalysts yet.
No immediate catalysts for the chemical space. Chakri, hi, morning. I want to talk to you about some of these smaller lenders, particularly the lenders that have exposure to agri as well as the microfinance space. And we saw, I'm not sure if you caught it, yesterday there was an update from, yesterday or day before, an update from Credit Access Grameen, but the stock was up and about yesterday after having gotten quite drubbed over the past few months on account of the pressure that it has on asset quality. Are you seeing any initial signs that some of this pressure we've seen on asset quality might be over? And are you seeing any opportunities, therefore, to pick up stocks at the broader end of the spectrum?
Credit Grameen has actually quite underperformed fairly significantly, as we all know, and partly due to its own stress of its book, and plus RBI increasing the risk weightage, which RBI reversed in a few days ago. So that will spur lending for all agri-related financing companies and will increase their loan book, reducing their pressure on their existing NPAs and the stress on their books. But having said that, I think, that as a space, it's unlikely to see an immediate bounce in lending. There is still amount of stress. The valuations are steep, but we'll still stay on the sidelines.
Okay, you stay on the sidelines. There is an update. I'm not sure if you have looked at this company called the packaging company that I had on my radar, in fact, which is TCPL. There is an update that they had on a new plant that they have launched. Chakri, have you ever looked at this company? This is a stock. The reason I ask is the stock is up about 35% year to date 2025 when everybody else, or practically everybody else in the broader end of the market, has seen some erosion in value.
I'm sorry, I don't know this company.
Okay.
First time I'm hearing the name.
Kush, any view on the charts here, because this is a stock that has seen considerable strength?
So good move. There was resistance around the 3600 mark. That's been taken out, and the stock's actually significantly higher from there. But now I'm starting to see negative divergences. So could be a buy on dips kind of a setup. Relative strength is apparent, but closer to a 4000 or a 4100 on account of some profit booking is when you can consider re-entering or entering into TCPL depending on your positioning. But yeah, a buy on dips kind of a setup.
Kush, in terms of metals, since we've been talking about metals all morning, what are your key picks over there when it comes to metals? And are you seeing, yesterday we had Manav Chopra very, very bullish. I think you must have heard that as well.
He was bullish.
You were very,
Manav
very
was
bullish.
Anu Jain was bullish, Tamanna. So yeah, but sorry, not to take away that point, but yeah, Kush was a part of the quartet which was bullish.
Exactly. So would you reiterate that, and what would be your top two calls on metals this morning if someone wants to, build those positions?
So just to give you a brief statistic, metals index is the top performing index since the COVID lows.
That's amazing to hear because it's sort of by stealth. It's not been, it's been under the radar, right? No one has been talking about it as much, but slowly and steadily it has been carving up.
Perhaps that has something to do with what the overall geopolitics is doing, because every time you get some traction in some of these names, there's some news out of China, and then you have this volatility.
Yeah.
I'm not sure if traders are used to so much volatility, especially in the last 4 years when you've had like a secular run in a lot of other indices or other sectors, right? And that is why perhaps the under ownership or under this the stealth kind of moves. So yes, very constructive on metals even now, and the two stocks that we've discussed on the channel as well couple of times, both targets hit, are Hindalco and JSW Steel. Tata Steel, I'm not sure. I mean, from rising tide, lifting boats, all of that. But there has been a rank underperformance on that stock. So while it might have some traction, some momentum, you might just want to be a little cautious. Hindalco, JSW Steel, perhaps even a sale. But the top two picks that I have are, as I said, Hindalco and JSW Steel.
So if I, as a viewer, investor, want to play on this metals theme, should I look at the index as a safer bet rather than specific picks?
No, I would suggest go with stocks. Index is a culmination of a lot of moves, right? And a lot of perhaps what you call over diversification also ends up happening when you've got a good move on something like a Hindalco, which has defied what the market is doing. Why not buy into that strength? So I'm a firm believer of buying into strength. Hindalco and JSW Steel are very clearly displaying that. So I would go and buy these stocks very specifically.
Okay, Hindalco, JSW Steel, keep that on your radar, and we'll keep tracking what happens to the metal pack. But another stock which perhaps will show some movement today, and an interesting update actually observed in our newsroom, also tells you how early in the morning people start ordering food in the NDTV Profit newsroom. I saw the first updates at 6 this morning. Swiggy may have initiated a cut on platform fee, but only for selective users. Mahima is joining in with a detailed report.
Right, so as you rightly mentioned, this platform cut could be for selective users only and could also be just for new users. Just in the newsroom, when we were trying to compare different platform prices for different users, we found out that Swiggy One users and Swiggy Black users still have a 10 rupee fee, but a new user saw that the platform fee for the new user before logging in was 6 rupees. But the question here is that whether that person will be able to order at this particular platform 6 rupees fee without logging in or not is something to be observed. But moving on to how platform fees have fared so far, in terms of Zomato, the platform fee is fixed at 10 rupees. Swiggy could be 6 or 10 for selective users and new users. Zepto is at 11 rupees. The next counter is Blinkit, where again it matches with Zepto. 11 rupees is the platform fee. Instamart is comparatively still lower as compared to Blinkit and Zepto. It's at 8 rupees. BB now is, that is your big basket now, is at 6 rupees, which is lowest of all quick commerce platforms. And in terms of platform fee hike timeline, since August 2023 to October 2024, we've seen a hike from 2 rupees in terms of platform fee to 10 rupees. So this is, grown in a staggered manner in just a span of over 1 year. In terms of the overall impact on Swiggy, going forward, despite of high competition, quick commerce platforms have remained stable in terms of hiking their platform fee, but food delivery is showing some kind of early signs of lowering their platform fee. Now, lowering of platform fee for select users might not have a bigger impact, but if they apply it for all users, this will have an overall impact on their profitability. And considering that losses from quick commerce for Swiggy are very high, this could overall have an overhang on their bottom line going forward as well. So this is the overall report as to how and what will happen to Swiggy if they lower their platform fee from 10 rupee to 6 rupee.
Okay. All right. I'm wondering what Chakri has to say, not about the platform fee, because I'm pretty sure that he's not looking at...
No, it's okay. Can I just say some of the examples that I saw? We've, in the graphics, cut out what was ordered. I saw McDonald's, I saw waffles, right. So not really judging these early morning orders, but it was quite astonishing.
Not idli sambar.
No, I don't think I saw any idli.
But Chakri, this is obviously a talking point, right? Because these are companies, Zomato, Swiggy, that depend on this platform fee to pad up their revenues. And ideally, you want to get people into the habit of ordering because you don't want them to look at this platform fee. What do you think about this latest update? Are you looking at these stocks positively?
Clearly, all these companies are benefiting from NDTV having the early morning orders in, which is a good thing, I guess, for the overall system. That was a joke, by the way, so I don't know if you guys got. Now, in terms, the volumes for all these companies are growing, and therefore the convenience for all the customers is growing. Against this backdrop, if it pushes out profitability, so be it. These stocks have corrected fairly significantly. And therefore, and now is the time when summer's coming in, the volumes pick up. And, some of the volumes increase will kind of offset the multiple ranges of platform fee, but the valuations are kind of are much lower today and worth beginning to look at.
Chakri, we did have a chuckle on that joke of yours. You couldn't hear us, but maybe the next time that you're in the studio, we can all have a hearty laugh together as well. But on that note, let's take a break. We come back from the break, closer to the pre-open session, talk about some other active movers in trade. Want to discuss a bit of metals with Chakri as well. So stay tuned, we'll be right back.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers, and Indian companies will not.
Back with the India Market Open right here on NDTV Profit. A couple of minutes left for the market start. Now, we spoke about metals in the trade setup. Kush Bora gave his ideas as well out there. I would love to get in Chakri Lokpriya's view here. Chakri, two possible triggers and maybe two different outcomes. That if China growth were to be the case, then steel stocks by and large, and the best placed steel stocks do well. But in the case of any kind of duties coming in, safeguard duties coming in, would the tact be on the fundamentally weakest names to actually bounce back the strongest? Because it's not about volumes, then it's purely about the pricing, and therefore they tend to benefit the most. How would you place steel, therefore?
You know, one thing about the metals as a sector is, in spite of what has happened in the last 3-4 years, the valuations are actually close to the bottom in terms of they all trade at about 6 times EV with around that range. And now that is a very safe level to buy, whether it's a Hindalco or whether it's a Tata Steel or GSW Steel. Any of them. Now, in the case, if you get specifics, Hindalco is probably better placed. They have plants in the US, they have plants in India. Yes, their capex is a bit high, but valuations, all things set aside, I think it looks decent. JSW Steel, for similar reasons, it looks strong. Now, in terms of tariffs, China is having a growth spur as well as production cuts. That helps put a lid, at least on the bottom of prices. Now, as far as Europe is concerned, that's a more long-dated thing. It's a bit more uncertain. But I think that good news can only add as a positive catalyst. So net-net, I think, yeah, Hindalco or JSW Steel look good.
Okay, first rates ticking in, and we're hoping for a decent start. Let all of these settle. Just want to get your take, Chakri, on an RIL. We've been talking about how RIL has been an underperformer for the last several weeks, along with the rest of the market. But the problem is, if a stock which has so much weightage on an index starts drooping, in that sense, it's a pain point. Would you say you could see a bit of a turnaround there?
RIL is an undervalued stock. The sum of the parts is actually much higher. But that has been the biggest problem, which is being the biggest stock. It's also the biggest bone, the biggest brunt of FII selling. And that is kind of impacting the stock, but the valuations wise, if you add up some of whether it's retail business at a low, oil business at a low, telecom chugging along, new energy hardly valued, you add this all up, I think the stock can be much higher, but our FII selling is an important point.
Okay, but would you be buying though, Chakri?
Yes, I think RIL is clearly at about 1,200. I think there's not. It's kind of close to the bottom. So I think if you're patient enough, the stock goes much higher over the next 1 year.
Okay, let me very quickly go to Kush on the technical setup for Reliance Industries. Yesterday was obviously a very positive move. Has the bottom been hit therefore?
Well, but it would appear so. The only reason there is slight skepticism is because it's been underperforming for a while now, and the momentum is squarely missing on the way down. The volumes even up until 3 sessions ago were quite high. So I will wait for a level not too far, which is 1220. That's where the 20-day moving average is. Once that is taken out, perhaps you could start see that bottom formation in place. I'm not sure if the momentum will kick in, but at least with the bottom formation in place and the stock steadying, the markets at least could see some sort of a recovery and just help on its way up. So yes, wait for the 1220 mark if you're looking for any kind of a confirmation that the near-term bottom is done.
I just want to look at some of the movers this morning, and Kalpataru definitely there. I want to pull up Quess. The demerger in motion, we knew it was going to happen, but that is now panning out. Quess about 0.5% down today. Kalpataru, we talked about projects, but nearly 2,000 crore rupees. That's buzzing this morning as well. Let's pull up that stock once again, please. I want to see Brigade as well. There's Kalpataru about 6% up. I want to see Brigade as well and see what's happening there. A new project in Chennai which has opened up. I find the move in PTC India also interesting. 2 days in a row you've seen PTC India buzzing. What's going on there? We're going to ask Kush that question. I also pull up an Infosys. Infosys, interesting this morning, about 2.5%, 3% up actually on Infi. Okay, now I'm seeing delayed rates perhaps, but Infosys on track, Kalpataru, PTC India, Bajaj Holding, some of those that are buzzing this morning. Are you tracking PTC?
Not very actively, but seems like it's close to the resistance mark of 155, 153. If that is taken out, this up move could well continue.
And what about a Kalpataru? Are you looking at that?
Again, not something that I track on a daily basis, but seems like there is a positive divergence. The last 3 days have had a good volume up move. Yesterday's closing was pinpoint at the 20-day moving average of 917. So any kind of an up move today, which if the pre-opening rates do settle and if it does come about at that level, then yes, this momentum could well continue. Risk-reward ratio at the moment is favorable for a lot of stocks, including Kalpataru.
Would you look, Chakri, at any of the real estate pack at this point, considering that it has seen the most heat over here in the last few days in the meltdown? Is there something that you would look at in this space?
Yes, they've corrected, but I think, still the volumes are volumes as in the unsold volumes still kind of holding, is an indicator that, we're still on the sidelines of until there is an interest rate cut next month. So I think that will help the stock start moving. But until then, I think we'll still stay at the sidelines.
5%, no?
Okay. All right. Adani Ports is a stock that we're talking about as well this morning. Let's see where it's trading in the pre-open early days, early minutes still. But Chakri, I'm not sure what your opinion is. You may not have seen the latest note on Adani Ports from Goldman Sachs, but they're very positive. 24% upside is what they think is in the works from now, and they're positive on volumes going forward as well. Do you find the valuations as they stand right now attractive?
Adani Ports, we've been positive for a long time now. It's a clear market leader, and it has a very strategic interest in terms of India's port and infrastructure development. With various both domestic and international initiatives, the stock is extremely well placed, and it also has the 20-25% revenue growth, 20-25% bottom line growth, which not many companies in India do at this point in the economic cycle, and therefore it's clearly worth buying at current levels.
Well, it's 9:05 and time for the big brokerage call of the day, and that is Ambit Capital's upgrade on Canfin Homes. And Harsh joins in to tell us the rationale that Ambit has. Harsh, possibly, the second upgrade in the last few days?
Well, yes, in the last 2 days, Neeraj, in fact.
Last 2 days, okay.
So yes, so this one in focus, and what Ambit seems to be suggesting here as part of the upgrade, it's a very minor, or rather it's a 10% odd increase in terms of target price. Even the upside is roughly 17 odd percent, but what really stands out is what Ambit is making in terms of a case. They're saying that the underperformance is largely led by a growth concern within Canfin, where Canfin has grown at 23% over the last maybe 8 odd years. They've grown at just 9% in FY24 and 11% in 9 months FY25. So really the concern is growth. Now, couple of drags with regard to growth. One, you have property documentation, digitization drive, which is hitting registrations in Karnataka, which is 34% of their portfolio. There's been a consistent miss on growth over the last couple of years, which is what has led to the kind of derating on the stock, and therefore valuations are looking, quite good in that sense. Relatively going forward, some of these overhangs are going to go away and growth is going to return. And they're therefore penciling in 11% growth in FY26, but a 14% growth in FY27. And the average growth thereafter is going to pick up even better, is what they are saying. And therefore, they are looking at not only growth improvement, but ROEs to hit 17 odd percent over the next 4 to 5 years. Valuations, therefore, they are suggesting are attractive due to this overestimation with regard to growth impact that the market is penciling in. And at 1.2 times book, they are finding this attractive, 710 being the target price, roughly a 17 odd percent upside.
Okay. Canfin Homes is on the radar as well. Chakri, you like the stock?
Home finance companies have underperformed, whether it's PNB Housing or Canfin Homes. They all trade at about 1 time book. And, I think with the new interest rate cycle, which is underway by the RBI, interest rates will probably be 75 basis points lower with the 25 already done. And that reduces the cost of borrowing and therefore improves volumes. And therefore, it's time to start buying into some of the home companies, PNB Housing, Canfin Homes.
Just take a look at what's happening with some of the gold lending companies and those businesses. Manappuram, Muthoot. There's a report in newspapers this morning that the RBI is going to implement processes to tighten gold loan norms. Having said that, we should remember that in September 2024, this was made clear that the RBI has begun warning these companies to tighten norms. But you're seeing a bit of pressure today, at least in the pre-open session. Just because you look at this space, what are you thinking as far as gold loan companies are concerned? Because we spoke to Muthoot recently, Chakri, this question's for you. And they're saying it's just booming. That generally happens when you have a time of a bit of an economic crisis. That's when gold loan companies flourish.
The business is clearly booming with gold prices at an all-time high.
Yeah.
The margin of safety for all the Manapurams of the world in terms of their lending is therefore far higher than it was before. But, the lower end of the consumer is actually kind of still struggling. RBI norms is adding to the provisioning requirements of these banks. With all this, even though business is booming, I think given the RBI uncertainty, we'll stay away from the whole gold loan companies.
Okay, so gold loan companies under a bit of pressure today. Are you seeing any movement there which is interesting, Kush, as far as your gold loan pack is concerned? Any opportunities, I would say? Because the fact is that RBI has been saying for a while that they want to, tighten the processes, etc. They took some action last year as well in a regulatory fashion, but anything that you like over there?
Between the two, Manappuram and Muthoot, I think Manappuram stands out very clearly. Yeah, the kind of move that you've seen, on the way up has been encouraging volume back. Also, it is trading above some of the key averages. So, for me, Manappuram very clearly stands out. On the way up, Muthoot is one stock that might find resistance at the 2200 mark, which is fairly close. Once that is taken on, perhaps even a 2250 mark. So, if I were to pick one, I would go with Manappuram.
Okay. Manappuram between this. Just pull up Nykaa for a second. I want to see what Nykaa has done in the pre-open session. This UBS note on Nykaa was interesting, about 2% up. UBS has upgraded to a buy from neutral, but they've cut their target price to 200 from 205. A fair amount of upside from where they are. They're saying the BPC, that's beauty products and cosmetics segment's performance has continued to surprise positively, growth improving and margins holding up. Just wondering, Chakri, if you look at a Nykaa at all, because when we're talking about platform companies, Nykaa somehow has been left out of that race and that tide completely.
Yes, in this kind of business, it's still the company is trading at, I think, 40, 50 times EV/EBITDA. So the whole growth story that, they have to grow their top line, margins will improve. Right now, they're not. They're actually falling. The stock is corrected, but still, even after the fall, trading at 42 times, 45 times, I think I'll stay away from the stock.
Chakri, I'm just wondering, over the course of course, in the very recent past, you've had a drying up of fresh issues. But then towards the end of last year, there was a flurry of activity in the capital markets, in the primary markets. But now there are a number of stocks that perhaps in retrospect now listed at a premium have now corrected quite sharply. Anything that you thought was too expensive at that point that has now corrected and is now becoming more attractive for you?
The philosophical answer for that is what is expensive is relative. In a bull market, some valuations are fine. So, and that trend we will see, now there'll probably be a slowing down of IPOs of various companies, given that, valuations are significantly corrected. So that is par for the course for the various stocks.
Chakri, sorry, you want to make a point? I'm just saying, I heard the term bull market in Chakri's voice.
But I mean, so
we are intact.
So, but the philosophical answer for anything, Chakri, is that the sun is one, and if it is sunrise here, it is sunset somewhere else. So you can stretch that to answer anything under the sun.
Indeed, it's always sunrise time in India, and we'll buy always.
Okay, which is good to know. Bull market, sunrise in India.
Good.
Post-market open, Chakri, we're going to try and understand where is it that you find favor, because a lot of people are dishing out those notes, right? That ye kharid lo, wo kharid lo, market sasta hai. Let's try and figure that out, if that happens or no. But, now that the pre-open rates have settled, Kush Bora, before we ask you about top trading stock, anything from amongst the top movers list yesterday or today? For example, paint stocks were very active yesterday. Do you like anything?
Among the paint stocks, we did discuss that. Don't run after the Asian Paints and Indigo Paints of the world. This could well be a dead cat bounce that we are seeing after the kind of hammering that these stocks have seen. But the one stock that I like, independent of the sector, is actually Berger Paints. You see the move on this one, year till date, from about 440 to 500 odd levels. So independently also, almost a little agnostic of the sector and what the market is doing, this stock continues to flourish. So this is the one that I have on my radar. I wouldn't be surprised to see it move close to 525, perhaps even 545 levels in the coming weeks and months. Base formation good near the 480 mark, so that acts as your near-term stop loss.
Must say though, it's a quiet start today. Small caps are 0.1%. The best performing stock on the Nifty 500 is Quest Corp, which is just 3.9%, so less than 4%. So no runaway moves that we likely have on open today. Maybe it's a good thing. Maybe the market is giving you a chance to buy before the expiry shift to Monday, by the way, and therefore could be a very interesting one to buy for a Friday. Trying to think, Kush. So now that you know the pre-open rates, what's your top trading call? And do qualify whether it's a day trade or a positional one.
It's a positional trade, and plus it's something that we've discussed yesterday in the closing show as a BTST idea, which is Godrej Agrovet. Good moves over the last 3 to 4 sessions. Today also opening about percent or a little more than that higher. Targets of 800 and 825 intact. 750 is the stop loss. So Godrej Agrovet continues as a buy.
Okay. Godrej Agro on focus. A lot of stocks. I think Quest is going to be something to watch out on opening. Kalpataru, Nykaa, some of these movers. But the big question I would ask is what is going to happen with gold loan financiers. Big story breaking on NDTV Profit in just a few minutes from now. So watch your screens for that as well. BFSI is going to be on the radar as well, and whether gold loan financiers will feel the heat. There are reports today, more details coming up in just a bit. Is it going to be a quiet morning? Possibly on a Friday for the next few weeks, you will see a quiet day. No one would want to take very large positions before a weekend where anything can happen in 48 hours in the world of Trump. So that's how you're starting off. Nifty lower, but not a big plunge in the first tick or so. You're seeing flat to negative mood. The mid-cap 150 also coming off quite quickly, frankly, and small caps also in negative territory. Let me just look at the sectoral heat map for a second, and I know Alex will come back and do that as well, but just the sectoral heat map to see how we're opening up. And Nifty IT is where the pain seems to be this morning. No surprises there with what's happening with bond deals, with what's happening with tariff commentary. You would expect the IT pack to be in a bit of pain following the NASDAQ. The NASDAQ was walloped last night in overnight trade, and that's what you're seeing on the Nifty IT. I'll pull up the heat map very quickly for the Nifty just to see what the picture is looking like there. Yes, we are in negative territory. But Bharat Electronics on top there, remember in our watch list, that was there as well. Adani Ports in our watch list we talked about. But look at the extent of gains, measly to say the least. I mean, the top gainer on the Nifty is less than 1% up in the first tick. On the lower side, this is really about the losers today, unfortunately. Infosys, Tech Mahindra, Wipro, TCS, all of them making it to the bottom line of our heat map this morning. Even BFSI, I mean, you're even seeing banks, and HDFC Bank there seeing a bit of pain. On the winning side, you're seeing some signs of life in an RIL, about 0.5% up, but not really enough to hold this market up this morning. So it's going to be a bit of a pressure there, a tight fight between the bulls and the bears, and I suspect the broader markets might be in for a bit of turbulence, Alex.
Oh, definitely, but 22,500 as things stand held for the benchmark. To a certain extent, the bulls will heave a sigh of relief that there's not as much pressure as they have had to bear in the recent past. So let's talk about individual stocks. You already have a sense of how the market breadth is currently faring. Let's see if that also changes over the course of the rest of the morning. But let's talk about Avenue Supermarts and see whether it's doing anything this morning. Remember, this is a stock that has been beaten down the recent past. New store additions looking positive. Okay, so it's up about 0.5% or so at the start. Kalpataru Projects was a stock that we were talking about. There is a new order win, and a considerable one at that, 2,300 crore or thereabouts, and the stock is up and about as much as 5%. Bharat Electronics, there's an order win here as well, 577 crore rupees, and a lot of these stocks have been reacting in the recent past to order wins. This one significant for the company, gaining about 1.5% or so. Brigade Enterprises from the Realty Pack, which has seen considerably selling in the last few sessions as well. It is up about 2.5% right now, and a 1,700 crore odd project launched in Chennai. Quest Corp, Neeraj spoke about this. This is a demerger that is taking place. The approval has come through. The stock is up as much as 3%, and the nod is positive for them. Canfin Homes, Ambit Capital has upgraded the stock to a buy. 18% upside was what they saw yesterday. The stock is up as much as 2% in trade today. RVNL, this is a stock that has repeatedly come up on the radar over the course of the last few weeks on account of order wins. Another one today to the extent of 150 crore. Remember, this is an LOA, so the order has not come through yet, but it's still a positive. The stock is up about 1.7% or so. DLF finally from the auto pack. Jefferies is positive. It has maintained its buy and it has a target of 1,000. The stock is currently at 673. So a considerable upside for the stock. The Dahlia project is what Jefferies likes currently.
Okay, just 2 or 3 names before we get to our guests. Interestingly, while Kalpataru Projects is doing well and Khadim is probably doing well for itself, I think the standout stock of the morning has to be PI Industries. PI Industries is down 5%, now 4.2%. Now I wonder if this is because of some weak export data or otherwise don't quite have the reason here, but this is certainly reacting very, very sharply. So quick opening thoughts, Kush Bora. On a day when the small caps are yet again outperforming and are up 0.64% higher, anything that stands out for you? And a word on PI Industries downtick.
Well, first up, very interesting moves by the market, right? I mean, 60, 70 points down, on open, but we've recovered that lost ground. So this is still that strength that we spoke of continuing. That is heartening to see. Now, upper layer targets of 22,700, 22,800 still intact. Not a bad idea to consider some long trades. Being Friday, there could be some volatility, but other than that, I think we're on track. As far as PI Industries goes, irrespective of what the news must be, the falling channel resistance is acting up. The 20-day moving average resistance is acting up. So I would still wait and watch and see if the near-term lows made around the 29.75 levels are being held. If those are broken, then the stock could continue the the downtrend that began somewhere early November last year. So that's the word on PI Industries. One update on a stock that we've discussed. Hubak Culrans, we discussed this about 2 or 3 sessions ago for targets of about 585, 600 odd. Very good moves over the last couple of days. Steady ones, not a tear or a runaway kind of a move, but a good steady move. So the call still intact for targets of 585 and 600. Stop loss 555, but maybe you could just pump it up to 560 if you're initiating a fresh position today.
Okay, the other set of stocks under the radar are definitely gold loan lenders, and here's an NDTV Profit exclusive. They are on the RBI scanner. The RBI has asked internal auditors to attest if banks and NBFCs are in compliance with the 30th September gold loan circular. Now, like we told you earlier, that there was a circular in September last year, September 2024, that says that banks and NBFCs have to tighten norms on gold loans. Now, there seems to be another query on this. Vishwanath Nair joining in with those exclusive details. Is that what's happening right now, Vishwanath, that the RBI, perhaps with the new governor, has decided to re-look at whether what they have asked for last year is actually being followed?
Right. Good morning, Tamanna. So what the RBI seems to be asking these banks and NBFCs and the internal auditors at these banks and NBFCs is to submit a verification report. So these banks and NBFCs were supposed to submit a compliance report on the 31st of December on the basis of the 30th September circular. And then now the internal auditors have to verify whether that compliance report is accurate and accurately describes all the compliance that is happening in the banks. Now, this is an important move simply because the next step after this is for the RBI supervisory teams to then take action against any non-compliant banks or NBFCs, which may then result in supervisory penalties or business restrictions, stuff that the RBI has been doing in the past. Now, one of the lenders, IIFL Gold Loan, has already been through a process of restrictions from the Reserve Bank of India. What we need to watch out for is whether the industry has learned its lesson and has fixed everything and to the RBI's comfort, or if the RBI finds flaws with the way the banks and NBFCs have acted. It's also important to notice about Sanjay Malhotra, because this is obviously going to be one of the first few actions that he would have led since his RBI governor position. What I would personally look forward to is to see how tough the RBI goes after the compliance report is verified.
Okay. That is the key question, and the timing of it is also important, because like we were speaking about it a little earlier, Vishy, that right now business is booming, gold prices are at a high. This is the time when people come and look at whether they should see some liquidity with those assets that everyone has. Mild downtake on the stocks as of now. Nothing major happening there as far as gold loans are concerned. But if you look at how the markets are reacting, I think PI Industries, like Neeraj mentioned, is one big mover there. I'm really wondering about the sharpness of moves on IT stocks. I mean, yes, the Nasdaq did have a tough time overnight. Those cues coming in, cues from the US coming in. But having said that, Chakri, is IT something that you would look at as a rebound candidate? That if you're looking to place positions for stocks that would rebound, would IT companies figure in this list at all? And if yes, which ones?
Yes, indeed. I think IT as a sector will do well, and within that, HCLT, Infosys, and the large cap, they'll all do well. Simply because all the various perceived threats of tariffs and AI will actually add to the benefit of Indian IT companies' service offerings. Discretionary spendings will come back, are coming back in the US. Valuations for all the IT companies, whether it's HCLT or Infosys, is fairly reasonable. So I think clearly, yes, we would buy IT companies.
Chakri, sorry, just a follow-up on that piece as well. On some of the gold loan companies too, like there's a lot of talk, market chatter about a deal in the offing. I would love to know, and we spoke to Muthoot Finance a few days back, very constructive on business outlook ahead was George Alexander Muthoot. And now my question is, are you a buyer into Manappuram Muthoot or whatever else in that space? Very few, of course. Or does the RBI potential actions around NBFCs worry you?
If you look at gold loan companies, one thing as clearly as we discussed, gold prices are at a high, and therefore lending is far more secure than it was before. And provisions for the pure gold loan companies are actually far better. And in the case of the banks who got into this business much later, I think that's where the major thrust of the RBI is on the banks and the NBFCs, rather than NBFCs to do a host of bunch of lending, gold included, versus the Muthoots of the world and the Manappurams, which do largely only gold lending. So those companies, Manappuram and Muthoot, is better placed in this whole gold chain.
Okay. In a bit, of course, we'll try and get in some details about why PI Industries is looking slightly wobbly. So bear that in mind as well. Chakri, you may not name stocks necessarily, but what is it that you like? I mean, like we said, right, a lot of brokerages are putting out their notes and saying that post the corrective move, there are some stocks which are very good and looking very attractive from a long-term perspective. Anything that fits your criteria?
Clearly, lots of stocks have corrected. Financials have corrected a lot. Many, including State Bank of India, trades under book. Power Finance, REC also trade under a book. And, I think all these companies, with all the kinds of concerns of slowing loan growth, etc., they'll all be a good 40-50% higher a year from now.
40-50% higher a year from now. That really caught my attention. Chakri, do you have a longer list of stocks which will be 40-50% higher a year from now? I think everyone wants to know.
I think this is a good start. These companies have infrastructure lending. They've corrected fairly sharply. They trade at about one-time book. Their NPAs are very much under control, are under 1%. So given all this, they can trade back at their previous multiples, even if they go back 1.2, 1.3 times. The stocks, will get that 40-50%.
Okay. Are you interested at all, Kush, in any of these gold loan companies? Are you finding them exciting on the charts at all?
Not really. As I said, between the two, I like Manappuram a little more. But the reason not so because, one, they've not fallen, which is a good thing. But, the momentum is missing. And the momentum indicators are actually suggesting either a negative trend or maybe a flattening out. Now, while the markets have corrected so much, and, if you want to deploy capital afresh, there are a few other pockets, stocks that we keep discussing practically every day. These stocks seem to be missing that kind of momentum, even on a rebound trade. So for now, they are on a wait and watch list. Nothing too exciting on either of the names, but between the two, Manappuram, as I said, stands out slightly, slightly higher over Muthoot.
Okay. Your top pick, Kush, now that, we have about 15 minutes of trade, would you look at Quess at all?
So I will still go with the PG Electroplast call that I gave in the morning. That's still doing well, holding up steady. As far as Quest goes, I will not be surprised to see some profit booking coming in because the stock is very close to the 200-day moving average, and it's already given a good spike over the last 4 sessions from 570 odd levels all the way up until 670. So already a good run on the stock. Some profit booking is par for the course. If you want to hold it for the momentum that's building up, then at least book 50% at these levels.
Okay. HPCL, BPCL, IOC, let's pull these three up. They were up and about yesterday and are down about 1% or so as things stand right now. Reliance Industries still holding out up as much as 0.7%. Chakri, some of these oil sensitives have been very active in the recent past. With crude at $70 or thereabouts, things look good. And we've spoken about how the GRMs or the gross refining margins for these oil marketing companies may have bottomed out. Would you be a buyer in these stocks, and which would you prefer?
You know, Reliance is a clear buy amongst all these various companies because in addition to refining, they do a host of other various businesses. But so Reliance, yes, it's a buy, but the HPBPCLs, you know, those companies they have, whenever crude rises up and down like the way it does, they either have inventory losses or inventory gains, and we're not sure whether they can pass on those, you know, whether there'll be price cuts in oil, in petrol or oil or aviation fuel. So I would stay away from the pure refiners like HP, BP, and CL.
One of the other packs, of course, that reacted because of the fact that it is an input is the paint companies, but there are a couple of narratives or conversations about two groups of stocks. One is the paint companies because of entry of a smaller player and competition, and the other, of course, that we've spoken about in the recent past is wires and cables. Chakri, we haven't spoken about the latter with you, but incidentally the same issue. You have a player that is entering the space with deep pockets and with the idea of capturing market share. How would you play these two?
You know, clearly, you raise a good point. When a civil contractor or a plumber walks into any of these shops or distributors, they buy cement, cable, and paint from the same person or the same channel. And you know, Ultratech has more than 3,000 distributors all across the country. It's using that to launch a new product, which is the wires and cables. Now, as far as the paint industry concerned, again, it's a very similar story, similar characteristics for the cable companies. So clearly, the existing players, the Asian paints of the world, will clearly get hurt. Their volumes, their prices, their margins, and therefore lower multiples. So if anything, you can buy some of the newer entrants of the paint companies because for them, everything is to gain. They're gaining on volumes. You can buy an Indigo paint, but not the Asian paints. And you could buy an Ultratech because I think they'll again gain market share in all these businesses.
So let's talk about PI Industries. The stock is taking a bit of a battering at the start today, and there are details that are emerging. And Somit joining in to talk about some of this. Export data is flagging a steeper price correction in pyraxsulfone, which is set to drop 10%. Somit, you probably have better luck than me pronouncing that.
Well, as PI Industries remains in focus, a couple of sales notes are indicating that the export data is flagging off steeper price correction in one of the key products of PI Industries, that is pyraxosulfone. The prices have come down by nearly 10% on a month-on-month basis. Earlier it was around $86, which has now come down to $75. And the note also says that the Feb data is confirming the first meaningful pricing pressure that we are seeing in this key product in the last 1.5 years. Now, why is this pricing pressure emerging for this product? Because the patent has gone for expiry in the US, which means that now it is exposed to generic competition. Apart from that, before this expiry, a lot of players had stocked up their inventory, which means that fresh orders would be delayed for this product. And apart from this, they're also expecting further price erosion to happen for this product going forward. Now, because of this drop in prices, or this potential drop in prices which would come in going forward, also the analysts are believing that there could be a reset in the EPS or the earnings estimate for PI Industries, given the fact that it is one of the key products and contributes nearly 60 to 65% 25% of the CSM volumes for PI Industries. There could be an EPS downgrade that could come in for PI Industries going forward also. Apart from that, Kumai, which is one of the key clients or key customers for PI Industries, will be reporting its Q1 numbers, and commentary coming in from Kumai will be important to watch, because that is one company which sources most of this product from PI Industries. So keep an eye out for PI Industries in trade. Kumai, which is one of the key clients of the company, will be reporting its numbers, and export data is indicating pricing pressure for one of its key products, that is pyroxalphone.
All right. Thank you for that, Samit. PI Industries under pressure this morning, of course, and we'll keep tracking that company as well. Let's turn to our corporate conversations. And, International Women's Day is on the 8th of March. That is tomorrow. We're celebrating it today on NDTV Profit and featuring and highlighting some great conversations. I think breaking the glass ceiling is now passé. It's last decade's story. We're now talking about going beyond the glass ceiling. And our first conversation is with Pavitra Shankar, MD of Brigade Enterprises, speaking with us today, not just on Women's Day, but on the business as well. So, Pavitra, thank you so much for joining us. And let me start by wishing you a very happy International Women's Day.
Thank you, and the same to you.
Thank you. Thank you so much. All right. We're speaking today because of a new launch that you have in Chennai, the Brigade Altius. Let's begin by talking about how important a piece this is in the overall picture for your company.
Yes, we just launched Brigade Altius on OMR Road in Chennai. That is the old Mahabalipuram road for many people who get that confused, the OMR in Bangalore. This is part of our larger strategy to expand our footprint in Chennai. It is our our fourth residential project that we've launched in Chennai, coming on the heels of Brigade Icon on Mount Road. So this particular project is again targeted at the upper mid segment. We hope to, it's about 1.4 million square feet, potentially about 1,700 crores in gross development value, and it's about 660 units. So with this project, I think we are certainly cementing our plans to become one of the largest brands in Chennai. And that's kind of what has been supported in our business development over the last couple of years as well. So in addition to our hospitality and office portfolio in Chennai, the residential portfolio is also expanding dramatically in Chennai.
Okay. How big a piece of the pie is Chennai right now, Pavitra?
So in terms of launches, it is going to be about 20 to 30% of our upcoming launches in the next 4 quarters. And in terms of our land bank, it's around almost 30% of our land bank as well.
Okay. Pavitra, at the onset, wishing you a happy Women's Day, and may you shine brighter and brighter. I'm trying to recollect, when was the last time I heard you use the term dramatically when it comes to expanding growth?
Well, I think we've all been doing that over the last couple of years in terms of trying to add as much as we can to the land bank. As you know, especially on the residential side, things have been really positive in terms of increasing pricing, in terms of demand, and just overall absorption by customers. So naturally, the need to sort of keep refilling our land bank has been there over the last few years, as these have been sort of the best conditions one has seen on the residential side in the past decade at least. From that side, we have been dramatically, growing our land bank over the last, couple of years, and are also very positive, not just about residential, but also office space uptake, not just in Bangalore and Hyderabad, but also in Chennai. So because of that, we are across the board positive about what Chennai means for us, since we are focusing on South Indian markets, and even in hospitality as well, things are strong. So from that sense, everything is very positive on the real estate sector today.
Okay. Now, Pavitra, maybe I should have asked this. Maybe I should ask this question right at the end, but I'm doing this now nevertheless. As you look out at Brigade 5 years out, right? All three verticals growing in a quote-unquote dramatic fashion. Do you reckon it could become a sum of parts story wherein the verticals themselves might be large enough to have a separate listing of sorts, value unlocking that could happen? Do you see that size coming in for you, maybe some of the other realty players? Is that where the sector is going towards?
See, as a company, we truly believe in the mixed-use development story. We think this is core to what Brigade is, to develop across multiple different domains and segments, whether it is residential, office, retail, and hospitality. As we speak, we've also filed our DRHP for the hospitality portfolio to list. So certainly those things are on our minds. As you also, sort of indicated, it requires the portfolios to reach a certain level of scale and size before we can do that. So we feel that has happened on the hospitality side, and that's why we are, looking into that as of now. As our office portfolio also increases, that is certainly something we would want to keep our eye out on. Today, the portfolio is just under 9 million square feet of operating, space, and we continue to keep adding to that. So over the years, over the next 5 years, we are very positive that all lines of business will grow, and we will keep evaluating what is the right thing to do in terms of how to fund their future growth as well.
Pavitra, sorry, just a follow-up. I mean, is that, I'm not saying you will necessarily do it, but is that something that a promoter like you thinks of, that the portfolios could be large enough at that point of time for them to be independent businesses listed or otherwise? Whether you do it or no is a separate thing.
Yeah, I would see as a developer, I think our core focus really is on finding the best quality lands and what is the best project you can do. But naturally, being a listed enterprise, we need to see what drives the maximum value for all of our shareholders and stakeholders at large. So for sure, we are having to think about that. Whether, as you said, whether we do it or not will depend on a number of conditions. But by nature of running the business, it is something we think about.
Pavitra, I just want to pick up the thread on regional market share, and this is why I was asking about Chennai, because I'll tell you what I'm trying to understand. I'm trying to understand that in your core market, in Karnataka, what has been the update on the approval space? That has been a bit of an issue where approvals have been lagging from the government side on new projects. Is that now being sorted? What are you seeing in that direction?
Slowly getting sorted out. We've been receiving a couple of our plan sanctions and RERA approvals in Bangalore as well. So it is something that just seems to be taking a little more time than it used to. Some of those things are sorting out. The e-Khata and the registration changes are also impacting the way in which approvals get done. So for sure, there is a lot more uncertainty in terms of approvals in Bangalore, but I think all of us developers are figuring that out as it is core to us getting our launches and getting our business done. I would have loved to launch these same projects, 6 months ago or so, but, we've had to just try and see what we can do on the approval side and, wait for them to come in good time. And hopefully this can help us within the last 3 or 4 weeks of the quarter as well.
Okay, the last 3 or 4 weeks of this quarter, that becomes interesting because for FY25, your project outlook, your guidance in terms of GDV, gross development value, is about 10 to 11,000 crores. Do you see yourself hitting that?
In terms of the launches, we had originally indicated we do about 12 million square feet of launches. We may just about hit that number or come away a couple of million square feet short. But I'm still pretty happy in terms of what all we've been able to launch so far this year. And knowing that there are certain approvals just coming in right now, we'll be able to hit the launch per se. But in terms of the time we had to make the numbers, that's been dramatically reduced. Here's another use of the word dramatically, but that's kind of where we stand. We may get the launches in, and I think that's what we all need to understand about the real estate sector and industry. It is by nature a lumpy business. So even though we are forced to look at it on a fiscal quarter or fiscal year basis and do these comparisons year on year, I think what we all need to keep in mind is that the market is still strong. Companies are still launching. We are still acquiring land. The demand on ground is still good. It is just a question of which quarter is that coming into, but that isn't really changing the picture on ground.
So let me take that question to your pre-sales value guidance as well. You've done about 67.5 in the 9 months thus far. Is that on track, or is that going to be impacted by the lumpiness of the business as you have described? What is Q4 looking like so far?
Yeah, so, I would have liked to do a much larger number this year, but as I mentioned, the delay in the launches, while they're still coming in, it means that we have, 3 to 6 months less time of this financial year to have sold and incorporate those numbers into this financial year. So, what we would have liked to achieve at the beginning of the year may not be the case, but I still think it's very strong in terms of the demand on picture. And since we are not really in the habit of giving guidance, I can't really give you a number there.
That's all right. That's all right. I'm just trying to get a sense whether there is a supply choke or, are you seeing any drop off on demand? On the demand side, since you mentioned it, Pavitra, and, we're trying to understand consumer habits across product categories right now as we speak to people from different companies. Just what is the sense that you are getting? Is that kind of demand coming in and staying steady?
Yes, the demand is very strong, especially from the end user segment. And that's one great positive about our markets of Bangalore, Chennai, and Hyderabad. Predominantly is end user driven. Hyderabad seems to have a little bit more of an investor mindset. But traditionally, all three are very strong end user markets. And that's why it is still very positive when projects launch. You can understand the customer behavior by the way in which they are trying to, select their units or which kind of views that they get, and you would only see that from end users. So we are very positive that the underlying situation is still very good. Some of the frenzy, I would say, of buying as the prices were running up from 2022 to 24, I don't see that as much, because I think most of our launches come in at a price that is reflecting what the appetite is today, rather than having it be more of a price discovery kind of situation, which was the case a couple of years ago. But right now, I think we all understand what pricing really works for the consumer, and we launch at those prices. So we're not really going to see, a sharp increase in pricing going forward, in my opinion. In our own portfolio, we have seen that increase in pricing, but that's also due to a mix of the kind of projects that we've been launching. We are doing more upper segment and more premium projects. So therefore, the overall price per square foot and APR is increasing when you compare it year over year.
Okay. So that is the quality of projects that are taking place. Thank you so much, Pavitra, for your time. Very best of luck to you, and wish you a happy Women's Day once again.
Thank you so much.
Yeah. Some interesting conversations this morning that we're having. We just spoke with Pavitra Shankar of Brigade. The next conversation is one that I truly enjoyed. There's a growing interest in India's EV story, something that has seen even more interest with Tesla's entry into the country. I caught up with Kinetic Green's Sulajja Firodia Motwani. She's a third-generation entrepreneur, of course, and talks about Kinetic's foray into green mobility at a time when the space is really heating up. Listen in. Right now, as a third-generation entrepreneur, I'm keen to know what you think are the big challenges for you, because it's Kinetic Green is in a very interesting space. It's futuristic. It's also very quickly becoming a crowded space. Everyone wants to be in this space. It's an opportunity that has been recognized by more than one large player. How are you navigating that landscape right now? Tell us about what the biggest push is currently.
So as you rightly said, we've been one of the pioneering companies in this space. We started our EV journey when it was not fashionable to be an EV company. Today, of course, as you said, everybody is jumped onto the bandwagon. But there were more non-believers than believers when Kinetic Green began its journey. So we feel very proud that we've been able to contribute to this sector in creating that conviction in the minds of people and the society and the other stakeholders, in working closely with the government on the policy framework, in investing in Make in India for EVs much before, it became something which was adopted by everybody. So very happy to have had that opportunity to be doing something innovative, trailblazing, pioneering. And I feel that now as the sector is growing, I feel it's a great time for players like us. Because now, we see that there is going to be a large scale. The automobile market in India is very large. As you know, we are the world's second largest two-wheeler market. We are the world's largest three-wheeler market. And these are going electric rapidly. So you don't have to create a new market. There is a disruption that's happening. It's like it took India 75 years for everyone to have landlines. Remember how we used to wait for STD calls and there were phone booths. And then within 5 years, everybody had a mobile. So all the people using landlines or telephones chose the new technology. And I think something similar is now happening, that there is a large automobile market. We're the world's third largest overall automobile market. And we're a large economy. And now people are choosing the new technology, and especially in the spaces we are in, which is two-wheelers and three-wheelers. It's rapidly going electric. So I think it's now a large, eminently scalable opportunity. So that's one thing I feel that, the time has come to really gain the momentum for everybody, including, of course, Kinetic Green. And we are very well positioned compared to most others. We've been there for last many years. We have the products, the engineering, the technology, of course, the brand, the distribution network, the manufacturing capacity. And we've also gone through the learnings. Every new technology has its own nuances, its own specific I would say ways to deploy, the ways to use, and we have gone through that learning cycle. So we feel very well equipped to ride the wave, the positive momentum. And I think in a lot of unique ways, we are very unique. In a lot of ways, we are a very pedigreed automotive player. Kinetic has a great legacy in automobile business. I ran the ICE business also for the group for many years. We have a wonderful brand. On the other hand, we are a pure play passionate EV company.
Yeah.
That we have the focus, we don't have to think about, what is our bread and butter. It's EV, it's purely EV. So we are extremely.
So do you think that's an advantage or a disadvantage? And the reason I ask is, and you're right, you have the pedigree, you've been in this as a starter, but when that disruptive wave comes in, it's not very clear who's going to be standing in the first, second, third position once it settles. It's still in that phase of adoption in the EV space. And we see a fight every month on market share, for example, when we look at the Vahan data. All kinds of claims. How are you navigating that?
So I think there is a large opportunity ahead, and it's still very early days. I think the market is changing rapidly. I mean, the players who were there 3 to 4 years ago, many of them came as assemblers. People started mushrooming in small formats, and they thought that they could import, kits and sell EVs. That has all changed now. I think now EV is going mainstream. Technology has evolved, regulation has come. Customers are looking for well-performing EVs with good service, quality, spare part, warranty, all of the support. So we are kind of getting into the belly of the market now. It's no longer just on the fringe, a niche segment. And I think that's where we are very well positioned as a pedigreed player, as having the right experience to give the best products, the best technology, the best quality, best service. We therefore players as long-term, support. They have the reliability in the brand. But on the other hand, as you rightly were saying, if we were just a division of an ICE company, then the amount of focus and the amount of passion that's required to build this business would probably be diluted. My R&D chief, for example, comes from a very large, ex-large ICE group. And he told me that, when we used to have presentations, all the other products would get reviewed and EV would come at the end. But it's a very small part of the business. And people would say, oh, Baba, very good, and you're doing a great job, see you next time. Whereas in Kinetic Green, we are breathing EV, we are loving it, we are living it, we are passionate about it. And I think that's where we have best of both worlds.
Yeah.
To be a degree player who knows what they're doing, who are here for the long term, and at the same time being a passionate, pure play EV lover. I think that's what makes our business model and our company very potent and very exciting.
Yeah, so you've obviously not taken any of your competitors' names, but allow me to contextualize, because you've spoken about companies which may have attracted customer attention, but then question about after sales, servicing, that pedigree come in. Then you've talked about companies where electric vehicles are a division of a larger player. So if I look at some competitors out there, whether it's an Ola, a Bajaj, or TVS also, how do you see these giants on the scale? Because now, forget about division, everyone is coming into the space. Everyone's understanding that this is the future, this is the space to go.
Yeah. So I think it's good that people are coming into EV, because that means that the customers will get confidence that now you have EVs in the mainstream, that I can have multiple EV options. I know that service will be there. I think it's a long-term technology. And that's where we will go from 7-8% EV to 30-40% EV. When they see that good companies are in the market, it's no longer just, small assemblers, unknown names. So I think it's very good for the space that serious competition, serious players, pedigreed players like us and some of the other names you took are in the market. I think it's very good for EV sector. And so I see that, there is going to be a large opportunity and a place for everybody. As you know, automobile is not a one player takes all game. If you look at even petrol or diesel or ICE, there are multiple players in multiple segments. Somebody is very strong in SUVs, not so strong in passenger vehicles. Somebody is strong in small cars, not so strong in premium cars. So if you look at two-wheelers, someone's dominating premium motorcycles but doesn't have a big share in entry motorcycles. Somebody's good in scooters. So different players will identify their segments, specialize in the technology, specialize in their product segment, and have a space in the market. It's not a one player takes all. Positioning, segmentation, technology, leadership. I think it will all evolve. And my dream is that 5 years from now, in 2030, we should see more than 50% two-wheelers electric and more than 75% three-wheelers as electric. And that's when we would have reduced the pollution, we would have reduced transport costs for our people, we have created millions of green livelihoods, and truly India can become not just a consumer, but also producer of EVs for the world. I think that's where really we should be headed.
So what is the USP of what you are bringing to the table, if I may ask? Because it's an interesting space. Forget the fact that it's very male dominated, which is also, I find this conversation so interesting. The auto sector overall at the leadership position is very male dominated, and it's fueled a lot of the conversation, commentary is fueled with that kind of energy. So how do you deal with that? And when you see this landscape evolving, what is the USP that your product is bringing to the table? I know e-Luna has made a comeback, and it's an interesting take on a very well-known brand in a new avatar. Is that going to be the winning point?
Okay, so you've asked multiple questions in one question, but let me tell you that our vision, our dream is that we want to bring green mobility to the masses and not just the classes. I think that in India, there is a very large market. Not just at the tip of the pyramid, the software professionals or the college students, but there is a huge market in the middle class, lower middle class, in the tier 2, tier 3 towns. Today, we know that India has Har Ghar Bijli. That means electricity is available everywhere. A fuel pump may not be available in a village, but electricity is. And as we know that EV brings huge savings to the customer, almost 100% fuel cost is gone and hardly a very small fraction of it is the charging cost. So I think that EVs can also bring great affordable transportation to our society. People who could not earlier afford, a vehicle, apna gadi, electric will enable that again. And again, that's where the e-Luna comes in. Today, if you have to buy any petrol, scooter or motorcycle, it costs you about 3,000 rupees EMI per month and 3,000 to 4,000 rupees in fuel cost.
Yeah.
The total cost of owning your own apna gadi is 7,000 rupees a month. Now, a large part of India, more than half Indians, earn between 15 to 25,000 rupees a month. They can't afford to spend 7,000 rupees for transport. They have to pay for the necessities, a roti, kapda, makan, children's school fees. So they are going today also by bus, by cycle, by shared auto. And if you look at a product like e-Luna, the EMI for e-Luna is just 2,000 rupees a month, and the petrol cost is zero. So less than 2,500 a month, which is what somebody would spend on bus or shared auto, we can give them their own apna gadi. So I think that's the power of electric. And I think my dream is that every home in India should have an electric vehicle, and we would like to democratize e-mobility. And we are working therefore on engineering very strong advanced EV platforms, both in 2 and 3 wheelers, which are well engineered for the long, positioned in terms of the value, so that the customers feel confident to own an EV, and they're able to really realize the benefits in terms of the savings as well. And the fact that Kinetic is a very respected and reliable brand, they know that, okay, this company will be there with me in this journey. So I think our dream is to be in every home and to democratize e-mobility. And that's where we are focusing, not just at the top in the 20 cities, but, in BNC towns. Today, we have 700 dealers, out of which 70% dealers are in tier 2, tier 3 towns. So that's really what we're doing differently compared to a startup who's bringing an exciting electric scooter or motorcycle, but for 2 lakh rupees. Now, that's lovely to showcase as a pilot. But if you want to sell vehicles in millions, then you have to be able to offer good value and long-term durability and affordability to the masses.
Wanted to know if you have any views on the impact Tesla will make once it's in India, and also the conversation right now on India reducing its tariff structure on imported vehicles and components, etc., because that is an immediate threat to domestic players, isn't it?
So here also, I believe that, having Tesla come to India possibly is more of a prestige, story, because they've been a pioneer in the electric car space. But I do believe that there is a market for every kind of product and every kind of car, right? If you see even today, you have the domestic players like, Mahindra, Tata, and then you have the mass market players like Maruti and Hyundai and, others also taking a large part of the market, while you have the premium car players as well. So I think even if Tesla came to India, they're not going to be the only player. I think the market will be segmented. There will be other companies developing products for different segments at different price points. So I think if Tesla comes, it's a great thing. It will only create more excitement about electric vehicles. But finally, I think, it's a large market and different players will have their own strategies and everybody will be able to find their own focus area.
And in terms of if there's a lowering of tariffs, impact on domestic industry, including players like yourself?
Also, the tariff, the new scheme that has been brought by the government is specifically for four-wheelers.
Yeah.
There is a very strong PMP guideline-based manufacturing program in place for other segments, two-wheeler, three-wheeler cars, and there is a stable duty structure. So that I don't think is a threat, or there's been no change there. And we would in fact like to see more and more support to Make in India, so that, the local component companies actually come forward and make investments. And then, as I said before, we'll become a producer and not just consumer of, EVs. But coming to the car segment, I think even the new policy, actually, there is a reduction of tariffs upfront, but it does necessitate the new players to invest in the capacity locally. They are supposed to bring in whatever benefit they have got, they're supposed to bring that back in form of investment, creating jobs, bringing new technology. So in the end, it will become a win-win, for the country.
Okay, you can watch that full episode on today's episode of The Disruptors, that full conversation on today's episode of The Disruptors at 6 p.m. this evening. We'll take a very short break, but on the other side, we speak with Pranjal Bhandari, Chief India and Indonesia Economist at HSBC, keen to hear her views on what is happening and with the tariffs and what will be the impact. Stay tuned for all that and more.
Very warm welcome to you all for this NDTV Profit conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various firms.
Actually, instead of Viksit Bharat, we should call it Reviksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know.
Back with India Market Open right here on NDTV Profit. On the eve of the Women's Day and our attempt to contribute to women breaking the glass ceiling, some of them already are doing that in a kick-ass fashion. It's an absolute delight to talk to Pranjul Bhandari of HSBC. And amongst other things that we'll discuss with her, her note has some very interesting thoughts around how can India escape the lower growth and ascend to higher growth, especially in light of the fact that there is a tariff-driven period that is upon all of us, which might impact near-term growth prospects, if you will. Pranjul, great having you. Thank you so much for taking the time out, and in advance, a happy Women's Day to you.
Lovely to be here. Thank you for inviting me.
The pleasure is entirely ours. Pranjul, just before we get to some of the things that you've written on the note as well, any thoughts that you have which you can share around this whole negotiations and renegotiations and tariffs and rollbacks and what impact it has and potentially could have on global growth and India growth?
Yeah, absolutely. Look, it's a period of heightened uncertainty, right? Every asset class is reacting. Every day you wake up in the morning and you just don't know what you're going to see in your screens. And I think this is something that's going to continue. What happens when there's so much of uncertainty? Generally, more long-term growth drivers like investments take a backseat. In periods like this, we see the FDI pot shrink. After all, which company would want to put in more capacity when you don't know where things will land once the dust settles, right? So generally, this is a period of low investment, which sort of hurts your potential growth. And generally, because there's so much more protectionism in the system, it could also be a period of lesser trade flows. So for both these reasons, lower investment, lesser trade flows around the world, we could see global growth actually come off. And every country will get impacted, some directly, some indirectly, and India will as well.
Pranjul, hi, great to speak with you as always. And I was just going through your note, and what I found interesting is when you talk about the Indian perspective and these US tariffs being a catalyst for India. Break that down, because when I hear Donald Trump speaking at pretty much every speech, every conference, he's talking about India in the context of tariffs. But when you look at the data, there's not that much high value, high tariff trade between the two nations, isn't it?
Yeah, look, you're right. Let's put it this way, that India has one of the highest tariff differentials with the US. India generally is a very high import tariff economy, and it has been for the last decade. It's almost like we didn't notice it, but now that President Trump is talking about it, everybody's really sitting up to it right now. The truth is we've had this for the last decade. I don't want to underestimate the pain if new tariffs are imposed on India. Like, for example, if we see reciprocal tariffs imposed by the US on India, my back of the envelope calculation suggests that several sectors will get impacted, and overall GDP growth in India could fall by about 0.3 percentage points. That's not an insignificant number. So there's definitely short-term pain out there. But, I wanted to take a look wider than just a short-term pain. I wanted to see if this is a situation which we can change into our sort of benefit over time. What we know about India in the past is it reforms best in periods of crisis. So can we actually do some reforms which we've not been able to do? And in order to do this, what I do is I look back in history and I look at various episodes. What has made India grow fast and what has hurt India's growth? And interestingly, I find two important sort of periods. One is 2000 to 2010. The other is 2010 to 2020. The former period, India was growing at a very fast clip. Exports growth were at the head of growth. It was growing 13% year on year in real terms. Whereas in the second period, GDP growth actually fell and exports growth actually fell from 13% to 3% year on year. Now, one big difference between these two decades is in the first decade, import tariffs were coming down. So India was not really taxing all the imports it was doing. Whereas in the second decade, India was actually raising import tariffs. So my sense is that raising import tariffs over the last decade has cost India exports and GDP growth. Now, when I sort of look at this, and I like to really compare this India's trajectory to China, and I find something rather interesting, which is that for China to be an exporting powerhouse, it was also importing a lot, particularly in the first 2 decades. So it was importing, adding value to it, and then exporting it. Over time, its requirement to import came off because, it became more self-sufficient in making its inputs on its own. But for the longest time, it was importing in order to export. India clamped down on this very quickly. We made importing very expensive by putting all kinds of import tariffs. And as a result, our exports also slowed in this 2010 to 2020 period. So one big lesson for me is that India really needs to cut down on import tariffs. And I think this whole threats of tariffs around the world, that if you don't cut your tariffs, we will impose more on you, is becoming a catalyst for reforms. We are for the first time actually cutting down on tariffs. And I think this will be a great step for us in the long term if we continue to do it.
So just a couple of follow-ups, Pranjal, and I want to start with the short term first. And it's interesting that you've taken a wider view and the virtuous cycle that it may kickstart if we are forced to cut tariffs and forced to make imports cheaper. But I want to understand about the short-term pain. You mentioned that there are sectors which would be hit. You're penciling in an at least 0.3% impact on the GDP if reciprocal tariffs come in. What are the key sectors, first of all, which will be impacted?
Okay, look, the truth is we don't know. There is a negotiation going on between India and the US. We don't know that if, firstly, what form this whole reciprocal tariffs will take, whether it will be the same sectors in which India imposes tariffs that US will impose tariffs on India, or will it be different sectors? So the truth is we really don't know. But if you look at the sectors where India has the highest import tariffs compared to the US, and which might be an eyesore for the US, I think the ones that really stand out are agriculture, automobiles, pharmaceuticals, gems and jewelry. These are some of the sectors that sort of top the list. And, we could see some reciprocal action, at least in those sectors. But the truth is we don't know. And that's why rather than speaking at a sector level, until the details come, I'm looking at a more broad macroeconomic level. And that is sort of clearer to say that, the growth impact could be about 0.3 percentage points.
Okay, fair enough. Just on the point of tariffs and the change in tariffs may be becoming a positive catalyst, are we taking into account the core fundamental reason why tariffs have been high and increasing in India? It's coming from a policy position of encouraging domestic sector, encouraging make in India, and yes, there might be some negotiation and tweaks because of Trump's imposition, but fundamentally there seems to be no reason why we should change and go into a lower tariff regime.
Well, look, the truth is imposing tariffs is a very, very slippery slope. Every time we say that we are going to only impose it in a few industries, which we want to encourage domestically, we start with those few industries, but then we keep imposing them on more and more industries until a point that our entire cost of production becomes very high. And I think this is a problem we faced in the 70s and 80s. And again, this became a problem which we faced in the last 10 years. We started with the best of intentions, but then it became a slippery slope and we just started imposing tariffs tariffs on many sectors, quite a lot. And that really generally bought up the cost of production in India. So I think the way to address this is you should really earmark one or two strategic or sensitive sectors where you want industrial capacity to grow domestically, maybe have some import tariffs for that to encourage domestic manufacturing, but just keep it to that, contain it to that. And for everything else, bring down your import tariffs. I think that's how we should proceed, which is something we were not able to do as well in the last couple of years.
Pranjul, lest this become a bit of a tariff conversation, but because it's such an important point, I'm going to ignore some of the other things in the note and ask you a follow-up on this before we wrap up the conversation, so excuse us for that. But the flip side to this point that you're making, or rather the positive side, and kind of corroborating that, one of the thought processes is also this, that innovation will only stem when sectors have their back to the door, and when competing with really world-class products that are hitherto haven't come but now might come by virtue of lower tariffs. So the point is, higher tariffs eventually are paid for by the consumer, right? In the end, if there is a tariff and there is an higher priced good made in India or from abroad, it is you and me who are paying for it. Does this therefore do the dual purpose of the much needed innovation in a lot of sectors, as well as a better bang for the buck for the consumer at the end?
Look, let me take a step back. Lots of time we feel very happy in countries like India and Indonesia that the domestic demand is very strong. And because of that, our growth will always sort of remain strong. Will not go up and down when global sentiments or global volatility has sort of picked up. The flip side to that is that sometimes you can get very complacent, which I think may have been the case in India over the last decade. You feel like domestically we can do a lot, and therefore you don't make effort to go into the global platform and compete, sell, export in the global platform, because it's the global platform that really puts very strict sort of quality controls on you and makes you innovate, do better, rise up to the occasion. The kind of story we saw from Korea, for example. Korea started exporting very quickly, and it had a lot of it had high import tariffs, but it also had very strict conditions that you have to export a lot more if you want to continue to enjoy high import tariffs. And that's how Korea really sort of went up ahead. So for us to be more aligned with the world, integrated in terms of import and export, will actually bring up the quality of our producers, and then producers will realize that they need to do more R&D. So I completely agree with you that you need lower tariffs, better integration with the world to increase your own quality cost of production, and then you can also benefit consumers on the back of that. Before we wrap up, I wanted to make another point in the report, which was on FDI. We have been trying to welcome FDI in high-tech sectors, and we've done a good job, like electronics, semiconductors. But through the whole process, we've completely missed out mid-tech FDI. Mid-tech FDI in labor-intensive sectors like footwear, textiles, furniture. In fact, other countries like ASEAN became a beneficiary of that after the Trump 1 episode. We did not. And I think that's another area where we really need to forge ahead, because that's FDI in labor-intensive sectors. It can get us both jobs and GDP growth, and the world really is looking for new producers. We all worry about China excess capacity, but China excess capacity is actually not that much in these mid-tech and low-tech sectors. So it's a great opportunity for India to actually land, in that place and start creating more jobs. So if there's two things I think we can do very well for us. Number one, we can cut import tariffs, particularly on important inputs. And number two, we can become far more welcoming of mid-tech FDI, which can become a source of jobs for us. And I think that we've already started seeing the right things in both these fronts. And if we continue to do this, then over the medium term, we may become beneficiaries.
Okay, Pranjul, such an important point, and it's a different light in which a lot of people see this, but I'm glad you're making this point today. On the eve of Women's Day, as I said yet again. Thank you, and Tamanna, great to have Pranjul today.
Yeah. I mean, very happy Women's Day to you, Pranjal. And when we say talking about beyond glass ceilings, it's a prime example there. Really happy to talk to you. Great conversation lined up ahead as well. So the current market volatility has left a lot of people in panic. For many new investors, this is the first downturn they have witnessed maybe in the last 3 to 4 years. I had the opportunity to catch up with Dinesh Thakkar of Angel One, and truly a market veteran in every sense of the term. He's witnessed turbulence, ups and downs, and all of those passages of time as far as the market is concerned. Listen in to his insights on how investors can navigate the current volatility. Let me come to what is happening right now in the markets, because this is an opportunity to sit down with you at a time when there is panic. There's no other word. There is panic, there is fear. There are a lot of people whose entire wealth, value, and sometimes careers are at stake. What is your advice to them? Because you've seen so many of these cycles, and the fear is that this is something which will last long. How are you looking at it?
I always look at fundamentals. Has fundamentally anything changed? Are we expecting India growing at a lesser rate than 6.5 or 7? No, I don't think today we are talking about that. So whatever kind of like fundamental indicators are there, which are basic engine for stock price growth, are there. What was there? There was a froth because of excess liquidity, which has gone out. In fact, we are reverse of that. Now FIs selling and retail not being as active in this month. So you will see repercussion of that. And there is an opportunity to enter the market at a good valuation. There is an opportunity to buy good blue chip stocks. For retail investor, I would say, see, they don't have an expertise to select blue chip stocks. So for them, it is good to go and buy index stocks, index funds, ETFs, which gives them a good exposure on this economy. Their bet should be on growth of economy. If I look at economy, for next 10-15 years, I feel we'll continue growing at the rate of 7%, inflation 5-6%. Still, market has a potential to give you a CAGR of around 14 to 15%. What is the right point? It is very difficult for retail to understand what is the right point. They should get an average price. That's the reason SIP is the right way for them to invest. For me, I would say advice to retail would be start your SIP if you haven't started. If you have started, continue with this. It is not that a price at the top or price at the bottom. Average price is important. From there, compounding is important, which is going to happen. So take a call on whether my economy, India's economy is going to grow at a lesser rate. Nobody is having concern on that. So I feel the story of compounding of 14-15% is there. And people like our population is quite huge. If you see, look at our kind of like median age, it is 28, 29. So people have still like 30 years of career. And they should think about how do we compound our wealth and which is the right asset class. Simplest, easiest and most profitable asset class would be equity. It's very simple to enter and exit this.
So if you at 28, 29 right now had this opportunity, what would you do to make the most of it?
See, I being entrepreneur would start something, my business of my own. So people who are unable to think about business, for them, it is good to have a secondary investment and fund entrepreneurs and all that. That is how they would be able to get a good kind of return and a good satisfaction. Do your job, put your excess money in this equity, which is going to give you good compounding. People like us who believe in starting their business, it's a great opportunity to start business. Because if we look at India next 15 to 20 years, we talk about Viksit Bharat 2047, we are going to see this population at a median age of around 40. That is where they would be having a serious money and they would be having a serious kind of investable surplus. So people who are into fintech, especially like us, for them, I would say what they have seen in the past is nothing. What they are going to see in the future is far more exciting.
So how do you see the market fall then? Because there are a lot of people who have not seen this kind of pain, Dinesh Bhai. They have seen only growth. They are scared. They're wondering what to do. There's so many people who have left their primary careers and taken equity trading as a primary career. They're wondering what to do. Should they hold on?
So there are two types of people who entered post-COVID. One who had some kind of saving because of that lockdown and all that. They thought trading is easy. So I would say they were not very successful in terms of trading and earning money from that. But that is not concerning to me. I will tell you why. Because if we look at India, as I said, it's too young. Now imagine when youth wants to do something now, they want to earn money very fast. That rate of an youth is never going to change. It was there in 1990 when young Dinesh Thakkar entered the market, and it will be there also. It was there. So what happens? They may, at that age, what they are earning, they'll put 20-30% of their salary or their income in market, they will lose. Suppose for an example, somebody earns 50,000, they must have put some amount in the market, they must have lost. 2 years they will lose, they will realize, okay, it's not working. What they do, there's a pattern I've seen on my platform. They will start doing SIP, they'll start putting in equity, and that is where the true power of compounding starts. Now, this same person, when that Viksit Bharat happens, would be at the age of around, say, 45. That time he would be earning around, say, 3 lakh, 4 lakh rupees. And he continuously invests 20% of his salary in the market, he will be having an asset of around 7 to 8 crores. So that is what I am seeing. These people who entered, they might not have earned a good money, but they got a good exposure to equity. They understood equity very well. And because they were social media savvy, so they were learning how to invest. If they did something wrong, they do back testing. Second set of investor came who believed in algo trading, who believe in high frequency and all that. They were able to learn lots of things, that how to trade, how to optimize. They never came to speculate. They came with a clear thought process that I am putting capital, I want 20% return, I want 30%. In those days, they got 70-80% return also. But today also they are satisfied earning 20-25%. So those set of traders are professional traders. They'll stay in the market, they'll stay in equity.
Even after what SEBI is doing?
Yeah, definitely. Because today also it is lucrative. So as I said, at that time they were earning 60-70%. Today they are earning 20-25%. So that is also good enough for them. So what they do is that, okay, they can borrow money. I don't know. I'm not saying they should borrow it, but they have so much confidence. This is the use cases I'm saying. I have spoken to many traders who are doing it. So they leverage their capital 1:1, earn around 20-21% and pay interest of 11-12%. So still they are getting effective return on their kind of like capital to the tune of around 27-28%. So those set of investors are permanent in market. They will build their career in stock market. Other set of investors who lost, what they will do, they'll go back to job as they were doing and continue investing 20% in SIP, mutual fund or equity. When they buy equity also, slowly they make a portfolio.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers, and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers, and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Hi, thanks so much for joining in. You're watching Ask Profit on NDTV Profit. My name is Alex Matthew. This show gets you answers to all of your stock-related questions. And to that end, you can send us your questions either on the WhatsApp number that is on the top of your screen or on the landline number that is on the bottom of your screen. That's where you can call us. And we'll be happy to speak to you. Let's very quickly take a look at how the markets are doing right now. And we've bounced back from the lower levels. And we're trading with gains of about 0.2% or thereabouts for the benchmark Nifty 50. We're trading with gains as well for the broader markets. So you have the mid-cap index that's up about 0.5% or thereabouts. You have the small-cap index that's gaining more than that, about 1% or so. So it's looking that strength is being built over the course of the session so far. The question is, will it continue to sustain as it has, in fact, for the last couple of sessions? And we've ended quite strong for both the benchmark as well as for the broader markets over the course of the last couple of days. Let's take a look at the key contributors in trade today. And Reliance Industries once again at the top of the list. You saw a gain of about 2.9% or thereabouts in trade yesterday for Reliance Industries. It's contributing about half of the gains for the Nifty 50 today. And this is something that a few people are talking about. Has Reliance Industries, one of the largest, second largest weightage on the Nifty 50, made a bottom? And what does that mean for the benchmark as a whole? Is it heading higher? HDFC Bank, by the way, also contributing to the gains today. Macquarie, after 4 years, is positive on the stock. And so that is, I'm talking about Reliance Industries. And so that bodes well, not just for the benchmark, but also
for Reliance Industries, up about 2.6% as we speak. I'm sure a few of you are going to have questions on that as well. The broader markets as well doing reasonably well. You have a lot of names that are reacting to earnings, so not earnings, sorry, orders. So you have, in fact, Brigade that has got a new project up and running in Chennai, which was up and about. And you have a few more, which I'm going to toss to Mahima to tell you about. Mahima, morning.
Morning. So Kalpataru Projects is
Yes.
one of them who's won a new order of around 2,300 crores, and the stock is up. Let's pull up the stock. It's up by 3.5%. RVNL is another counter which has received a letter of acceptance of around 156 odd crores. The stock is up 2.8%. Some other counters that are buzzing on the back of news flow. Let's pull up Biocon and see what it's doing. Let's also pull up something like Jindal Stainless to see how that counter is faring. And also something like a Quest Corp that has received NCLT approval for the demerger of various businesses. The stock is up 3% as we speak. So all of these counters on the back of news flow. Also Hexaware Tech that came out with its earnings numbers today. Let's pull up that counter and see how that is kind of faring in trade. It's down by about 4.3 odd %. So all of these counters on the back of earnings as well as news flow post-market hours.
All right. So I'm sure you've got questions about quite a few of these stocks. So like I said, you can send a message to us on the number that's on the top of the screen, or you can call us, as Dheeraj from Hyderabad has done. But before I go to you, Dheeraj, let me introduce the experts that are going to answer your question. We've got Vineet Bolinchkar, who's the head of research at Ventura Securities, as well as Jatin Gedia, who's the technical analyst at Sharekhan by Mirai Asset. Both of you, thank you so much, gentlemen, for taking the time, and happy Friday to you. Good morning to you as well. Dheeraj, I'm coming to you first. What is the question that you have today? And thanks so much for calling us.
Good morning, sir. My query is regarding Adani Green.
Okay.
I'm holding 400 shares of Adani Green at 946 rupees.
All right.
So, is it a good time to accumulate more?
Okay. And what is the time horizon that you have, Dheeraj?
For 6 months, sir.
Okay. Jatin, I'm coming to you on the charts. The stock is currently trading lower by about a percent or so, 838. So it's below the buy price. What are the prospects on the upside for 6 months?
Yeah, see, from a short-term perspective, we are expecting the current move or the counter trend rally to continue towards 940 to 960 on the upside. So on the daily charts, we are looking at a trend reversal. So yes, there is a potential upside of around 10 to 12 odd % even from current levels. So I think he should continue to hold on to his investment. On the downside, he should keep a stop loss of 800 for his holdings, and on the upside, 960 to 980 are the levels that we are expecting from a 6-month kind of a perspective.
All right. Standard disclaimer, Adani Green is owned by Adani Group of companies, and NDTV Profit is also a part of a group of Adani companies. Moving on to the next query, Reliance Power is the counter that we are talking about. Do we have the name of the, I don't think, Jairam, okay. Jairam is holding about 6,000 odd shares of Reliance Power at an average price of 41. He's currently incurring a loss of 29,000 odd rupees because the stock is currently trading at 36 at rupees 36. He wants to know when will it reach this level again in the current market. So 41 is the buying price. He wants to know when will it reach the 41 mark. Jatin, I'll again come to you. What are the charts saying for Reliance Power?
See, in the case of Reliance Power, on the weekly charts, a very bullish candlestick pattern is developing. So I think there is a scope for more upside in the case of Reliance Power towards the level of 46 to 48 levels. So I think it will be difficult for me to give an exact time frame or the exact time period by when it will reach 41. But what I can see on the price front is that it's forming a bullish pattern. So the up move is likely to continue. So he should hold on. We should suggest a stop loss of 33 for his investment in Reliance Power. So in case 33 is reached on the downside, then we should exit. Otherwise, we are expecting levels of 46 to 48 on the upside.
All right, so that's the view with respect to Reliance Power. Next caller, Ashok from Ahmedabad is calling in. Ashok, a very good morning to you. How can we help you?
I have asked question. I want to purchase Staril or Zodiac Energy. Which one is better for me?
Okay, got your question. Vineet, I'll come to you. While Transformers and Rectifiers is a 12,000 crore market cap company, Zodiac Energy on the other side is a 600 crore market cap company. Both of them are into manufacturing of rectifiers and transformers, but Zodiac is more towards the solar side of things. What's your view and which one should you choose?
So I think Tyrell, in spite of all the bullish prospects, is completely, in our opinion, overvalued. And, we see very little upside gains from here. I know the business prospects are very good, but the, price is capturing all that. So I have a kind of a hold or a, book profit kind of on this stock. As far as Zodiac Energy is concerned, I do not follow that stock too much. So difficult for me to give an opinion on that.
Okay, fair point. All right, so sell on rise kind of an approach is something that you should do with transformers and rectifiers. The stock has bounced back, I think, if I'm not mistaken, from the low point that it has hit in the recent past. Power Grid Corporation of India is the name of the counter that we're talking about, and John is writing in from Puducherry. He's bought at an average price of 153.6, and he's wondering whether to add more the current price for the long term. So he's making a profit at this point, Vineet. Would you suggest that he adds more based on the fundamentals?
I think, you should not get into the market at this point in time in this stock. Wait for the, we are expecting a further correction in the market. And one should be looking to buy that dip if you are looking to buy the stock. So I think around the recent bottoms of 250 or maybe a little lower would be a great point to get an entry into the stock.
Okay. Yeah, so I'm guessing that you're referring to your expectation that there will be selling ahead of the end of the financial year where people are going to look to book their losses, right?
Yeah.
Okay. All right. So we've got the next caller, Raj, who's writing in from, or rather he's calling from Kolkata. Hi, Raj. Good morning. How can we help you today?
Hey, hi, everybody. Good morning. So I wanted to invest on this dip around 1 lakh of rupees in the pharmaceutical sector. So I was looking at the fundamentals between Divi's Lab and Sun Pharma.
Okay.
So I wanted to view like which one would be better, or if you can suggest any other pharma company for me to buy.
Okay. So you've got a long-term view?
Yeah, fairly long-term. Yeah.
Okay, fine. All right. So Vineet, maybe not, and I take your point entirely, but between these two companies or another name in the pharma pack, we've been looking at CDMO companies and saying that they're relatively better off than the rest. Would you pick between Divi's or Sun Pharma, or would you pick a third stock?
No, I'll pick a Divi's. I think they understand complex chemistry very well. They have a very strong portfolio of CDMO. And I expect this stock to do exceedingly well going ahead.
All right, so that's the view with respect to Divi's Labs. In fact, there was an interesting Goldman Sachs note that came out on the pharma stocks, which had mentioned 4 stocks. One being that if tariffs get imposed, Torrent Pharma is something that will be least impacted because it has a domestic play. In the CRDMO space, they've chosen Syngene as well as Newland Labs. And lastly, they had chosen Aurobindo Pharma because in terms of valuation, it looks attractive. And the earnings for Aurobindo Pharma has remained resilient. So these were the reasons that they had stayed in the
And there's
report.
also an MK note this morning or last evening on Sun Pharmaceuticals, which was quite interesting. And we will get you more details on that through the day. But essentially, they're talking about the resilience of this company on account of its Ranbaxy portfolio and the fact that some of these products are doing well for them at this current juncture. Basically trying to justify and explain why the domestic revenues for this company have been more resilient than the others.
Right, got it. The next counter that we're talking about is Nazara Technology. So Srini from Hyderabad had purchased Nazara Technologies 4 years back, and in between there was a stock split also for the counter. The average buying price for her is 794 and the quantity is 127. She wants to know that she's still at a profit of around 18%. She's sitting on a profit of almost 18,000 odd rupees. Should she hold or exit? What's the view like, Jatin, on the charts? Should she keep holding? Is there an upside on the charts that are looking favorable?
Yes. See, in the case of Nazara Technologies, the stock has been consolidating in the range of 1100 to 900 since the month of August last year. So it's a decent 6 to 7 month kind of a consolidation phase. And now we are expecting a move towards the 1100 mark, that is the upper end of this range. So yes, current levels are good levels to even add more because it's at a crucial support level, and on the upside we are expecting 1100 from a short-term perspective.
All right, so that's the view with respect to Nazara Technology. And a buy is the view coming in from Jatin. Tarun is our next caller calling in from Maharashtra. Tarun, a very good morning to you. How can we help you?
Ma'am, I buy 400 shares of Parag Milk.
Okay.
At the rate of 250.
Okay.
So I would like to know, shall I quit or shall I wait for some time? Because now it is, I think, 160 or something. The rate is 160.
Okay, so you saw the charts when you bought Parag Milk, Tarun?
No, I didn't saw the chart actually. From the friend circle, I came to know about this.
Okay, all right, got your point. Vineet, I'll come to you. If you have a view on Parag Milk, what's the view like?
So I think, there are better companies out there. Heritage Food is very, very good stock to look at. And if you want to stay within the same, sector, then I think Heritage Foods is a far better stock to own than Parag Milk Foods.
All right. Let's take the next one. This one's also coming your way, Vineet. We've been talking about the metal companies and we've been talking about steel in particular in the recent past. And we've got Jaishekhar who's writing in from Chennai and who's bought Tata Steel at a price of 153 rupees and planning to hold for the long term, 5 years or more. Can it be accumulated at the current level? Now, this is a stock that is relatively underperformed. And if I look at this versus JSW Steel over the last several years, right? So if you're looking for a very long term, what would you do? And are you sanguine on everything that you're hearing in the metal pack and particularly on steel? Of course, this conversation on safeguard duties, there's also an expectation that it might take a while before this comes through.
Whenever, you have a macro event like liquidity being pulled out, markets collapsing, we've seen these stocks do relatively well. Between the the counters of metal, that is copper, aluminum, and steel, I think they all have their own sweet spots. But I understand, and it is my gut feel that Tata Steel would do rather well because I believe that, the worst for the company from its own perspective is also over and things are looking much brighter. It is significantly undervalued compared to the other stocks. And I expect this along with SAIL to do very well.
Okay, interesting. All right. So valuation comfort on Tata Steel is allowing or causing Vineet to be more bullish on it. We've got Pramod calling us from Hyderabad. Hi Pramod, good morning. How can we help you today?
Hey Alex, good morning.
Good morning.
So thank you for the show, first of all, for you and Mahima and bringing all the panelists.
It's our pleasure.
Yeah. So my question is regarding Suzlon. So I had 1,000 shares of Suzlon with an average price of 62. So I just wanted to know the long-term view, basically.
Okay, all right. And so you held, so I'm assuming that you bought it a while back, you saw the price appreciation and you've held on despite the price fall, right?
Yeah. So long story short, like I entered the market at 25,000 when Nifty is at 25,000, and happy that I'm seeing the downfall so that I don't panic next time.
Okay, all right. Well put, Pramod, well put. All right, Vineet, he's bought at levels of 62,000 shares, and there's so much that has been spoken about. The company is very bullish about the wind energy space, but there are still headwinds that, and no pun intended, but there are still headwinds for acquisition of land or availability of land with regard to wind energy, right? So would you say that holding on to 62 rupees Suzlon is a good move for the long term?
Actually, we have a sell note on the stock at 70 with a profit target about 48. We think that 48 is a fair value. And if you really want to make money on this stock, you should be buying it lower than 48 to, make money off it. That is a 2-year target. So I would not advise entering this stock at the current level. If you're holding, you're sitting on a slight loss. I think you could book out of it and get into some other stocks like Adani Green, which offers a lot of upside potential than Suzlon from current levels.
Okay, so that's the view with respect to Suzlon, and Vineet prefers Adani Green over Suzlon is what he's saying. The next counter that we're talking about is Brigade Enterprises. Meenu from Trivandrum is looking for a view on this particular counter. Vineet, I'll again come to you. Brigade is buzzing today on the back of its new premium residential launch in Chennai, where the revenue potential is roughly 1700 odd crores, and it has over 11.87 million square feet already launched, which is in pipeline right now. So pipeline looking strong for Brigade. What's the outlook like?
So, I have a more of a macro view which is related to the US markets, is that if the US markets are going to take a hit, H1B visas go, gold visas come in. And, if the dollar were to behave the way it is doing, I think IT jobs and IT increments could come in for a little bit of a puncture. And given this kind of view, Brigade, which operates in these markets, which are more based in, the IT capital of Bangalore and other vicinity, I think I would not want to buy these stocks at current levels. So any real estate play with the exposure to, back office in India like Bangalore, Pune, and up north in Gurgaon, I think those real estate stocks should generally be avoided.
All right, so that's the view with respect to Brigade Enterprises. And our next caller, V. Murli from Bengaluru, is calling in. A very good morning to you, Mr. Murli. How can we help you?
Good morning. Thank you for taking up my query.
Go ahead with your query.
Yeah. I want to invest about 3 lakhs from at least 1 year point of view.
Okay.
Whether I should buy a chalet hotels or Apijay Surendra Park, where the hotel additions is getting doubled in the next 2 years.
Okay. Got your point.
I want a fundamental view.
Okay, you want a fundamental view. Got your point, Mr. Murli. Vineet, I'll again come back to you. He wants to know whether he should invest 3 lakhs in a chalet or a Apijay Sundar Park. But if on a hotel sector you have a view, if not these two, which counter would you want to invest in?
So, we like both these stocks. But I think Surendra Park has got more upside potential than chalet. But on the other hand, you must understand that chalet, almost, 1/3 of his revenue comes from a single property, which is the Calcutta one. And it's 100 crore revenue that they do. And they're very fast, building out. So, you're going to see some kind of numbers keep coming down. Performance numbers will keep coming down. But they've got a very strong pipeline of capex, and that should help it. So you should have a slightly longer term view as far as owning Apijay is concerned. But there's definitely a chance to get 70-80% kind of returns on this stock.
Okay, all right. So there you go. It's a positive view on both of them, but Apijay, more valuation comfort. Sula is the name of the counter we're talking about next, and I'm coming to you, Jatin, on this one. And we've got Ramana from Visakhapatnam, who's bought it at levels of 497. So very elevated levels, and has been holding for 8 months. Is it a hold or sell in your opinion?
I think the current pullback that we have seen since last 3 to 4 trading sessions, I think he should consider to exit his position, considering that the overall short-term trend is negative, and I think the stock is showing very little signs of a trend reversal at this point of time. So this pullback that we have seen should be considered as an exit opportunity.
That's the view with respect to Sula. In fact, even in Q3, the performance of the company was not up to the mark. In terms of their own brands, the revenue grew hardly by 1%. Elite and Premium, which used to grow in double digits, grew just by around 5.6%. But wine tourism is something that's doing good for them, although management is very positive on the future outlook. That's with regards to Sula Vineyards. But the next counter is Siemens. Arun from Gurgaon wants to know whether he can buy Siemens at the current levels. Jatin, I'll stick with you. What are the charts saying for Siemens?
See, in the case of Siemens, we believe that yes, there has been a trend reversal. So current levels are good enough levels to enter for a short-term kind of a trade. We are expecting levels of 5,600 in the case of Siemens. You should keep a stop loss of 4,950 for this long trade. It's a very short 1 to 2 week kind of a trade. Therein we'll have to again reassess the situation. However, the current rally that has started from around 4,600 odd levels has further upside till the levels of 5,400, 5,450 from a short-term perspective.
Okay. Venkat is calling us from Chennai, I believe. And hi, Venkat. How can we help you today? Venkat, go ahead if you can hear me.
Yeah. Sorry.
Yeah.
Good morning.
Good morning.
I just have around 6,000 shares of IDFC Bank, First Bank, bought at 70.
Okay.
I just want to know whether I can add some more at this price.
Okay. And what is the time horizon that you have in mind?
Time, I don't mind waiting a long time.
And you define that by saying more than a year, more than 2 years, 3 years?
Yes, exactly. More than a year.
Okay, so you bought it based on the fundamentals. Vineet, view on IDFC First, and would you say that the pressure that it has had, the worst may be over and this might be a good idea? See, the context, of course, is the financial pack and the banks have not really participated at all, right? They've not fallen as much as certain other companies or counters, but they've not gained as much either.
So, two things to understand from a macro perspective on banks is that, they are fundamental to an economy. So, when economic growth is going to be coming down, then banks are also going to underperform. IDFC has got very aggressive plans for each and every one of the segment. Their path is very well carved out, and we believe that it's a good thing to have. Between IDFC Bank and Kotak, I think, Kotak has also been sideways for a very long time. We see more comfort in Kotak because it's a large bank and, it's a proven banking platform. And we believe that, there is a 40% upside chance on that stock very, very comfortably. And, if things get better for the economy, you can even have a potential to double your money in that stock. So, one of our strong picks in the
Sorry, you're talking about IDFC First?
No, I'm talking about Kotak Mahindra Bank.
Okay, Kotak, there's a 40% upside potential. Okay.
Yeah.
Okay. All right, got it. And so, point well made. So, you would suggest a switch from IDFC First to Kotak?
So, I would, that is for the client to decide. But I think, I'm more comfortable with Kotak Bank than with IDFC Bank.
Got it. All right. I'm told that Jatin has to leave us. Jatin, thanks so much for joining us and for answering the questions that you did. Pleasure as always having you on the program. Vinny, do stay with us. We'll be back after this very quick break and we'll take more of your questions, viewers, so do stay tuned.
warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
All right, back with Ask Profit, and let's take a check of where the markets are right now. And you have the benchmark Nifty 50 that's just meandering a little bit. It's gaining about 0.2% or so, or 0.1% or so, and it's in that very narrow range for the day, very close to 22,600 on the upside. But its gains are capped at this juncture. But the broader market's looking more sanguine at this point and continuing to hold on with gains. In fact, you have BSE that we've been focusing on in the recent past. It's been under pressure because of the changes that have been announced in the derivatives segment. And this is after, of course, NSE shifted its expiry date to Monday. Earlier, remember, the regulator had proposed a few new norms, including a change in the calculation method of open interest. How is a company going to deal with these issues going forward? To talk about this, my colleague is speaking with the Managing Director and Chief Executive Officer of the company, Mr. Sundaraman Ramamurthy. Let's cut across to that.
Hello viewers, today we are joined by the MD and CEO of the oldest bourse of Asia, the Bombay Stock Exchange. We are joined by Mr. Sundararaman Ramamurthy. Welcome sir, welcome to NDTV Profit. Thank you for speaking to us. Sir, currently we are in a phase of market correction. We are seeing that the markets are bleeding red and a bear run is continuing. But we cannot forget that currently the retail investors that we have in the country are young investors. Most of them belong to the generation that is seeing this sort of a correction for the first time. So what would be your advice for them?
Markets going up and down is a part of market behavior. So the advice to any investor is not necessarily dependent on what market phase it is at this point of time. It is an important advice forever. As I always tell, an investor, if he is a trained and an existing investor, should be very clear and conscious that he should invest what he understands and he should understand what he invests. That is the basic principle to be followed at all times. If it's a new investors, as you rightly said, a lot of youth wants to get into the capital markets, which is very good for the country because financialization of household savings is a very important requirement for the development of markets and the economy. My advice to all of them has always been, if you're a new investor, like you do with any new activity, start small, start with mutual funds, maybe with a broad-based fund where the portfolio managers already take care of risk diversification. And you have to plan long-term. It's not that you will invest today and tomorrow onwards you start seeing whether you are making profit or loss. Make small amount of SIP to capture all market cycles and stay invested for a longer time, probably in a good mutual fund in a broad-based scheme. That has always been my advice to the Yuva.
That's a very good advice, sir. So moving ahead, as we all know that BSE announced its changes in expiry dates last year in November and they were implemented in January this year and they were shifted to the first half of the week, that is on Tuesday. Now very recently we have changed the other big exchange in the country, changing their expiry dates as well to the first half of the week, that is on Monday. So we also have to consider that when this was announced on Wednesday, we saw a strain on the stock price as well. So how do you feel that you are going to be combating with this? What are you thinking about strategizing around this?
See, our stand has always been like this. We do what the market participants want. We are a market infrastructure intermediary. Whatever is the voice of the customer, that's what we implement. When we implemented Friday, that was based on market voice. When we implemented Tuesday, that was based on market voice. Whatever market advises us, that's what we will do this time as well. As far as the share prices, for us, share prices are outcome. What is the main purpose for which we exist? To provide a well-governed, well-regulated marketplace with products what the market want. That's how we will look at it.
So are you planning any sort of change again in the expiry dates?
That would depend upon what the market voice is going to be to us. I'm told NSE made a change on 2 days before or something. So once we are able to understand what the market advice for us is, we will accordingly act.
So you wish to look at how things roll out and then take advice and then, take your action.
Yeah, whatever the market participants tell us as to what should be our action point, that's what we will do.
So moving ahead, the Securities and Exchange Board of India also recently floated another consultation paper that was about the calculation of open interest in the FNO segment. Now, from the notional method, there has been a suggestion to change it to a future equivalence method. Now, do you think that if implemented or if this proposal paper in general implemented could also affect the volumes at BSE?
As I said, the volumes are outcomes. The most important thing is to provide products as required by the marketplace within the four walls of corporate governance and market regulation. If you recall, there are multiple open interest requirements stipulated by the regulators. One of them was stipulated during COVID times. And that was called as sentimental OI. Now that COVID has gone, we have been requesting the regulators to review it. The purpose for which it was born is now not there, and market regulations themselves should not shape market microstructure into situations which are not warranted. So the regulators are looking at it and they have come out with a paper. The paper talks about future equivalent, as you rightly observed. The regulatory process in India is a co-created process. Market is consulted, the exchanges are consulted, experts are consulted, based on whatever their advice is. And based on SEBI's internal thinking, things will come out and get rolled out. I'm sure the market regulatory role and market development role have always been going hand in hand, and SEBI will consider the views and then analyze what the repercussions are, the positives are, and accordingly a decision will be taken.
Definitely, sir. So, talking about the regulator a bit more, ever since the earnings call for BSE was done, there was a sort of back and forth between the two exchanges in the country regarding the clearing corporation charges. Now, I assume that a lot has settled down, but there were a lot of media reports about this back and forth. So, do you feel that some sort of a regulatory intervention or some sort of a regulatory pathway needs to be created to stabilize this entire ecosystem?
See, commercial interests lie with the regular organization, notwithstanding that. As of today, I understand that NSE has to clear some dues to ICCL. And ICCL has escalated it to the regulators, and also NSE has escalated. I am sure very soon it will be resolved.
But is this some sort of an issue that is, as an individual issue being escalated, or you are looking at a larger solution, for example, a regulatory solution to this?
So as I said, it is a commercial one. So typically commercial parts, regulators leave it to the exchanges to resolve by themselves. Where there is no resolution, naturally it will get sort of into the regulator's attention, which has been brought to the notice of regulator by ICCL and also NSE, I was told. So regulators are also looking at it, and then a resolution will certainly follow.
So moving ahead, what are your, own plans with regards to, getting more market share, strategizing to, take BSE forward in the next 2 to 3 years?
As I always said, even in this interview with you, market share and all are outcome, right? Serving the market is what is very important. What we have taken as our goal is customer delight. Who are customers? It's both internal and external. Right from the regulators to shareholders to investors to brokers and their clients, all are our customers. Why customer delight is important today? We are talking about competition. Actually, the competition is global. If the competition is global, if more and more Indians are trading in exchanges outside India, whatever way in which it is happening with legitimate ways, we need to have garvapsi of this investors. They should trade in Indian markets. So it's not about changing expiry days and all that stuff alone and getting some market share out of it. It is about providing an ecosystem where India excels in providing customer service, and to trade in India is a customer delight. So from a BSE perspective, we have taken it as a slogan, and in Hindi we call it as Prasannit Grahak. That is the two word which makes every one of my policy to be scanned through. In that process, we are improving infrastructure in a big way. Infrastructure will tantamount to technology, people, physical infrastructure, knowledge as a base as an infrastructure, automation as an infrastructure. All these are being relooked into, and in the coming 2 years we want to make BSE as a world-class customer delight exchange. That is the path we are taking.
In moving ahead with these strategies, how big of a role is AI playing currently?
See, like every technology, when it comes, there is a sort of lot of talk about AI, and subsequently probably it dies down. But we do not want this AI part of it to go that way. Every technology has positives and negatives, as you would know. The positives part of it is what it can contribute, negative is how people can misuse. There are a lot of cases where AI has been misused. People just use AI to character assassinate budding people so that they can have their way of monopoly. So that also we have seen. So negatives, we should be cautious. We should also be understanding that my image can be put and can be told that I am soliciting you to invest in a stock. These all stuff are negatives of AI. Talking of positives of AI, AI can be useful in multiple ways. Combining it with this large language model and all, a lot of things have evolved over a period of time. Significantly voluminous document you throw into a generative mechanism, it gives you a lot of ideas about it. It reads it, it thoroughly analyzes it, it gives you things. We feel in prospectus processing, in surveillance areas, in assessing the probable outcome of a regulatory change, studying the outcome of an already introduced regulatory change to see whether it is serving the desired objectives with which we started the regulatory change. I think AI will be tremendously useful. These are some of the use cases which I am immediately able to think about. Some of these areas, in one of the areas we are in very advanced stages of implementation in our organization. Other areas we are exploring. I am sure this is going to play a vital role in the days to come.
So you believe that the technology is not going anywhere, it will stay here. As you said in the beginning that artificial intelligence could be something that eventually becomes not so important, but you have thinking that it is going to stay in some form. It is going
to stay. Only thing is we need to be very clearly aware of the negatives of it and we should be cautious to curb them.
So finally, any other plans regarding the BSE Star MF?
In what sense you mean?
In taking it forward and taking it to the people more.
As you may recall, when I joined, we were processing around 1 crore to 2 crore transactions per month. Today, we are processing around 6 crore transactions per month. Like in the budget speech, Finance Minister Madam talked about Gyan, Garib, Yuva, Annadata or Nari. Isme say we are taking Yuva and Nari as the concept today being an important day for Nari. We are taking Yuva and Nari for the purpose of mutual fund investment. Wherever we get an opportunity, we are talking to the young investors, the youth, telling please come into the capital market portfolio through mutual funds, broad-based, good mutual fund schemes. And that is one another thing we are doing, which is showing results. Otherwise, you will not have seen the growth from 1 to 3 crores as the min-max, going into 6 crores as the average. That transition has happened. We are strengthening again here as well our technology base. Almost a significant completion of whatever we planned as a version 2 has happened. It's under beta testing with some of the people, which will increase functionalities, which will increase governance, which will help in reconciliation, which will help in scaling up and will bring sustainability. We are working in a very big way on mutual funds because it's very close to our heart. That is the way in which we feel the financialization of household savings should be channeled into the markets instead of other undesirable ways in which it could otherwise go and get frittered away.
Thank you so much for speaking to us, sir. Thank you.
Thank you. Namaskar.
Namaskar.
All right, the head of the BSE speaking about a range of various issues. And I think key would be that they would listen to the market voice to determine their next course of action. And well, let's pull up the stock chart and see where it is right now, BSE Limited. And this is something that, well, it's up about 0.5% or thereabouts. But let's go across to Vineet on an interesting question that we've gotten, and this is coming in from Thailand. Vineet, this is a viewer who's writing in from there, Vivek. He has bought Dixon Technologies post-COVID. He's got 400 shares which he acquired at a price of 3,328.4, and so his profit currently is about 43.4 lakh rupees, and this is despite the stock having fallen about 25% from the 52-week high. He's wondering what to do at this juncture. Should he hold on? Should he add more at this current point?
Actually, our view on my personal view on the market is that we are going to see some more dips come in, and we expect more further fall to come through. Dixon is one of the stocks which can escape this trend, but if you would like to, buy this stock, I think he should wait for lower levels and not get into this rally at the current level to buy into.
Right, so that's the view coming in for Dixon Technologies. The next counter that we're talking about is Aarti Industries. Tara from Trichy is a long-term investor in Aarti Industries. She's holding 50 shares at 500. The stock is currently trading at 412, and she wants to know whether she should continue to hold the counter or not. I'll come to you, Vineet, on this one. What is the view like for Aarti Industries?
So, we think that the crude prices are going to remain benign over the longer period of time because the supply is only going up, and as such, we expect the raw material input cost to come down significantly. This will definitely benefit the industry going ahead, and so one can continue to hold Aarti Industries. We think it's one of the better chemical stocks to own. And if it comes down in this bear market, which we are expecting over the next few days, you can look to add into the stock.
All right.
Okay, we've got Rajesh Bhosle, equity technical and derivative analyst at Angel One, joining us. Rajesh, thanks so much for taking the time and for waiting by. We were, of course, listening to the BSE Managing Director and Chief Executive Officer. We've got a caller coming in next, and Suresh is calling us from Hyderabad. Hi, Suresh. What would you like to know?
Yeah, I wanted to know about Brigade Enterprises. Just now I am seeing that someone was asking that one in the same call.
Yes.
So can I ask different question?
Yes, you can. Please go ahead.
Yeah. Currently, I'm holding CCL products, which is at 615 price, around 200 shares, which I'm holding.
Yes.
Can I add more for next 1 year, or is it right time to add more?
Okay, got your question. Rajesh, I'll come to you on the charts for CCL products. Bought slightly above the current market price. The question is for a 1 year time frame. Would you add more?
So yes, good morning. So if we see chart of CCL product on the weekly chart, we can see some base formation around the levels of 560 to 550 levels. Last year as well, during May 2024, the stock had seen rally from the levels of 550 towards the levels of 650 to 700. But current market conditions are a bit different. So from averaging point of view, I would suggest to avoid. But in near term, the stock can expect some bounce back towards the levels of 630, 650, where the trader can actually look to lighten up the position. Because in the past, we have seen the stock tend to see sharp volatile fall. So ideally, in such kind of market condition, any bounce towards resistance towards 630, 640 can ideally be used to lighten up the long positions.
All right, so that's the view with respect to CCL products. Our next caller, Ravi from Vizag, is calling in. Ravi, a very good morning to you. How can we help you?
Good morning, ma'am. Actually, I bought PVR on INOS shares on December 5th of 1550,
Okay.
100 shares.
Okay.
So right now it got down to 900 around. So shall I average it? Shall I sell it?
Okay.
What shall I do?
Okay, got your point, Ravi. Rajesh, I'll come to you on this one. PVR Inox is the counter. Yesterday, Kotak had upgraded to buy with a target price of 1200. What are the charts saying according to you? What should be the target price and supports?
See, so the PVR is definitely an underperform, and it's testing the levels of around 2020, year 2020. So definitely an underperformer. But since it's already in oversold, some positive divergence can expect some rebound or some bounce back from the current levels. But again, the same view, use bounce towards a resistance to lighten up the underperformers. The next resistance that come around is its previous swing that is somewhere around 1150 to 1200. So I expect a bounce back, but lighten up position somewhere around the resistance level.
Okay, fine. All right. We've got Rajiv Sheth, who wants to know about Vodafone Idea. Is bought at elevated levels, 12.63. The current value, of course, is at 7.7. He's got a considerable quantity that he's bought, 10,000 shares. Vineet, should he hold on? Should he exit?
I think you should exit. These stocks don't have a business model which is showing any kind of profitable trends. Very difficult to take a call on this. I think one should just exit such kind of stock where you park your money and nothing happens for years.
Okay, and point well made. It is time now to hit the rapid fire segment. Gentlemen, what this means is that we'll throw as many questions as we can over the course of the next 2 minutes at you, and do keep your answers as quick as you possibly can. Sundaram Fasteners is the first counter that we're talking about, and long-term views being sought from Lakshmi Narayan K, who's writing in from Chennai. He's bought at levels of 740. Vineet, should he hold?
Yeah, he should continue to hold his stock. One of the very good stocks to own.
All right, Wipro is the next counter. Rajan from Bengaluru is holding 50 shares at 305. He wants an outlook for the next 6 months. Is it a good time to average, Rajesh?
Yeah, can average to it. 270 is the support and 320 to 330 is the resistance.
Okay, Rajesh, coming back to you on Jio Financial Services. Ranjan wants to know, he's writing from Bengaluru, he's bought at a price of 350. Should he accumulate more at this point?
Yes, can accumulate at very good levels. Can expect bounce back towards 280 to 300 levels.
All right, RVN is the next counter. Sudhir has bought 790 shares and he's saying he's sitting on a loss of around 95,000 odd rupees. What's the view like, Vineet?
Hold on to this stock, ride out the bear trend, and then you'll see good profits emerge over the next 2-3 years.
Okay, Tata Motors has seen quite a lot of erosion. Would you buy the current price for the short term? Rajesh, what's the view? This is Snehal's question.
Yeah, can expect a bounce back towards 750 to 760. Can add on to it.
All right, Thomas Cook is the next counter. Gautam from Mumbai has 630 shares bought at 206 a piece. He wants to know whether he should add at the current levels or sell at this point. His horizon is 12 to 18 months. Vineet, what's the view?
We are fundamentally positive on this company. Buy on declines is the best strategy that I can suggest given the downturn that we are expecting.
Okay. HAL is the name of the counter. Gul wants to know, he's bought at levels of 3,760 rupees a piece. Is it the right time to add more at the current price? Rajesh?
Yeah, we are seeing a bullish engulfing on the weekly chart on a key support. So can buy onto it. 4100 is what we are expecting in the near term.
Okay. All right. Winding down on the rapid fire as well as on the program. Thank you so much, gentlemen, for taking the time, for answering all the questions you did. Always a pleasure having you, and happy Friday to you. All right, that brings us to the end of this edition of Ask Profit. Thanks so much for watching. Do stay tuned. Lots more coming up over the course of the day from Mahima and myself and the team that put this show together. Thank you so much for watching.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every anlom, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Reviksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Very warm welcome to you all for this NDTV Profit conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every anlom, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Reviksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands.
Hello and welcome. This is KYC, a show designed to give regular investors powerful, actionable insights into the fundamentals of a single exchange-listed company every day. Today, we're talking about a small-cap company which has been recently listed on the exchanges, which has had, in fact, a very strong listing as well, and that's Enviro Infra Engineers. What does this company do? Well, it is in the business of designing, constructing, operation and maintenance of water and wastewater treatment plants. Do remember, this has been one of the other areas which has been up and coming along with renewables, and that is to do with water and water waste management systems. The company also deals in sewage treatment plants and common effluent treatment plants as well. Along with that, water supply scheme projects is something that the company addresses too. Now, in general, one of the foremost companies, at least in the listed space, was of course VATech Vabag. But besides that, we also have plenty of traction in some of the peers, like something like an Ion Exchange or EMS. And In the same space, we also have Enviro Infra, which in fact does address these exact same areas and segments. Now, in terms of the revenue mix for the 9 months gone by for Enviro Infra, as you can see, it is essentially 90% EPC, that's engineering, procurement, and construction. That's largely to do with solutions around water and wastewater management. That follows hybrid annuity, and of course operations and management, maintenance part, that contributes to very little in your overall revenue pie, but it does have a little bit of a presence there as well. So that's as far as what the company does. Now, what we usually tend to do as always, is that we try and assess the company based on several parameters that we are considering, and along that we talk about the fundamentals. So in this case, of course, we're talking about the company's income statement, the order book, which will give us an idea about the visibility for the company in terms of its business. We talk about the balance sheet and where that particular company stands at, and of course cash flows. Move beyond the financial statements, we also take a look at some key return ratios, shareholding, street credentials currently, as well as peer comparison. Now, because it's a very recently listed company, we don't have a lot of coverage. A lot of analysts are brokerage coverage on it, of course, notwithstanding the fact that it has a market cap of a little less than 3,500 odd crores. So naturally, that'll be the other challenge before it actually starts coming on the radar of a lot of these, analysts. So its market cap, I'm just correcting myself, is a little more than 3,500 crores. In fact, 3,700 crores to be precise. But, without any further delay, let me talk to you about the fundamentals of the company. And I start by taking a look at your revenues, your operating margins, as well as your profitability. Now, firstly, over the last 3 years, its revenue has seen a CAGR of 81%. So very, very strong. In FY22, its revenue stood at around little over 220 odd crores. In FY24, it saw revenues of 730 crores. So it's clearly seen a lot of execution under its belt, and which is why we're seeing that kind of traction in terms of its top line. It has also maintained its operating margins above the mark of around 22%. In fact, for FY24, that stood at around 23%. And in terms of net profit, also perhaps on expected lines, because you have the aspect of the operating leverage coming into play, and which is why we're seeing your net profit also rise from 35 odd crores all the way to about 110 odd crores, more than that in FY24. So very strong growth for the company for the years gone by. And the question really is that what do you do with the way forward? How have the 9 months panned out? That's the other aspect that I did want to pull out, because even in the 9 months gone by, it has actually shown a very strong growth, around 55% in its top line, and its margins have expanded significantly to around 24.2%. So these margins are even better than FY24. So margins are also improving considerably. And of course, net profit has doubled once again for this particular period of 9 months in FY25 as well. And as the management suggests, that the fourth quarter is likely to show good traction. So the expectation is that we will see this strength likely continue in the ongoing quarter. That's as far as your income statement goes. So it's a very, very strong income statement. The indications are positive as well, which is why we'll give this a thumbs up as far as the income statement is concerned. What about the order book? So when it comes to that aspect, again, the company does have a good amount of visibility. Now, at the end of FY24, the order book stood at around 2,100 crores. At the end of December 2024, and that's just the 9 months ending 2024, the order book stood at around 1,700 crores. One might say that this particular order book number is lower than what it was back in FY24, but do remember that there's a lot of execution that comes into play. Moreover, the fourth quarter, and of course to a certain extent the third quarter as well, but the second half of this financial year is seasonally a one in which the awarding activity increases dramatically and peaks towards the fourth quarter. So we are yet to get those numbers, and which will give us a much better idea in terms of what the company's order book will be at the end of this current financial year. Hence, it's a thumbs up in terms of the order book as well, because you have that much more clarity and that much more visibility with respect to business. And of course, I'll give you an idea about what the management thinks in terms of its guidance too, going forward. So we talk about that, but for now, visibility is good. Well, let's come down to cash flows. I have taken a clarification for the cash flows as well from the management, but at the moment we're going to give this one a thumbs down, and that's because for the first half of this financial year we've seen cash flows from operations moving out. It's a little bit of a concern there, and net cash flows not so much though. So again, I was on the fence of whether or not to give this a neutral or a negative, but we're giving it a thumbs down for now at least, and we're likely to see an improvement coming forward. That's as far as your cash flows go, and this is in terms of your overall financial statements and your order book. Now, it gives you a good amount of a picture as to how things could potentially pan out for this particular company, and we look forward and move forward and just consider the balance sheet quickly, because that's one aspect that I have managed to skip over. In fact, this is one of the most important of the parameters here. So as far as balance sheet is concerned, firstly, if you look at your net worth, the shareholders' net worth, that remains at 137% at the end of the first half of the financial year. Its cash and equivalents also have remained largely stable. That stands at around 126 odd crores. But what about its debt? Its debt has certainly increased as well. In fact, at the end of FY24, its debt was at around 85 crores. Towards the end of the first half of this financial year, this debt number has gone all the way to 250 odd crores. Is this a matter of concern? We must remember that the company is in the business of engineering, procurement, and construction, which means that it does have certain working capital requirements. And hence, through the course of the year and in the middle of the year, naturally, there will be certain borrowings which will go up. And that's, very evident in the kind of move that you're seeing in short-term borrowings, essentially, because you've seen the short-term borrowings shoot up by quite a bit in the first half of this financial year. And this is naturally on account of the execution work that the company is taking on, which means that it will require short-term finance from time to time. Its long-term debt has not moved up significantly. In fact, from 90 odd crores, it has moved on up to 97 odd crores. And, I'd reckon that the management would be comfortable with these debt levels. It is also pertinent to note the overall debt number towards the end of the financial year and then compare that to FY24 numbers, and gives you a much better idea. And hence, for now, because of the fact that it has a good amount of cash on its books even now, and it has a pretty steady net worth of around 137 crores, and do remember that this number could likely go up towards the end of the financial year, even as we see more profits being added to the accumulated profitability, and hence adding to the net worth, which is why we'll give this one a thumbs up, a neutral rating right now. Now, that's as far as the balance sheet goes. And now let's move on and talk about all the factors beyond just, the income statement. If you just consider the income statement and the balance sheet, and you take a handful of ratios out there, you will notice that your return on equity stands at around 52% towards the end of FY24. This is a very strong return ratio. This is a very strong return on equity. Return on capital employed also at around 32%. Sure, this one has come off. This one has fallen from FY23, but it's still at 32%. Now, any number over 20-25% is a good one to keep an eye on, is a good one to grapple with, which is why this will also be a thumbs up in our books at the moment. So that's as far as your return ratios go. But do remember that the company just got listed back in November 2024. And there were some changes in the balance sheet, which, of course, have also been taken into account. Now, this is as far as your income statement goes. Let's move on and talk about the shareholding pattern. It's a well-held company, recently listed back in November. And in terms of the shareholding, we have the promoter shareholding of around 70%. That's followed by foreign institutions, about 1.5%. Domestic institutions also hold around 5%. Look, we must remember that because the fact that the market cap of this company is 3,700 crores, it doesn't even make the small cap 250 index universe, which means that you won't have as much institutional participation in the company just yet. It's only when the company passes through certain thresholds, perhaps its market cap increases, that's when you start seeing a lot more coverage coming in on the company. You'll also start seeing a certain mandated funds. Once it enters into a handful of these indices is when you start seeing a little bit more institutional interest in this particular company. That said, there are institutions, foreign as well as DIIs, who are already invested in the company. And of course, the public at large holds around 23.4%. So no problems there as such. And considering the fact that promoters still hold 70%, well over 50% mark, it's going to be a thumbs up in our books here as well. What about street credentials? This one is a tough one because we do know that, well, the entire sector in general, and not just the sector, but also the mid-cap and the small-cap universe has seen a significant decline of late. In fact, the correction which began back in October, has only precipitated downwards for now. And well, Enviro Infra is no exception to this, which is why we've seen a decline of around 27% in the last 1 month, 33% decline in the last 3 months. The question really is that where does it stand when it comes to fundamentals? So while we do give it a thumbs down for street credentials, what about the valuations at this point in time? So let's pull that up and see how things are panning out as far as its view with respect to comparison in terms of its peers is concerned. So Enviro Infra still trades at around 30 times. This is a trailing price to earnings, so 12 months trailing, 30 times, and it is. The only reason why it's going on at a little premium as compared to something like an EMS for that matter, or a Viatech Vabag. Viatech Vabag is also nearly in line, is the kind of growth that we are expecting from the company. Iron Exchange, again, 34%, but the growth here is also expected to be just as much. If we move on to the next set, something like a Viatech Vabag or a Vishnu Prakash, again, we're looking at a 31 times for Viatech Vabag. So a company which is much larger, but also in comparison, or can be compared to this one, which is why we'll give this a neutral rating. Now, if you consider all these factors, it comes down to what can your overall rating for this particular company be? Well, it's a thumbs up for the income statement, the order book, the balance sheet, of course. Well, it would be a neutral, and cash flows, well, it's been a little bit sticky, but we'll take that up with the management. And in terms of the other factors, a very strong return ratios, very good when well-held company in terms of shareholding. Its street credentials, well, it's a thumbs down because it's been a tough year or a tough few months for the entire broader market universe. In peer comparison, again, fairly neutral. So it gives us an overall rating of 5 out of 8, which is not too bad at all, especially given the fact that it's fundamentals are very well in place, at least at the moment, and it does have a reasonably good visibility for the year to come by. But with that, let's shift focus and hear it from the management itself. Earlier in the day, I was able to talk to Enviro Infra's Managing Director, Manish Jain, and here's what he had to say about the company's prospects and expansion plans going forward. Listen in.
Basically, there is a lot of interest in this water sector and a lot of work needs to be done in India. So this sector has got opened up and we have got the opportunities. There are various government initiatives under which various projects have come up. So we have tried to capitalize on those opportunities, and that way the growth of the company that has come. In future as well, since the sector is opening up and the lot of work needs to be done even in future as well. So that interest in the sector that will continue, and it is a longer duration for which the sector is available continuously, and then the work needs to be done. A lot of work is pending, and we see a decent growth going forward as well. We have been growing at a level of somewhere around 80% CAGR. We understand that we will continue to grow at least at a rate of 35 to 40% CAGR for the next 3 to 5 years further as well.
Okay, so based on that, if you could give us an idea about what are the areas and markets and geographies that you are currently present in? What are these areas that you're currently operating in? Scope for more projects in these areas, and whether or not you are in fact looking beyond these geographies as well.
The company is basically into various type of treatment, water treatment plants or wastewater treatment plants. So it is water treatment plant, a sewage treatment plant, or for industry, it is common effluent treatment plant. So that is the core domain of the company. Along with this, because the projects are coming up with the associated infra. The associated infra says it is pipelines, pumping stations. So as a whole, we are doing the entire infrastructure project as well. So the company focus will remain in this. The core focus will be the treatment plants. And the moment that treatment plant along with the if it is a capacity built up or a value built up, so that is how the company will look forward to go for the projects in future. Geographically, we are present almost pan-India. We are right now present in 11 states. And in future as well, we look forward to growing our geographies to the southern states like Telangana or Andhra Pradesh, Tamil Nadu. Then in northeastern states also, we are looking forward to some projects in Assam or Sikkim. So that way we'll look forward to increasing our geographical presence as well as the presence in existing states and increasing the size of the projects in our existing states as well.
Right. So Manish, at the end of December of 2024, your order book stood at a little less than 1,700 crores. Am I right? Please correct me if I'm wrong. And moving on, what does this current order book stand at? If you could give me that update. And of the current order book, how much are you expecting to execute in FY26?
You are 100% right. Our order book at present, as on 1st of January, it is stood at 1,700 crore. Approximately, it was at that level. And the order inflow, which is because it was an election year, so in the first half there were not many projects which were available for bidding. Or in H2 the position has changed entirely. So we have submitted our bids for a number of projects. To my understanding, it is somewhere around 3,500 odd crore for which we would have submitted our bids in the month of January and February itself. And these projects are expected to come up. Our success rate has been phenomenal. Our success rate on an average for the past 5 years has been somewhere in the range of 40%. So that says that the order inflow that will be decent enough in the coming months for the company. And that growth rate of somewhere around 35 to 40%, that is quite visible, and we'll definitely like to outdo those numbers.
Okay, so Manish, my follow-up there is that is this case true for you as well, that the fourth quarter, that is January to March quarter, is one where you see relatively higher number of awarding of projects coming through? Is that also a case for your company? And under those circumstances, can you give us some sort of a picture as to whether or not awarding has picked up? Because as the point that you made, last year, this time around, there was a slowdown in orders because of the general elections. But now that that is out of the way, what about this particular quarter?
I will say the order book is not related to the end of the financial year. It is basically the numbers. The Q4 numbers, the sale numbers are bigger out of all the 4 quarters. Q1, Q2 to Q3, these are relatively lower. Q4 is substantially higher in that way. In H2, the number of projects that are available for bidding, that definitely increases. So we might have that L1 numbers available. So the projects for which we have submitted our bid. So the projects are under evaluation. So once the financial bid is opened, so we'll be in a better position to judge whether we are lowest bidders for those projects. So it might not be possible that the projects may get awarded in this particular quarter. But yes, a decent visibility will be there in the project where we are lowest bidders.
Right. Manish, you guys have recently listed on the exchanges. So, post IPO, what does your balance sheet currently look like? Can you give me an updated debt number? I also want to know about whether or not you, at the moment, you're comfortable with this debt level, or would you like to see it reduced going further?
Basically, the debt level has got reduced by somewhere around 120 crores. So, in our IPO itself, one of the main objects of the IPO was to reduce the term loans by 120 odd crores. So, the debt level is in our books is somewhere to the tune of 240 crore right now. That 240 odd crores that contains the term loan from the HEM projects as well. Further, we are making our payments to our MSME vendors. So we are having our limits through TRADS as well. So basically, we are making those payments. So that amount is somewhere around 60 crores. So that also gets reflected in the term loan along with CC and OD limits. So basically, that entire loan portion, if we see, so it will remain steady at a level. Basically, the loan portion that has gone off, it will be the term loan, because we are executing various HEM projects. So, on a consolidation level, you will see that there will be slight increase in that loan portion. But it is certainly backed by some of the assets which we are creating. On a standalone level, if we see that the loan position that will be that has got substantially reduced, and we will be fairly comfortable moving at that level only.
Right, no, fair enough. And of course, given the fact that you guys are also expecting profitability to improve, I'm sure that some of that element of your of profits will also go to accumulated profits as well, which of course always strengthens your balance sheet further. That's a point taken as well. But then it comes down to cash flows as well. I just wanted to better understand, because in the first half of this financial year 25, we've seen an outflow from cash flows from operations, and of course it's had a little bit of an impact from net cash flows as well. Can you give us an idea about why this is the case? Because in FY23 this was not. You guys were cash flow positive, at least from cash flows from operations. So what's going on? If you could give us a better picture here.
If I give you a fair picture about the creditor cycle, basically there are two parts. One, we are making the payment to our MSME vendors within 45 days time, and that too is backed by the limits from RXIL and M1 exchange. Further, our non-MSME vendors, we are maximum purchasing the material through on LC. So our payment cycle in generally is that 60 days. So our total creditor cycle is somewhere around 68 days if I talk about 31st December 2024. The same number was somewhere around 120 days as on 31st of March. So there is a cash outflow, if I will say there is a cash outflow in terms of making the payment to our creditors. And then if we look back, there was a slight delay in JJM, wherein the payments have got a bit delayed. So that cycle has got increased. So that is how that cash flow, means cash flow from operations, that has turned negative. But the situation seems to be quite comfortable and in hands, and we are expecting that the funds which got stuck up or get delayed in JJM, these funds are going to be released in this month itself. So that feeler is there. So that cash flow from operations, we understand and we look forward to turning that to positive side within this financial year itself.
Right. Well, okay, that's the management of Enviro Infra Engineers telling us about all that is in store for the future, especially over the next few quarters, and how we could expect the company to see its growth shape up. But on that note, we are out of time on this edition of KYC. Stay tuned to NDTV Profit.
very, very warm welcome to you all for this NDTV Profit conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Very, very warm welcome to you all for this NDTV Profit conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit
Welcome to NDTV Profit Special Women's Edition. I am Mahima Vajrajani. Today, we are turning our focus on a group of investors in the stock markets. They are steadily but quietly increasing in number and they're digging their heels in for the long term. And I literally mean heels. Women investors are the subject of this unique conversation today. In fact, the latest AMFI CRISIL fact book data shows that more and more women are now investing in mutual funds and they have really taken to SIPs. 1 in every 4 mutual fund investors is a woman. This remarkable shift is not just in the number of women investing, but also in the average folio size. Women outpace men with a 24% increase in folio size compared to 6% for men between March 2019 to March 2024. Now, remember a recent SEBI survey also showed that women trading in futures and options recorded lower losses as compared to men. Now, what does this, tell us about women investor? Is she risk averse? Is she willing to want to create wealth, or is she simply, testing the waters? To discuss all of this, I'm joined by a very special panel of guests and members today, that is Millennial Mams Club, a non-profit organization creating financial awareness and literacy amongst women. The founder and mentor of the club, Bishnu Dhanuka, also joining us from Kolkata, and one of their gurus, Ace Investor Chairperson and Managing Director of Prabhudas Leeladhar Group, Amisha Vora, also joining us in the studio. Amisha, welcome to NDTV Profit and welcome to this edition of, Women's Day special. Before I, open the ground to all the beautiful ladies out there, my first question to you is, I would want to start with this question. Women investors definitely are increasing day in and day out, but a woman investor who's 21 years old today, who's wanting to test those waters, what is that one advice that you would want to give her?
First and foremost, thank you so much to NDTV, to Dhanuka ji and Millennium Mom to make this program on Women's Day. This is one topic which is so close to my heart, because women's financial literacy also encourages women's independent decision making, and in turn, progress and happiness in her life. So this is a very crucial thing. One advice to a 21-year-old, I will say that if she wants to start her journey of savings to wealth creation, please remember these two words. It is savings which turns into wealth. So you need to also learn to save in the first place, and wealth creation is a journey. It is not one infrequent dabbling into markets. So whenever you do a wealth creation journey, you have to first protect your risks so that your capital is intact, and over long term, it gives you a power which is much more than the money lying into a savings account is. That's the only thing this journey is all about. Measure your risk of what you are doing. Right. If you control the risk, outcomes are always going to be better.
Absolutely. So I think risk is one factor that one needs to, definitely measure when investing comes into picture. Very rightly said, Amisha. Mr. Dhanuka, I'll come to you. You formed this amazing not-for-profit organization, Millennial Mams, and it's very interesting, and I must really appreciate the kind of work that you're doing. My question to you is that what was the idea when you started this, and what are your foreseeable targets? I mean, right now, when I was speaking to your members of the club, they said that now you're globally also present. So what are the aims looking like, and what is the overall picture that you're foreseeing today?
Good evening, Mahima, and good evening, Mishaji. Actually, when I started this concept of Millennium Mams, I knew that there is a big need. We started 30 years back, and I knew at that time, and I know at this point of time also, that there is a big need, and that's why you will wonder that we are getting students from all over the world. Now, what Amisha ji is saying, that earning money and creating wealth, they are two different. We have mixed up both. No, earning money is happening all over the country, but whether they are able to create that money into wealth, for that, I simply believe that unless until you give time, as you are giving for your business or profession, give time at least 10 hours in a week. 10 hours in a week for wealth creation. Wealth creation will never happen. And there are so many factors to create wealth, but you should be very, very careful about risk. As Amisha ji has said, risk, first of all, if you fulfill certain conditions, then there is no risk. Like my guru, Warren Buffett, said, that there are two rules of the game. One is never lose money, and second is follow rule number one. Then I analyzed Mahima that how can he commits this type of thing. Then I understood if you follow his principle, you cannot lose money. You cannot lose money. So risk is also overplayed in the market. If you are following this investment module as science, then generally speaking, you cannot lose money.
I think what he said is completely right. If you use that investment module as science, you will definitely not lose money in markets. Amisha,
Yes.
you know, today there are, the technological progress has been, at such a large scale that a woman who's, even if she's a housewife managing her kids, she's able to trade or invest from home. I want you to, address those women out there, who can benefit from these technological advancements, and what would your advice be to these women?
So I think one thing which is very important, and which is what Dhanuka ji also emphasized, that for earning money, you invest your full day. So to make that money grow, also you have to invest some time. If you agree to this principle, then what happens is, man is busy earning money typically. If the two are not, both are not working, then women can very well invest this time to grow the understanding of markets. And as a first step, we also need to understand what is speculation, what is investments. That concept I don't think is clear. Anything hearsay, which you have not understood, even if it is investments with full amount, is speculation. Anything which you understand, that means you understand the risk, you understand the possibility of return, and you have a judgment, is investments.
Right.
Correct? So for any woman who's a housewife, if he wants to start the wealth creation journey, I would still say it is better to start with mutual fund.
Right.
Unless she undergoes that little training, that little reading, and creates that mindset,
Right.
then she should dabble directly.
Right.
In case she wants to trade, then she has to learn the techniques of trade also.
Right.
And developing that skill only will help her do trading or investments.
Right.
Rest, leave it to professional managers into mutual funds.
Right. So you mentioned mutual funds, and I think for somebody who's not doing their research, who wants to still make money, I think mutual funds and SIPs into mutual funds is the best way to make money, right? If somebody wants to start their mutual fund today, what would your advice be to them? That if they want to start an SIP today, what are the factors that you would want them to watch out for, and what's the first step looking like for you?
I think every time, whether it is in investments journey or any other decision in life, the first step is to do it.
Absolutely.
So what they need to really do it, start their SIP today. That is the beauty of a SIP, that it is averaging the entire period. So you are not taking call on market timing, which anybody, any which way cannot take.
Right.
You're not falling into those fallacies. You are averaging your investments, which will lead you to reach your goals. So starting a SIP is a minimum must if you want to start your journey. But beyond investing, I would like to take up one more topic here. When I say risk, one is the risk in the investments in the financial market. But risk to capital also comes when you are not fully insured.
Right.
So taking the right insurance for your life, for your medical needs, for your property is also an equally an important part of your journey of converting your savings into wealth.
Absolutely.
Else, some of these risks will eat away into your savings.
Absolutely, absolutely. Very rightly mentioned, Amisha. Mr. Dhanuka, your top 3 takeaways, because you've yourself been an investor. What are your top 3 takeaways from the investment journey that you've had so far?
Bhima, the first takeaway is panic is real. Panic is real. we should not act as a brave person, particularly after listening to NDTV Profit and other newspaper. No, panic is real because we are playing with our money. But don't get panicky, and that depends upon your entry point. If your entry point is very, very clear and strong, and you follow certain basic rules of the game, then you will never become panicky. One basic rule which I follow is invest in a company with 100% good promoter. 100%. I never compromise in this area. Now, 100% good promoter, panic is real, and third is by chance. If you have that courage to wait and wait and wait, like Mr. Warren Buffett is sitting on $324 billion cash in the bank and waiting. So by chance, if he goes right, it will be a big bonanza, and that's why my simple advice is opportunity meets preparedness, then it is called a miracle. Opportunity will come. You don't need to create that opportunity, but you should be prepared in two ways. One is bank balance, and second is your intellectual balance. Continue reading and reading and reading and reading. Something will come up, and what I believe, Mahima, if I get 5 good deals in my whole life, I'm done. Right. I don't need to think for 100 deals. That will never happen. So opportunity meets preparedness. Don't try to create opportunity. Opportunity will come on the platter, and continuously you have to prepare yourself.
Right. Opportunity will come on platter, but you need to know which one to pick from that platter. Very rightly mentioned, Mr. Dhanuka. Before I move on to the ladies, sitting in our studio, Amisha, one last question. I asked him his top 3 takeaways, but for you, because today's generation is the shortcut generation, one investment mantra that never fails for you.
So I have believed, of course, in quality, but quality and growth. That combination, I think, never fails. Because a number of times only quality stagnates so much that only the very deep understanding investor can stand by that sideways move. But when it is combined, quality and growth, it meets your portfolio requirement really well.
Now, we've also got, 10 members, beautiful members out there who are themselves also investors and are members of Millennial Mams. One by one, I'll ask them questions regarding their investment journey and how they have started their growth with Millennial Mams, and I'll also give them opportunities to, ask both of you questions, whatever questions they have today. I'll start with Nidhi, you first. Nidhi, he mentioned a lot of quotes and learnings from Warren Buffett. What has inspired you, when it comes to learnings from Warren Buffett?
So, Sir's taught us a lot, Mr. Dhanuka, regarding Buffett's teachings, and we've been reading a lot of his books and even the letters to shareholders he's written. And I think one thing that stands out is to stay away from noise. Living in Mumbai, it's not always easy, but obviously reading spending some time reading and learning, that helps. So staying away from noise, and also you can't really predict what is unpredictable, which is the market. So, it's okay to stay back, be cautious, and see what's going on.
Right. Stay away from the noise. As she lightly mentioned, in Mumbai it is not possible. But Amisha, if you can, try to break that down for our audience. Stay away from noise. How does one stay away from that noise? Because there is a lot of inflow coming in from everywhere, and how does one filter that out?
So noise in financial markets, and particularly if we take equity market, means that when a lot of stocks are moving up daily and your friend says, I made this money, your other friend says, I made so much money, you invest here, this is what is going to happen, that is what is going to happen, all that, and otherwise, when the chips are down, they take it down to another level.
Right.
Either ways is a noise. Right. So what is not noise? Not noise is really seeing what is out of all this is going to impact the business profits, and valuation.
Right.
That trio ultimately defines markets in medium term.
Right.
And if you set your sight right on this, then rest is all noise.
Right, absolutely. Shweta also has a question. Her question, Shweta, in fact, before I go to your question, I would like to ask you a question because you yourself are an investor. So far in your investment journey, what has been the biggest lesson that you have gathered that you would want to share today on this platform so that other women investors out there don't repeat the same mistake?
Thank you, Mahima. I think my biggest learning is to start early. I was not lucky enough to start as early as 11 as Warren Buffett or even later. But one message to all women watching this show, we have to start early so that we all can live to see the power of compounding of our investments. So that's one of my biggest learnings in my journey.
Absolutely, and I think that is a learning that everybody should consider, and that is why that's the probably the message that we are trying to get you through this show, that as a women investor, as anybody out there, start as early as possible because compounding otherwise won't work in your favor if you
I'll just add without you asking.
No, definitely.
I just became a grandma.
Okay.
And to my granddaughter, I gifted investments.
Perfect.
Without buying anything else, I said, let me just plan from day zero her investments.
Absolutely, and that's the perfect gift that you can.
Correct. That's the ultimate power of compounding unfolding.
Absolutely. Arshia, I'll come to you. You have a question for our gurus out there. What's your question, and whom is your question directed to?
Yeah, hi. Hi, Amisha. My question is directed to you. I would like to ask, in such current volatile times, the PSU banks and the oil and gas, they are underperforming. So what would be a contrarian approach in such times for investments, if we have to look at it?
No, I wouldn't say a contrarian approach. I think the underlying principles of investments still remains good management, defined in so many ways, good growth at good valuation, right? So when it comes to oil and gas also, there are many parts to it, but that business thoroughly is a commodity business. So you cannot make a compounding out of a commodity business anyways. When it comes to PSU banks, when you are extremely undervalued, say at 0.3 price to book, 0.5 price to book, yes, you will go to a slightly better, say 1.1 price to book. But their ROA, their ROE can typically always be lagging the private sector, which is faster in decision making, better in decision making. So if they have fallen, they have just come back out of the euphoria, if you ask me. And I would still say in this panic, you can't choose them. You have to still, because you're getting everything on your platter. You're getting better businesses at better valuation. So you need to do a little more homework, I would say.
All right. So Bhakti also has a question. Bhakti, who is your question to?
So my question is also for Amisha. The question that I have is that in the current geopolitical tensions and with the new US tariffs, should investors like us be concentrating or focusing on domestic stories?
Certainly. See, what markets are exhibiting right now is what we understand, or I believe, is that first a little bit of derating started happening. Then the economic slowdown, because re-rating of the markets were extremely heavy with huge new savings and investors coming in. Then little bit of economic slowdown. Now what market is facing at this juncture is even profits going to derate with the tariff structure. Tariff structure can possibly disturb your exports or bring competition through imports, correct? So it can impact either side. But safer haven, yes, could be domestic consumption, but even that will require a little more deeper study as to how that segment is protected. One fillip which has definitely come is almost 1.5 crore people will have something like 50, 70, 80,000 rupees in their hand which will definitely go into some form of consumption. And markets have just not paid any attention, and they are into complete reeling due to global geopolitical or other factors. So I think coming few quarters, we will start seeing that stability in our domestic demand. So that's the focus to look at.
Thank you.
Krishma, what's the question that you would want to ask our gurus?
Thank you, Mahima. So my question is directed towards you. So shifting gears from unorganized to organized sectors, how will the logistics and warehousing growth in India help Viksit Bharat?
You're asking me, Krishna?
Yes, I'm asking you.
I am a big fan of businesses moving from unorganized to organized sector, and we have got the best example of Titan. They have taken the maximum advantage of this. And my takeaway from what you are asking is definitely logistic and warehouse will be the next big story from unorganized to organized, because as our Prime Minister also mentioned, that we have to reduce our logistic cost if we want to succeed in export. So a lot of things are happening in this area. Maybe there are very few listed companies in this area, but this will happen in a very, very big way.
All right.
So,
all right.
I'll just add here a couple of things.
Yeah.
So when you talk about logistics, that forms a very important part of the cost structure. It is between 8 to 10% typically of any business. And as you crunch that and make it globally comparable, your export competitiveness improves. So we are working not only on our ports, on our loading, unloading days, in our container freight stations. So this is also the chain which comes very handy, and automation and digitization of that. And I had done one podcast, so I know that India, in terms of port operating time, now is almost close to Singapore and Malaysia, which is a great achievement. Coming back to your question, you know, how this can impact the investment opportunity, I would say that anything which falls into this chain, whether it is a container freight station, or something, their income model typically is rent. So it's an annuity business. Once again, you might get opportunity to invest in business which compounds. This will be you invest and you get some return, right? It can have growth, but always for growth you need capital.
Yeah.
You need to search businesses which needs less capital for growth, so the impact of compounding is higher.
Right.
Thank you.
Right. So one more question from Meenakshi.
Hello, Mahima. Amisha Dhanukaji. Namaskar. So I had our guru Dhanukaji. He has taught us a lot about his guru Warren Buffett. And when everyone is greedy, be fearful. And when others are fearful, be greedy. So Amisha, I would like to ask you a question. In the current scenario, how can we leverage as women the current scenario to create long-lasting and great wealth for ourselves?
So markets have started becoming fearful. Are they really showing a level where all fears are, when all fears are there, typically the levels at which you get is at historic 8 to 10 times. Markets are at 26 and 27 at 18 to 20 times. So there is still time when you get just a complete sale which is happening on the stock market. When you get that, as what you said, remain prepared. What is that few businesses on your radar which you are getting at that discounted price, which you will never fail? We are reaching and approaching that almost, I would say. Are we there yet? I don't think so.
That's the best way to, end this conversation. Thank you so much, Amisha, Mr. Dhanuka, and all of you, all Millennium Mams out there. Thank you so much for taking out time and, giving us all those insights at NDTV Profit.
warm welcome to you all for this NDTV Profit conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Reviksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Very warm welcome to you all for this NDTV Profit conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure,
Hello and welcome to NDTV Profit. You're watching Profit Buzzers. This is Hiral Dadia. Let's quickly take a look at how the markets are faring at this hour. Overall, if you see, there is some bit of profit booking that is coming in on this Friday from the day's highs of 22,633. We have seen a downtick to the tune of almost around 100 points. We're trading around 22,550 on Nifty 50. So pretty much on the broader lines as we opened up. Let's quickly pull up Bank Nifty as well and see what that is doing in trade. And after that, we'll see the sectoral heat map. There you go. Cuts of almost 100 points coming in with regards to Bank Nifty as well. So there is selling pressure that has started to trickle in. Which sectors are holding on? You have names like Nifty Media, which is holding up to gains. Oil and gas, infra, metals and energy are up. Auto is up around 0.2% as we speak, as well as you have the PSU Bank Index as well, which is trading in the positive. IT has been a downer this time around as well. So if you see in terms of Nifty IT as a sector, 1% is the kind of cuts that we're picking up on that front. Apart from that, you have real estate, which is taking a beating today. FMCG is also down almost 0.2%. And in terms of the VIX, we are almost down around 0.8%. So not much on that front. Let's look at what Nifty 50 gainers are looking like as we speak. If we can just get the heat map on that front, there you go. RIL is contributing nearly 62 points, and that's what is balancing the act out right now. But apart from that, Infosys, NTPC, HCL Tech and ITC are the ones which are putting pressure. Axis Bank, again, Bharat Electronics, TCS, no major contribution coming in from that end, but we are seeing some bit of positive moves there. Let's look at the mid-cap and the small-cap index from here on, because overall, if you see in terms of broader markets as well, the pressure has come in. You've started to see that selling which is coming in now, which has started to come in now. From the highs of 18,453, we've seen a sharp correction right now on mid-cap 150, as well as if you can just pull up small-cap 250 as well. That will also give you a similar trend as we speak. There you go. But it's still trading marginally in the positive with gains of 0.8% coming in there. In terms of stock-specific action on the broader markets, you have names like Inox Wind, 10.5% up move on that one. Triveni Turbine is trading in the positive. Data Patterns, Spark, as well as Zentech. These are a few of the names that we have been watching out for. On the losing end, you have names like MGL, which is under pressure. Gensol is trading under pressure. Pesalo is another one which is under pressure as well in today's session. Overall, if you see, where are the, which are the names which are seeing a good turnover today? Supreme Industries, Suzlon, Mazagon Deck, HDFC Bank. These are the ones which are seeing a good volume in terms of trade today as well. So watch out for these names pretty closely. And in terms of the trend list, names like Brigade Enterprises is in focus today. So you have that one. Kalpataru Projects is another one on the back of an order win is in focus. RVNL is in focus as well. Nykaa on the back of a brokerage note is in focus in today's session. DLF is another one. Quest Corp on the back of the NCLT approval with regards to the demerger is in focus as well. So lots of stocks, but Quest Corp, which started off the day with gains of 6.5%, has seen a good amount of cool off as we speak. So that's with regards to what's happening with individual counters as well. But moving on, first, let me introduce you to all the guests that are coming in as well to join us on this show. Firstly, we have Akshay Bhagwat, Senior VP at JM Financial, and Neerav Asher, Head Equity Research Analyst at Latin Manharalal Securities Private Limited. Gentlemen, welcome to the show and a very good afternoon. But before I come to you with any question, first up, we will look at one of the companies that is in focus as we speak, and that's a Quest Corp. Let's pull up that stock. We saw it's up around 1.5% in trade. And this is on the back of the NCLT approval that they got on the back of the demerger. Now, Mika is standing by to get us all the details. Now, to be noted that the conversation about the demerger had already happened back then in February 2024, and now is the NCLT approval and the ratio in what the splits would happen. Let me head across to Mika to get us the details. Mika, good afternoon. Over to you with regards to Quest Corp.
Quest Corp is buzzing in trade, and this is because the company's finally gotten the NCLT nod for its three-way demerger, which was announced about a year ago. Now, the demerger aims to simplify organizational structure, and all three companies are to be separately listed. In terms of what will Quest Corp be demerged into, well, the first company will be called Quest Corp. They will house the workforce management business. Then the second one is Digitide, which will house the global tech solution business. And the third entity is Bluespring, which will house the operating asset management product-led business. In terms of the target shared by the company at the time of the announcement, well, Quest Corp aims to achieve 30% margins from its international staffing, and they also aim to be the largest WFM player with a headcount of 602,000. In terms of Digitide, they target a $1 billion top line in the long run, and they also target annual revenue rate of $100 million for founded by FY30. Lastly, in terms of value unlocking, well, management does believe that each standalone entity will create more value than a consolidated entity, and then the resources will be dedicated for incremental growth. And because of the demerger, the capital allocation will happen at an individual entity level, and then the independent entities will be able to provide more clarity to their investors.
Right. Thank you for getting us the details, Mika, in terms of what it would mean from here on. But Akshay, let me come to you. How are you looking at a Quest Corp? Today you're seeing gains of 1.5% right now, but I mean, what's your view?
Good afternoon.
So technically, if you look at the weekly charts, I believe it's been 5 long weeks that the stock has built a firm support base at the level of 600. So a firm support has been built. Now the momentum is catching up with the news which you just broke. And it's more of a trading pullback, which I see looking at the short to medium term charts. 700 to 725 is the target zone you can look forward to with a stop loss of 597. So it's a buy for short term or hold for short term with targets of 725.
So 725 is the target price with regards to Quess Corp. Nirav, coming to you with regards to the demerger, do you advise investors to enter at current levels? Do you think there could be benefits coming in for them?
Well, good afternoon and thank you for the invite. And I think it's definitely this three-way demerger is going to be a positive. But I think it will take some time for the gains to trickle in, because we have 3 divisions, and out of that, I think the staffing, the international staffing businesses, as well as the technology side of the businesses, we've seen generally staffing has been going through a kind of a lean patch at this point of time. At the same time, technology too has not been doing that great. So I think while this is a step in the right direction, it becomes an ideal time to accumulate the stock, because we are likely to see benefits accrue over a period of time. But I think it's going to be a slow burn, so it should be accumulated with a medium to long-term horizon only.
Right, so that's with Quess Corp. But moving on to an NDTV Profit exclusive. Gold loan lenders are on the RBI scanner. RBI has actually asked internal auditors to attest if banks and NBFCs are in compliance with September 30 gold loan circular. My colleague Vishwanath Nair joins in with more details. Vishy, what are the exclusive details that you've picked up so far, and how does it impact companies like a Muthoot and a Manappuram?
So sources are telling NDTV Profit that the Reserve Bank of India has reached out to the internal auditors at banks and NBFCs to verify a compliance report to ensure that these lenders are in compliance with the RBI September 2024 gold loan circular. Now, what has exactly happened? In September of 2024, the RBI released a circular where it said that it had found a lot of deficiencies in the way banks and NBFCs do gold loans, and certain specific instances were pointed out. And the RBI had asked banks to comply with the existing norms by December 31st, 2024. After that compliance was achieved, banks were expected to submit a compliance report. And now these independent or internal auditors will review this compliance report, will review the bank's actual operations, and tell the RBI whether this compliance is in order or not. Now, why is this important? Well, essentially, this is the first step in a complicated process of supervisory actions that the Reserve Bank of India takes. Once the internal auditors report is in, the supervisory teams of the Reserve Bank of India will review them, and then if there are any non-compliant lenders found, then action will be taken against them, and these actions could range anywhere from punitive damages to some kind of business restrictions, depending on the gravity of the non-compliance. What does the RBI want these lenders to do? Well, essentially the RBI wants lenders to better monitor the end use of funds. So borrowers, when they take money while pledging gold, what are they doing, and whether they're doing exactly what was promised to the lenders before the loan was approved. The RBI also wants better processes in assaying the gold, which basically means that valuing the gold that is pledged to them, and a better process will ensure that a better value is determined and the borrower and the lender both are favored properly. Why is this important? Well, essentially, gold loans have been growing very, very sharply, 76% year on year as of January. That's the amount of gold loans, the gold loan growth in the banking system alone. And that's why the RBI is a little bit concerned, because gold prices are also going up. So it does not want lenders to expose themselves to any problematic behavior.
Right, so these are going to be tighter norms with regards to where gold loan companies are concerned. Nirav, your view, and how are you seeing this actually go ahead and impact companies like a Manappuram as well as a Muthoot?
Well, I think it would have a limited impact, because we've been seeing since the past few days, RBI has become a bit vigilant, more vigilant. We saw this with respect to Bajaj Finance, also with respect to the perpetual credit instruments and the rollover relating to the same, how RBI has become vigilant with respect to that. I think similar sort of thing is happening in the case of gold loan companies. Of course, the prices have been going up, as you rightly pointed out. Prices have been going up, and at the same time, the volumes have been going up. But I think one important factor, as it was pointed out, that internal audit teams are supposed to prepare the reports, and the same is supervised by Reserve Bank of India. So not sure how it really works, because internal auditors are reportable to the management of the company, so that there would be some element of bias over there. So that is I think something which needs to be verified. And I think, of course, RBI in all its capacity is definitely going to take the necessary checks and balances. They will ensure that things are in place. So I think it's likely to have a limited impact going forward.
Right. Akshay, coming to you, if you have to look at both the charts, you have a Manappuram which has clearly outperformed a Muthoot in 2025 so far. What would your advice be? Are you still a buyer?
Well, if I look at both the charts, both the price structure is still positive from a medium to longer term perspective. But at this point, if I were to make a selection out of both, I think Muthoot Finance has yet to catch up. Overall, the trend is very strong. It's just that the last couple of months has seen more of a lackluster range bound trade. But one clarity is emerging that 2100 is a strong support base the stock is building for its next leg of up move. So I will continue to hold or be a buyer. 2050 is a strong support, and the expectation is that this stock should move out of this range bound phase and aim for a new high, which should be around 2400 to 2450.
Right, so that's with regards to Muthoot Finance. But moving on, three companies that are on our radar today are Bharat Electronics, Kalpataru Power, as well as Kalpataru Projects, I beg your pardon, and RVNL. And this is on the back of the orders that have come their way. In fact, Anushi is with us to tell us more. Anushi, three companies on the back of order wins. If you get us more details on the same.
So I'll start off with Bharat Electronics first. Now they've won a 577 crore of order win, and now this order is significant for the company as it takes its order intakes about 13,724 crore. In fact, the company has guided for a 25,000 crore of a guidance by this end of financial year. So it's very important for something like a BEL to pick up in terms of where the order inflows are concerned. Even if you look at the order book positioning of the company, that remains on a strong footing. We are looking at an order book of around 71,100 crores. And in the next financial year, the company expects some big ticket orders which pertain to the QR-SAM, that's the quick range surface air missile, in the range of 25 to 30,000 crore, along with some next generation Corvette orders that is in the range of 14,000 to 15,000 crore. So Bharat Electronics, one of those counters in focus in the defense space. Now, Kalpataru Projects is another counter which has secured orders worth about 2,306 crores, and this pertains to orders in their transmission distribution business in the overseas markets, along with some building projects in India. If you look at the order book of Kalpataru Projects, that stands at about 22,500 crore, and in their order book, which we see by the end of the last quarter, and that stood at about 61,429 crore, representing about a 19% of a YOY growth. Lastly, in the last one on the focus is something which has been buzzing because of a last couple of order wins that we've been seeing, that is RVNL. They have received a 156 crore of a letter of acceptance award from Southwestern Railway, and the order execution period for this stands about 18 months. Now, do note that the company had just received another letter of acceptance award for a 729 crore of a project, and this was from the Himachal Pradesh electricity body, and that was to be executed in next 2 years. If you look at order book position of RVNL, that stands at about 98,000 crore, which the management is quite optimistic that it will reach to the levels of 1.5 lakh crore by FY26 end. So these are the couple of stocks which are in focus on the back of their order wins.
Okay. So thank you, Anushi, for getting us the details, and we'll come to the JP Morgan on BEL as well shortly. But Akshay, coming to you, let's first talk about two stocks, that is BEL, that's Kalpataru Projects as well as RVNL. What are charts indicating to you for both these counters?
Well, firstly, for Kalpataru projects, the last 5-6 months has been more of a rough patch. We have seen a correction sharply from 1400 to 850. There has been more of a technical bounce, which I see lately, and especially the last volumes. The volumes have been significantly higher than the last couple of years. So that's a good development, but it's going to take some time for it to recover. Right now, it's in the process of forming a support base. So from a longer term perspective, with minimum 1 year plus holding, you can continue to hold 800, 850 the support zone, and a respite rally can see the stock testing 1100 from a short to medium term perspective. As far as RVNL goes, technically this stock too is positive from a longer term perspective. Short term, yes, it's in the process of finding a support, whether it's 300 or 270, that's a slight question mark, but still there might be some more pain left in the short to medium term. So you need to keep a buffer of 300 to 270 on the lower end. That can be tested, but eventually from a longer term perspective, things should be back in the place.
Right, so that's with regards to RVNL as well as Kalpataru projects. Nirav, coming to you, Kalpataru projects, the order intake till date is around 22,500 crores. Good order book growth as well is what we've seen so far. And let's just quickly pull up a 1-year chart of Kalpataru projects and see what the counter has done in trade and if there is any further value, because they go 10 to 11% is the kind of downtick that we've seen in the counter. How are you looking at the Kalpataru projects and the sector as a whole?
As you pointed out, I think there's been strong order inflows. The order book has been quite strong, but I think the execution is likely to weaken. Market could be apprehensive on that front. That is one factor. The second factor is that we've seen a general slowdown in the economy during the last 3 quarters. During this period, I think what we tend to see is that when there's a slowdown, basically the payment cycle tends to get impacted, and you see a trickle down impact on the contracting firms. And this company, of course, is into EPC contracting, that is engineering, procurement and construction on the T&D side, transmission and distribution. So while the orders are quite good, the order inflows continue to be very strong, but I think execution will be a key monitorable, and the quality of the margins is going to be a key monitorable. I think they've been hit on the margin side because when you are in the expansion phase, naturally you tend to invest more in plant and machinery, which increases the depreciation burden, and the finance costs tend to be on the higher side because you're carrying a lot of receivables and inventory on your balance sheet. So I think that has taken a toll on the margins, and I think with margins coming under pressure, we've seen valuations come under tremendous pressure. That's what we've been seeing in the stock.
Right. So that's with regards to where Kalpataru projects go. And Nirav, what's your view with regards to RVNL and railways as a sector? Because since the last 2 budgets, if you've seen railways, the kind of allocations that have come through are very less as compared to what the street or the industry as a whole was expecting, right? But the kind of order book that is coming in, do you think it's still a good way to look at a RVNL?
Well, I think orders have started catching up a bit, but I think what has happened in the case of RVNL is that margins have moderated quite a bit. They have guided that margins are likely to come under pressure. There were certain contracts which were given on assignment basis by the government. Government used to nominate RVNL for certain contracts, and now, of course, the stance of the government has changed. Government has hinted to these companies that they should bid in the open market for contracts. Now, when you go in the open markets to bid for contracts, naturally the margins tend to come down by 2 to 2.5% at least. And this has put pressure on the margins of RVNL. To make matters a little bit more complicated, the configuration of the Vande Bharat trains has been delayed by around 8 to 9 months. So I think this has impacted the overall perception of the stock in the minds of the investors. I think all these factors taken together, coupled with pressure on the margins, a little bit of a slowdown in the execution and decision making flip-flop from on the policy side, I think all these factors have put tremendous pressure on the stock.
That's with regards to where RVNL goes. Now, we already looked at a BEL in terms of the order win, but you also have a JP Morgan, which has come up with a report on BEL. They've maintained an overweight and they have a target price of 343 on the counter. Now, what they are indicating is that the structural growth with regards to a BEL is strong and the order announcements are expected to be absolutely strong going ahead as well. So, this is in the coming months. Now, they're seeing a 20% correction from the peak that has already happened. So, hence, there are good entry levels to look at a BEL currently. In terms of the defense capex, it's a strong one to play. And they are expecting a possible order inflow of almost 12,000 odd crores by the 31st of March. So, in this month itself, 12,000 odd crores is the kind of order flow that JP Morgan is expecting for a BEL. And this is what probably will act as a near-term catalyst when the stock price stock price has to be taken into consideration. Nirav, with what JP Morgan is indicating, an additional 12,000 odd crores that could be on the radar by the 31st of March. Too good to be true as well. But how would you look at it, and would you think this is a catalyst to enter the stock, taking the correction that has already come into play?
Well, in the case of defense stocks, I think markets were apprehensive about the lumpiness in the defense contracts and the longer approval cycles. But I think BEL has been a very consistent performer. If you look at the results, the previous few quarter results, very stable set of results, very stable, predictable performance, very good quality margins having been sustained by the company. And I think even if there were a slight delay in the order inflows, I think this correction definitely warrants an entry into BEL at this point of time.
Right. And Akshay, to you, the correction should be bought into now?
Yes, definitely. From a longer term time horizon, I believe the correction of around 20% which we have seen from the all-time highs has finally ceased around 240, 250. So a firm support base is in place, and the next round of rally should unfold, which can see the revisit of 320, 325, and post that you can look forward for targets of around 375. So yes, it's one stock which should be accumulated in the range of 260 to 275 where it currently trades. 240 is a firm support, and possibly you can work with targets of 340 and 375.
Right, so that's with regards to BEL. But guys, let's quickly slip into a short break. We have lots more lined up on the other side, wherein we'll talk about Canfin Homes, Adani Ports. You have the steel sector that will be in focus as well. So lots to talk about. Please stay tuned to NDTV Profit.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers, and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Reviksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Very, very warm welcome to you all for this NDTV Profit conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every anlom, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers, and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Reviksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Very, very warm welcome to you all for this NDTV Profit conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
Welcome back. This is Profit Buzzers. Well, to very quickly address what's flashing for you on your screen, but we understand the Supreme Court has refused to stop the Dharavi project construction work and the refusal to stay the decision of the Bombay High Court. In fact, the Supreme Court has agreed to the argument of the Adani Group that the work has started on the Dharavi project, and the Supreme Court has heard the appeal against the order of the Bombay High Court, in which the petition was filed by Sectiling Technologies Corporation, which was in fact dismissed now. So, of course, this is positive news for Dharavi, and well, the ongoings there, and of course, naturally, a good news for the Adani Group as well. But we shift focus to BSC, which has in fact been under pressure for a few days now. This is after the NSE shifted its expiry day to Monday. Earlier, the regulator had proposed a few new norms, including change in the calculation method of open interest. How is the company planning to tackle all this? My colleague Charu spoke to Subramaniam Rabamurthy, the MD and CEO of BSE, earlier today about both these aspects as well as how this can be tackled. Listen in.
We are a market infrastructure intermediary. Whatever is the voice of the customer, that's what we implement. When we implemented Friday, that was based on market voice. When we implemented Tuesday, that was based on market voice. Whatever market advises us, that's what we will do this time as well. As far as the share prices, for us, share prices are outcome. What is the main purpose for which we exist? To provide a well-governed, well-regulated marketplace with products what the market want. That's how we will look at it.
Well, we do have Nirav Asher here with us. Nirav, good afternoon. This is Agam here. A lot has been spoken about BSE and all the challenges that have come to the fore for this particular company. BSE was one of the few companies which had actually not corrected as much. Just before a few days ago, it had held on to, its levels. Of course, after that, we had a bunch of, updates coming in, which is why we are now starting to see a little bit of correction come through. One, what are you making of the latest developments? How does this impact exchanges like BSE and the NSE, of course, which is later going to be expected to, list, as well as the valuations, even at this point in time, keeping the growth in mind right now?
This is for me?
Yes, Nirav, this is for you.
Yeah, good afternoon. Actually, we feel that BSE stock was pretty kind of insulated from all the developments, considering the fact that they have a very robust operating model. But at this point of time, I think there have been a few headwinds and challenges which BSE stock is facing. One, the competitive intensity has gone up sharply, and we have NSE, which is also trying to compete in a very fierce manner. That is one. Secondly, the market conditions have also not been exactly very favorable, and there have been sharp decline in the volumes as well. So I think a couple of these factors, which can be treated as kind of seasonal factors. We do see ups and downs in the markets. So I think this this can be a good opportunity to accumulate the BSE stock from a medium to long term perspective.
Okay, so we'll keep that in mind. Of course, at the moment, BSE is at around 4,200 rupees per share and some pertinent ones. But let's move on and take a look at some brokerages as well. Adani Ports remains in focus even as Goldman Sachs maintains a buy with a rating on the stock. And Harsh now joins us to give us more details. Harsh, over to you.
Well, Adani Ports and Goldman Sachs seems to suggest that it's got good legs to go. 24% upside is what Goldman Sachs currently gives to Adani Ports, 1,400 being the target price. Three key levers. One is new port ramp up. Second is growing inland logistics. And third is reasonable valuations. Three things make Goldman Sachs positive on Adani Ports. They're saying that the logistics revenue as well as EBITDA will continue to grow much faster in the medium term. Adani Ports, with close to 27-28% market share in the India port volume, continues to be in that position of strength, quote unquote. That's what they say. And FY26 growth outlook for the company looks better than FY25, coupled with reasonable valuations. All of these factors line up very well for the company in terms of the story to play out, and therefore the kind of target price that they've given.
Right, Nirav, this is back to you. A promising story playing out as far as Adani Ports is concerned with the kind of dominance it already has in the port sector. What are you making of this one? What are you making of the company as well?
Well, I think as far as Adani Group is concerned, Adani Ports and SEZ is clearly a jewel in the crown. And I think this is on account of the superlative performance the entry barriers which are there for the port business, the way they have scaled up their 15 ports, the way they have managed to expand outside the country as well, and very efficient scale of operations, very good technology implementation also, very strong cash flows. I think last count they were doing EBITDA margins in excess of 60-65%. So very strong cash flow generation also. Unfortunately, I think due to the global factors and of course the turmoil in the markets, I think the stock has corrected. But this gives us a very good entry opportunity at the current levels to enter with a medium to long term perspective. And not just Adani Ports and SEZ, I think even we are beginning to see good traction in JSW Infra as well. So we have very limited listed players in this particular space and quality players. So definitely both warrant a buy at this point of time.
Of course, standard disclaimer here that the channel that you're watching is also an Adani Group entity. In fact, NDTV is a subsidiary of the AMG Media Networks Limited, an Adani Group company. But we move on and talk about yet another brokerage note, and this one is on Canfin Homes. We have Ambit Capital upgrading Canfin Homes to a buy, and they see a 17% upside from current market levels. We have Harsh back with us to give us this detailed report. Harsh.
Well, second upgrade in 2 days now for Canfin Homes. Ambit this time with the upgrade. They've upgraded to a buy, 17% upside from here, and 710 being the target price. Now, what they're saying is that the de-rating in the stock was largely due to growth concerns. Growth concerns have crept in, at least in FY24 and 9-month FY25, but that, according to the brokerage house, seemed to be waning in the next year or two. And in the meantime, the stock has derated sharply and now valuations look reasonable. That's what the essence of the note is. What they're saying is property documentation digitization drive has hit registrations in Karnataka, which is 34% of Canfin's business. That currently is the overhang at this point on the business, and the consistent growth misses is what has led to the derating in the stock. So therefore, as growth starts to kickstart, you would likely see the stock re-rate as well. They expect PSU, or rather PSU-backed home financier, good growth visibility, 17% kind of ROE business, and therefore they are pretty constructive overall on the business as a whole, and therefore the upgrade.
All right, Neera, how are you looking at this NBFC space, particularly a name like Canfin Homes? Your view here?
Well, it's definitely a quality player in the housing home finance business. But I think it would be better to wait for a couple of quarters before we see some tangible improvement in the numbers. Let us see how they are able to get back the growth, whether they are able to manage the growth expectations or not. And only then venture into the stock. So I think one needs to approach this stock with a little bit of caution.
Okay, approach with a little bit of caution given the strength, but on to another set of stocks in focus, and this is the entire packet of steel. In fact, we have been, they've seen a lot of strength of late in the last couple of days. This is on the back of the China stimulus. JP Morgan now weighs in on a fresh brokerage note. What's driving the surge? Can the momentum last? Mihika now joins us with more details here. Mihika, over to you.
So let me start with JP Morgan's strategy when it comes to the steel sector. They do maintain a positive bias and they do suggest to accumulate stocks on dips. They are overweight on JSW Steel and Tata Steel, while they're neutral on Steel Authority of India. Now the note comes after steel stocks have rallied, especially in the past week, on positive policy tone, whether it's the China NPC meeting commentary, the Germany Infra Fund announcement, as well as the potential safeguard duty imposition by the Indian government, which has been in the talks for several months now. But the problems with these factors causing the rally, JP Morgan states that the scale of the China steel output or production cut is yet to be known. The 500 billion euros Germany infra investment is announced, but will be spent over 10 years in terms of your time period. And the safeguard duty investigation, as per some reports, may also take 6 to 9 months more, even though the industry expected the duties to come in February. Now, if this rally is sustainable, they do believe that the EBITDA per ton has likely bottomed out for steelmakers. This is as per the Europe and India's steel spreads. The potential demand destruction from the US tariffs can also cause investor concerns, and JP Morgan does see a low possibility of supply side reforms in China. And even though the stimulus have been announced, they do expect the housing sector in the tier 2 and 3 Chinese cities to see a mild downtrend.
Right. Nirav, what are you making of the steel pack at the moment?
Well, I think we believe that this could be a short cycle rally as far as the steel stocks are concerned, because still we don't have any clarity on how much China is going to reduce in terms of its output. There is no clarity still on the safeguard duty also, as you rightly pointed out. And the third factor is the US tariffs. If there is an aggressive levy of tariff, then I think we could see the dumping increase from China. Such concerns still prevail, could come back to the fore again in the near term. So I think it's best to keep exiting at the higher levels as far as the steel stocks are concerned.
Well, interestingly, we also have a UBS note which has upgraded Nykaa to a buy, but it has also cut its price target to 200. It's still a tad way off from that particular target. It's currently trading at 164, 165 odd rupees. What's really happened is that while it did start the day with a lot of strength, it has now wilted under pressure and gone back into the red. The question really is, what is UBS making of Nykaa? Well, Mahima now gives us an update on this one. Mahima.
Right, so in terms of UBS or Nykaa, they've upgraded to buy from a neutral rating, but they've cut the target price by a tad bit from 205 to 200 is the target price that they've now pegged. They're saying that the BPC performance continues to surprise positively. BPC has witnessed accelerating growth amidst the weakening macro-aided factors as well. And this is on the back of customer acquisition focus as well. In terms of the overall investments in logistics, that has also improved the overall delivery days as well. In terms of the next factor that they are bullish about is that the BPC growth is improving and margins are holding up, and this is despite of the competitive pressures, the discounts that are coming in from different listed as well as unlisted competitors. In terms of fashion, management has rightfully taken a calibrated approach, is something that UBS has liked, and this is after limiting marketing investments, so that might aid margins and revenue going forward. So this is the overall note as to why UBS is positive on Nykaa.
Right. Nirav, Nykaa has been consolidating for a very, very long time within a very narrow range. What are you making of this particular counter?
Well, I think the consolidation still continues, and I think that is probably the reason why the target prices has been kept just almost intact with a bare minimum correction. And I think while beauty and personal care and fashion, they have a positive outlook. But I think there are still better bets in the market. I think we would prefer a shopper stock as compared to Nykaa from an investment perspective.
All right, Nirav, we'll leave it at that. Thank you so much for joining us and taking us through your views on the many stocks and sectors that we have spoken about. With that, I want to bring back focus to tariffs, where we have, in fact, spoken a lot about that, which has been a talk of the town since Trump has assumed power. As of this morning, several tariffs announced on Canada, Mexico have been delayed. There's also been a lot of chatter around the impact of these tariffs on India. As tariff differential between India and the US is the highest, we spoke to Pranjal Bhandari. She is the chief India and Indonesia economist at HSBC to quantify this impact. Listen as to what she's making of this aspect.
India generally is a very high import tariff economy, and it has been for the last decade. It's almost like we didn't notice it, but now that President Trump is talking about it, everybody's really sitting up to it right now. The truth is we've had this for the last decade. I don't want to underestimate the pain if new tariffs are imposed on India. Like, for example, if we see reciprocal tariffs imposed by the US on India, my back of the envelope calculation suggests that several sectors will get impacted, and overall GDP growth in India could fall by about 0.3 percentage points. That's not an insignificant number. So there's definitely short-term pain out there.
All right, and now it's time to put the spotlight on Balrampur Chini. Well, on the occasion of International Women's Day, we thought that we'd get in a lot more perspective around the respective sectors that a lot of these ladies actually deal in. And well, we thought that this is no better time than now to bring Balrampur Chini in focus. And we are now joined by Avantika Saraugi. She's the Executive Director at Balrampur Chini Mills. Avantika, thank you for joining in. Your journey with the sugar sector, as it has always been highly unorganized, in a highly unorganized industry and a highly labor intensive. How did you embark on this journey?
So this is, of course, a great question. I guess I get this question asked a lot, and I love answering it because I get to talk about my grandmom. So actually, my journey is very different, I think, than any other maybe woman's journey in the sugar industry, because it was my grandmother who led our company before my dad did, and not my grandfather. So actually, in my situation, people were quite used to having a woman leader. You know, it was never really a problem that I was a woman, on top, because they had always seen my grandmother for, 30, 40 years in the business. So in fact, Madam Ji Wali factory is how our factories are known. And now there's another Madam Ji. So it's actually quite beautiful, the circle. The journey has been inspiring and gratifying, and just, I think, every step I can smell, I can see, and I can almost taste her contribution to this industry, where I get to now embark and make it bigger, and hopefully my daughter or my granddaughter or many other women to come will also feel the same beauty which I've got to experience.
Right, Avantika, if you could also give us an idea on the polyactic bioplastic plant. You know, it's one of the first in India. Why is this move being made? And if you could give us more updates on this one as well.
So, this PLA bioplastic plant has been my dream. I've actually worked on it for 4 years before I could get an approval from internal management and the board, which was last year. And that's when we embarked on the journey for the project, which will commission in Q3 of next year. Why PLA, you ask? So basically, this is the time where circularity is becoming most important. Environmental consciousness has become a real thing. People aren't just greenwashing anymore, but people really do want to make or leave behind an environment that will be better for the generations to come than how we found it. Because this way is definitely not sustainable. We don't want to leave our children behind with a place where they can barely breathe. So I think that this is, definitely a great time. And this is also why we embarked on it. There's a single-use plastic ban as of last year in our country. And PLA is actually very, very good for as a replacement to those items which are banned under the SUP ban. For example, all the foodware items, all the, the straws, the earbuds, you name it. But all of it can be made from PLA or the compounds of PLA. So in this case, that even though PLA will end up being more expensive than a conventional plastic, which I know will be a question coming as well, I may as well answer it. We are not competing with the regular plastic, firstly. We are competing with the alternatives of plastic. So we have two edges over there. One is, of course, we're able to compete financially also. And secondly is we are able to compete on performance. The performance of PLA is exactly like plastic. For example, if it's in your hand, you cannot tell the difference between PLA or like a PET or a PP or a PE plastic product. So the performance is actually very, very good. We heard Trump say that, let's go back to plastic straws because paper straws are just bad. I mean, okay, I think it was very, very myopic the way it was said, definitely. But, the performance of paper straws is genuinely not good. And you get a taste in your mouth, it becomes soggy and everything. It's genuinely not good. But PLA is exactly like a plastic straw. In fact, a lot of the straws in the world today are being made from PLA. So this is a great time for the product to sort of launch itself in our country as well.
Right, everyone who is unfamiliar with PLA, as what Avantika means talking about, it's actually polyactic acid, which is a biodegradable plant-based plastic, and that's made from renewable sources like corn, sugarcane, and cassava. But, Avantika, let's stick with this. If you could also give us more on the timelines with regards to operations, also any idea that you can give us when it comes to revenue recognition here.
So we should commission in September, October of next year, which was also what was announced in February of last year. So we are on track, absolutely. And, we are going to have a capacity of 80,000 tons. Of course, it's going to take a few months for it to ramp up to 100%. So by the time we get to 100% capacity, which will be anywhere between 6 months to a year of commissioning, depending on how well we are able to commission, in FY 27-28 is when you will see it in the balance sheet, in the annual reports hitting our books, probably 100%. So at that moment, we will have made 50% of our revenue from green products or non-sugar products. And the profitability of this particular vertical will be EBITDA 35% EBITDA. Which will bring up the average of our entire portfolio, and we should make a revenue of close to 2,000 crores from it.
Right, and also if you could give us an idea on the blended margins aspect as well. What can you tell us here?
That's hard to say, because as you know that the government has a very large control over our industry. So where we would have thought that the ethanol prices would have risen with regard to FRP this year and last year, that didn't happen. So it's very hard for us to give guidance on profitability, and we don't actually do that because it's too uncertain what the government might do. So even though the ethanol prices didn't rise, and actually it's very, very bad for the segment and unexpected completely. Like, for example, last year, it was still something that we could have wrapped our heads around because it was an election year. There was pressure about inflation. But this year, for them to not increase the ethanol price was actually a very big disappointment for the whole industry. And we made the representations, and we're talking to all the relevant people there. But to give guidance on profitability blended, it's impossible.
Right, Avantika, thank you so much for joining us here and giving us your perspective on that new business. We wish you all the best for that particular venture. But on that note, that is all that we have on this edition of Profit Buzzers. We slip into a short break. Lots more lined up. You're watching NDTV Profit.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every anlom, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Reviksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Very, very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every anlom, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Reviksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Very, very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
Hello and welcome. You're watching Top Trades on NDTV Profit with me, Somit Sarkar. Well, if you look at the markets, they're largely flat. The Nifty is trading just 20 points higher, while the Nifty mid cap is down and Nifty small cap is up around 0.8% in trade. But if you look at the sector indices which have declined the most from the day's highest point is Nifty Realty Index, which has fallen nearly 2% from day's highest point. Nifty PSU stocks are down around 1.3%. Then there is Nifty Media, Nifty Auto, Nifty Energy. These indices have declined the most from the day's highest point. When it comes to FNO stocks, the stocks that have been gaining the most, it's Titagarh Rail, it's up around 6%, followed by Reliance Industries. Now, if you look at Reliance Industries' point contribution, it's adding more than 60 points to the Nifty, and largely Nifty is trading in green because of the fact that Reliance Industries is trading 3% higher. Apart from that, it's Canfin Homes, IRFC, SRF, Apollo Tyres that have been gaining more than 2% in trade. In fact, Apollo Tyres is up for the second consecutive session. On the cash side, if you look at It's stocks like Spark, which is up around 10% in trade. Then there is Data Patterns, which is up 12% in trade. Triveni Turbine, Stanley Lifestyle. These stocks have been gaining anywhere between 10 to 12% in trade. On the losing side, when it comes to F&O stocks specifically, Mahanagar Gas is the top F&O loser. The stock is down 4% in trade, followed by IndusInd Bank, down around 3.6%. Oracle Finance, Zomato, Paytm, Godrej Properties, all stocks are down more than 3% in trade. But one counter which has been active in trade is Adani Enterprises, and this is because of the fact that the Supreme Court today declined to stay the ongoing construction work for the Dharavi redevelopment project, refusing to overturn the Bombay High Court's decision in favor of the Adani Group. Now, hearing an appeal filed by the UAE-based SecLink Technologies Corporation, the court said that the work on the project had already begun, including the demolition of some railway quarters. SecLink had challenged the Maharashtra government's decision to award the Dharavi project to Adani Properties Limited after cancelling SecLink's earlier bid. The Supreme Court, however, directed that all payments related to the project to be made from a single escrow account. Chief Justice of India Sanjeev Khanna, leading a bench that included Justice Sanjay Kumar, remarked orally that the Bombay High Court's decision was justified as the railway line would also be developed and incorporated into the project. So keep an eye out for Adani Enterprises in trade, because that's the company which will be leading, or the Adani group of stocks which will be leading the Dharavi redevelopment project. Another stock that has been in focus today, that's PI Industries. Now the stock had opened 5% lower, but it managed to gain in trade, but currently it's trading 2% down, and that is largely because Kumi Air, which is one of the key clients for PI Industries, came out with its Q1 numbers. Now, if you look at the Q1 numbers on the front of it, it looks pretty much strong. The revenues are up by around 10%. EBITDA for the Kumi Air has increased by around 36% on a YOY basis. Operating hour and the PAT, if you look at that, has increased 61%. And the company has largely maintained their 2025 guidance as well. There is no change. They're expecting the net sales to be around 159.3 billion yen, which is largely similar to what they were expecting in the previous quarter. EBITDA to come in at around 10.4 billion yen and PAT number to be around 10.9 billion yen. But the one reason why the stock has come down is because the company has guided for a decline in one of the key products, that is pyroxylphane sales by around 5 billion yen. And this is the key product which PI Industries actually supplies to Kumiya, and that's the reason we are seeing such kind of a downtick when it comes to PI Industries. The stock has declined around 2.5%. Now, analysts also believe that there could be much more pressure when it comes to pyroxylphane's pricing in the market in 2025. So keep an eye out for PI Industries in trade. Apart from that, if you look at stocks like Zomato, that is there's an interesting update in fact on Zomato. Swiggy has lowered, or it seems that Swiggy has lowered their platform fee for selective users, or at least for the new users, from 10 rupees to 6 rupees. So what's the update coming in for that? Let's get in Mahima on that.
This platform cut could be for selective users only and could also be just for new users. Just in the newsroom when we were trying to compare different platform prices for different users, we found out that Swiggy One users and Swiggy Black users still have a 10 rupee fee, but a new user saw that the platform fee for the new user before logging in was 6 rupees. But the question here is that whether that person will be able to order at this particular platform 6 rupees fee without logging in or not is something to be observed. But moving on to how platform fees have fared so far, in terms of Zomato, the platform fee is fixed at 10 rupees. Swiggy could be 6 or 10 for selective users and new users. Zepto is at 11 rupees. The next counter is Blinkit, where again it matches with Zepto. 11 rupees is the platform fee. Instamart is comparatively still lower as compared to Blinkit and Zepto. It's at 8 rupees. BB now is, that is your big basket now, is at 6 rupees, which is lowest of all quick commerce platforms. And in terms of platform fee hike timeline, since August 2023 to October 2024, we've seen a hike from 2 rupees in terms of platform fee to 10 rupees. So this is, grown in a staggered manner in just a span of over 1 year. In terms of the overall impact on Swiggy, going forward, despite of high competition, quick commerce platforms have remained stable in terms of hiking their platform fee, but food delivery is showing some kind of early signs of lowering their platform fee. Now, lowering of platform fee for select users might not have a bigger impact, but if they apply it for all users, this will have an overall impact on their profitability. And considering that losses from quick commerce for Swiggy are very high, this could overall have an overhang on their bottom line going forward as well. So this is the overall report as to how and what will happen to Swiggy if they lower their platform fee from 10 rupee to 6 rupee.
Well, post this platform fee cut, we are seeing a downtick of 3% in Zomato. And speaking of Swiggy and Zomato, FMCG distributors body has filed a case against the quick commerce players like Zomato, Swiggy and Zepto. What is this all case about? Let's get in Agni to get in more details on the same.
So quick commerce companies like Zomato and Swiggy are in focus because NDTV Profit has learnt that FMCG distributors have filed a petition with the Competitions Commission against the likes of Zomato, Swiggy and Zepto over alleged anti-competitive practices. So the distributors claim that players like Blinkit, Swiggy and Zepto have been using anti-competitive practices like predatory pricing and even deep discounting. So the petition has not been accepted by the CCI yet. So it's difficult to quantify how much of an effect this will have on the companies mentioned. But sources tell us that the CCI is likely to take a call in the next 4 weeks over whether to order a probe or close the case. So this is the first time the distributors lobby is taking legal recourse against what they allege as predatory practices. Earlier they had written to CCI as well as to the Finance Ministry and Commerce Ministry, and in their letters they had claimed the same, that they are being deeply affected by these quick commerce companies and the practices that they employ for their businesses. So stay tuned because this is a developing story and it's yet to be seen if the petition will get accepted or not.
Multiple companies remain in focus on the back of order wins that we have seen, that is Kalpataru, projects RVNL. Kalpataru project, BL is also in focus on the back of this order win, and we'll have to keep an eye out for what are the order wins that have come in. Kalpataru announced an order win yesterday post-market, and the order was around 24. Kalpataru order was around 2,306 crore rupees. So that's a significant order flow that has come in for the company. Apart from that, if you look at the company's total order book position, that would stand at around 22,500 crore rupees, and so far for the 9 months of FY25, the order book has grown by nearly 19%. Another stock that remains in focus is RVNL. Now that company received a letter of acceptance from Southern Western Railways for an order of close to 156 crore rupees. Now the order execution time period for this is around 18 months. Now this is the second consecutive order that the company has won. Earlier few weeks back, in fact, they had announced an order win of close to 730 odd crore rupees. Their current order book position stands at close to 98,000 crore rupees, and for the next financial year, the company is expecting their order book to be close to 1.5 lakh crore. Brigade Enterprises also announced a launch which was of a project with a revenue potential of around 1,700 crore rupees. Then there was BL, which also announced a defense order win. In fact, BL also had a positive brokerage note coming today in the morning by JP Morgan, where they had maintained their overweight rating on the stock with a target price of 343. They are saying that the structural growth will remain strong on the back of the order announcements that are expected to come in. They are saying that the 20% correction that we have seen on the stock price from that highest point is presents a good entry point or a good buying opportunity when it comes to Bharat Electronics. They're expecting the company's revenue, EBITDA and net profit to grow at a CAGR of nearly 15 to 17%, and they're expecting the average return on equities to be around 25% over FY24 to FY27. They are saying that there's a high possibility that Bharat Electronics might announce a 12,000 crore worth of orders by the 31st of March, which means that in the next 23-24 days, there would be more order win announcements coming in from BL of around 12,000 crore rupees, and they're believing that this is the right opportunity to buy the stock, which has corrected nearly 20% from its peak. But another stock that has been in focus for the last couple of weeks, and that is BAC. Now the stock has been under pressure for a few days, and this comes after the news that NSE had shifted its expiry day to Monday earlier. Now the regulator had proposed a few new norms, including a change in calculation method of open interest. How is the company planning to tackle all of this? My colleague Charu spoke to the BSE MD and CEO Sundaraman. Listen into that conversation.
Markets going up and down is a part of market behavior. So the advice to any investor is not necessarily dependent on what market phase it is at this point of time. It is an important advice forever. As I always tell, an investor, if he is a trained and an existing investor, should be very clear and conscious that he should invest what he understands and he should understand what he invests. That is the basic principle to be followed at all times. If it's a new investor, as you rightly said, a lot of youth wants to get into the capital markets, which is very good for the country because financialization of household savings is a very important requirement for the development of markets and the economy. My advice to all of them has always been, if you're a new investor, like you do with any new activity, start small, start with mutual funds, maybe with a broad-based fund where the portfolio managers already take care of risk diversification. And you have to plan long term. It's not that you will invest today and tomorrow onwards you start seeing whether you are making profit or loss. Make small amount of SIP to capture all market cycles and stay invested for a longer time, probably in a good mutual fund in a broad-based scheme. That has always been my advice to the Yuva.
That's a very good advice, sir. So moving ahead, as we all know that BSE announced its changes in expiry dates last year in November and they were implemented in January this year and they were shifted to the first half of the week, that is on Tuesday. Now very recently we have changed the other big exchange in the country, changing their expiry dates as well to the first half of the week, that is on Monday. So we also have to consider that when this was announced on Wednesday, we saw a strain on the stock price as well. So how do you feel that you are going to be combating with this? What are you thinking about strategizing around this?
See, our stand has always been like this. We do what the market participants want. We are a market infrastructure intermediary. Whatever is the voice of the customer, that's what we implement. When we implemented Friday, that was based on market voice. When we implemented Tuesday, that was based on market voice. Whatever market advises us, that's what we will do this time as well. As far as the share prices, for us, share prices are outcome. What is the main purpose for which we exist? To provide a well-governed, well-regulated marketplace with products what the market want. That's how we will look at it.
So are you planning any sort of change again in the expiry dates?
That would depend upon what the market voice is going to be to us. I'm told NSE made a change on 2 days before or something. So once we are able to understand what the market advice for us is, we will accordingly act.
So you wish to look at how things roll out and then take advice and then, take your action.
Yeah, whatever the market participants tell us as to what should be our action point, that's what we will do.
So moving ahead, the Securities and Exchange Board of India also recently floated another consultation paper that was about the calculation of open interest in the FNO segment. Now, from the notional method, there has been a suggestion to change it to a future equivalence method. Now, do you think that if implemented or if this proposal paper in general implemented could also affect the volumes at BSE?
As I said, volumes are outcomes. The most important thing is to provide products as required by the marketplace within the four walls of corporate governance and market regulation. If you recall, there are multiple open interest requirements stipulated by the regulators. One of them was stipulated during COVID times, and that was called as sentimental OI. Now that COVID has gone, we have been requesting the regulators to review it. The purpose for which it was born is now not there, and market regulation themselves should not shape market microstructure into situations which are not warranted. So the regulators are looking at it and they have come out with a paper. The paper talks about future equivalent, as you rightly observed. The regulatory process in India is a co-created process. Market is consulted, the exchanges are consulted, experts are consulted based on whatever their advice is, and based on SEBI's internal thinking, things will come out and get rolled out. I'm sure the market regulatory role and market development role have always been going hand in hand, and SEBI will consider the views and then analyze what the repercussions are, the positives are, and accordingly a decision will be taken.
Definitely, sir. So, talking about the regulator a bit more, ever since the earnings call for BSE was done, there was a sort of back and forth between the two exchanges in the country regarding the clearing corporation charges. Now, I assume that a lot has settled down, but there were a lot of media reports about this back and forth. So, do you feel that some sort of a regulatory intervention or some sort of a regulatory pathway needs to be created to stabilize this entire ecosystem?
See, commercial interests lie with the regular organization. Notwithstanding that, as of today, I understand that NSE has to clear some dues to ICCL. And ICCL has escalated it to the regulators, and also NSE has escalated. I am sure very soon it will be resolved.
But is this some sort of an issue that is, as an individual issue being escalated, or you are looking at a larger solution, for example, a regulatory solution to this?
So as I said, it is a commercial one. So typically commercial parts, regulators leave it to the exchanges to resolve by themselves. Where there is no resolution, naturally it will get sort of into the regulator's attention, which has been brought to the notice of regulator by ICCL and also NSE, I was told. So regulators are also looking at it, and then a resolution will certainly follow.
So moving ahead, what are your own plans with regards to getting more market share, strategizing to take BSE forward in the next 2 to 3 years?
As I always said, even in this interview with you, market share and all are outcome, right? Serving the market is what is very important. What we have taken as our goal is customer delight. Who are customers? It's both internal and external. Right from the regulators to shareholders to investors to brokers and their clients, all are our customers. Why customer delight is important today? We are talking about competition. Actually, the competition is global. If the competition is global, if more and more Indians are trading in exchanges outside India, whatever way in which it is happening with legitimate ways, we need to have garvapsi of this investors. They should trade in Indian markets. So it's not about changing expiry days and all that stuff alone and getting some market share out of it. It is about providing an ecosystem where India excels in providing customer service, and to trade in India is a customer delight. So from a BSE perspective, we have taken it as a slogan, and in Hindi we call it as Prasannit Grahak. That is the two word which makes every one of my policy to be scanned through. In that process, we are improving infrastructure in a big way. Infrastructure will tantamount to technology, people, physical infrastructure, knowledge as a base as an infrastructure, automation as an infrastructure. All these are being relooked into, and in the coming 2 years, we want to make BSE as a world-class customer delight exchange. That is the path we are taking.
In moving ahead with these strategies, how big of a role is AI playing currently?
See, like every technology, when it comes, there is a sort of lot of talk about AI, and subsequently probably it dies down. But we do not want this AI part of it to go that way. Every technology has positives and negatives, as you would know. The positives part of it is what it can contribute, negative is how people can misuse. There are a lot of cases where AI has been misused. People just use AI to character assassinate budding people so that they can have their way of monopoly. So that also we have seen. So negatives, we should be cautious. We should also be understanding that no, my image can be put and can be told that I am soliciting you to invest in a stock. These all stuff are negatives of AI. Talking of positives of AI can be useful in multiple ways. Combining it with this large language model and all, a lot of things have evolved over a period of time. Significantly voluminous document you throw into a generative mechanism, it gives you a lot of ideas about it. It reads it, it thoroughly analyzes it, it gives you things. We feel in prospectus processing, in surveillance areas, in assessing the probable outcome of a regulatory change, studying the outcome of an already introduced regulatory change to see whether it is serving the desired objectives with which we started the regulatory change. I think AI will be tremendously useful. These are some of the use cases which I am immediately able to think about. Some of these areas, in one of the areas we are in very advanced stages of implementation in our organization. Other areas we are exploring. I am sure this is going to play a vital role in the days to come.
So you believe that the technology is not going anywhere, it will stay here. As you said in the beginning that artificial intelligence could, be something that eventually becomes not so important, but you have, thinking that it is going to stay in some form. It is going
to stay. Only thing is we need to be very clearly aware of the negatives of it and we should be cautious to curb them.
So finally, any other plans regarding the BSE Star MF?
In what sense you mean?
In taking it forward and taking it to the people more.
As you may recall, when I joined, we were processing around 1 crore to 2 crore transactions per month. Today, we are processing around 6 crore transactions per month. Like in the budget speech, Finance Minister Madam talked about Gyan, Garib, Yuva, Annadata or Nari. इसमें से we are taking Yuva and Nari as the concept today being an important day for Nari. We are taking Yuva and Nari for the purpose of mutual fund investment. Wherever we get an opportunity, we are talking to the young investors, the youth, telling please come into the capital market portfolio through mutual funds, broad-based good mutual fund schemes. And that is one another thing we are doing which is showing results. Otherwise you will not have seen the growth from 1 to 3 crores as the min-max, going into 6 crores as the average. That transition has happened. We are strengthening again here as well our technology base. Almost a significant completion of whatever we planned as a version 2 has happened. It's under beta testing with some of the people, which will increase functionalities, which will increase governance, which will help in reconciliation, which will help in scaling up and will bring sustainability. We are working in a very big way on mutual funds because it's very close to our heart. That is the way in which we feel the financialization of household savings should be channeled into the markets instead of other undesirable ways in which it could otherwise go and get frittered away.
Well, that was an interesting conversation with BSE, and with that, it's a wrap on this edition of Top Trades. Stay tuned and keep watching NDTV Profit.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Very, very warm welcome to you all for this NDTV Profit conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Very, very warm welcome to you all for this NDTV Profit conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from
Hello and welcome. You're watching India Market Close here on NDTV Profit. I'm Harsh Saita. Quick check on where markets are at. Absolutely flat where the Nifty 50 index is concerned, as flat as it can get. But mind you, we breached 22,500 yesterday, and therefore, would I complain too much about this? Not so sure. But it's also the kind of sluggish move is also evident on both the Nifty mid cap. The small cap is outperforming for sure. So when we are looking at the broader markets, the Nifty mid cap around 1/3% lower. We slipped and thereafter we've recovered a bit, but the Nifty small cap is where some bit of outperformance is evident. 0.7% higher on the Nifty small cap, and that's heartening to see. Let's look at the Nifty 50 heat map as well. Let's see stocks, and there you go. The big boy Reliance up 3%, and despite that, mind you, we're flat on the index, and that's the big takeaway. IndusInd Bank, Shriram Finance, some of the laggards within the BFSI space, within the Nifty 50. SBI flat, HDFC, the other big boy, also absolutely flat. The Nifty Bank not doing too much either for itself. Broadly, that's how it's shaping up. Let's look at sectors very, very quickly. And in terms of the heat map, no surprise in terms of the way some of these sectors are moving. The Nifty Realty is the top sectoral loser in trade today. So within the broader market space, that's where some pain is starting to creep in. But yeah, so that's on the sectoral front. Let's look at, there you go. So those are sectors. Media, oil and gas up around 0.25%, thereabout. Nifty Metal also up around 0.25%. Realty, as I did mention, down 1.3. IT is where some of the pain also is. Nifty Bank, muted kind of move, 0.5% lower on the Nifty Bank. Mind you, it's not done too well pretty much through the week. It's underperformed the index pretty much through the week, the Nifty Bank. So that's something you'll want to keep your eye out on. The Nifty Auto trading with mild bit of green. Last, I want to pull up the BSE 500 top gainers, top losers before we go to our guests and maybe start to take views. Data patterns up 11.5% odd. Very strong move there. You also have a Triveni Turbines doing well. Shyam Metallics 7% higher. IndusInd, the top loser on the BSE 500, along with being the top loser on the Nifty 50 index as well. MGL is the other stock where there's been some bit of pressure. The 4% move yesterday has led to this maybe 3% pullback in trade today. But you also have a Kalyan Jewelers, which is down 3%. A Zomato is down 3% on the back of possible pricing tweaks which have happened with regard to, at least that's broadly seems to be maybe for new users or existing, still very, very unsure, but there has been some bit of pricing with regard to platform fees which have been shaved off. But we have with us Sonam Srivastav joining us this afternoon. And Sonam, let me first go straight to you. Let me take your view with regard to the index in particular. What's the kind of move that one can expect? Because we've closed this week decently okay versus at least the last 2 to 3 weeks where there's been quite a bit of pain. So what next in your view?
See, I think the situation is pretty uncertain in the market right now, right? So we don't have a big conviction that we're going to see a strong up move. The stocks in terms of valuations are pretty decently priced right now. We are even in oversold category in many of the stocks. But I think the volatility could persist, and we sort of have to be very, very careful in where we allocate, right? I think small caps is a zone where we're seeing a lot of buying, and we're also very excited about that. But I think the pain could persist, and you have to be careful.
Okay. And what are levels you look out for, Sonam?
In terms of levels, see on the Nifty for sure, 22. Yeah, I think 22,800 is a number that people are looking for. Once the index sort of moves above that, it would be a strong, sort of rally that could form. But on the downside, I think the bottom, which is around 22,000, is a number to sort of watch out for, right?
All right, point taken. Sonam, also fully aware that you're the fundamental analyst on the show today. Meghna, let me come to you with regard to levels. What's your view?
So Nifty, if you see, basically there seems to be a support kind of formation, but any kind of support, any kind of bottom, it takes a while to consolidate. Only then you can say that we have kind of bottomed out. So Nifty, though 22,300 looks to be a good support right now. The first resistance that I see is at the 20 period moving average on the technical chart. It looks like that's going to be a first resistance. So that is kind of 23,600, 23,700 could be a band where we have the uptrend testing and then coming back. So broadly, I believe if this has to stay, we would be consolidating somewhere around these 1,000 points.
And what's the next move going to be like in your opinion? At this point, what are you recommending to your to your customers, clients?
So the strategy that I would, apply and teach my students is to be sector specific, because there are certain sectors that are holding up in spite of this downfall. If you see the metal sector or the finance sector, they seem to be quite holding up. So these two sectors I would stick to as the safe zone till the time market finds its ground, and then maybe you could be more aggressive. So right now I'd ask them to play small just with these two sectors.
Okay, interesting. Your picks for this afternoon, Meghna?
So from each, I like one stock from each sector. SAIL is something that I'm looking at because it looks nice. 100 seems to be a good support. Momentum wise, I see good volume building as well technically. So SAIL, I would buy with a stop of 100. From a medium term perspective, the first target that I see it going is till 130. And the second is again a 61% retracement of the last swing, which would take it to 147. So I would sit tight to my position till it gets to around 147 levels. And the second one, I like PFC from the finance sector. It seems to be doing good. I love the consolidation. I love the support that it's taking at around 364 levels. So that is something that you could buy right now in this market. First target would take you to 445, and the second, again, taking the 61%, the highest retracement of the latest swing, the entire swing, I mean, would take you to 500. So these are two stocks I'd like to recommend.
Okay, very interesting. And, a great cue for my next question. Sonam, some of these power financiers, even from a fundamental perspective, are looking like they've seen a solid correction, and the price to book has come off quite sharply versus, the peaks that we saw in 2024. Are you starting to turn constructive on this? What's your view? And what's the thesis like? Because there also seems to be some skepticism with regard to growth creeping in. Growth might start to come off. That's basically the current worry.
Right. I think that is an ongoing worry in the whole world, right? With everything that's happening around the world, there is a concern on growth, and even in India, we've seen some growth slow down. So that is a concern for sure. But the power finance sector definitely is looking interesting right now, right? I think PFC, REC, these have been investor favorites for a while, and they have consolidated also. They are at a value zone, I think, in terms of buying. But I think there could be still a little bit more pain that could persist. And so we are definitely interested, but we are not jumping in just yet.
Interesting. All right. Then what's the pocket that you currently like, Sonam?
So the pocket that I really like is I would say the quality sort of a packet, right? A pocket where you're seeing good quality in terms of the return on earnings, plus there is some momentum. And we bought a few stocks also recently, for example, Indian Hotels, Indigo. We bought a few small caps like Supriya Engineering, right? And then there are quite a few other interesting stocks where we are seeing buying opportunity, but we are sort of watching the market to time when to sort of jump in, right?
Yeah.
Amber is that looks very interesting right now. PG Electroplast, right? So I think some very good opportunities and things are available cheaply, right? But you have to be careful, right?
Absolutely. We've seen a 20-odd% rally in something like a Bajaj Finance, Sonam. Would it look interesting even at this point? Because it's outperformed the index by 30% odd. So just your quick views on that.
I think this stock is definitely interesting because of the rate cut cycle that is coming in. You've seen the stock sort of be under pressure for a while, right? I think Bajaj Finance has been consolidating for years, and now we're seeing a rally. And I think it is attractive from the long term perspective because we are seeing a lot of speculation that there could be another rate cut that comes in April, right? So I would say that's an interesting pick to go to. We hold Bajaj Holding into our portfolios, which has also done quite spectacularly. So I think it's an interesting pick for sure.
Okay. Now, that time of the show where we go to our stock of the day, and we have Somit standing by with a perspective on PI Industries. Just look at the intraday on that stock, 6% lower, full recovery, and thereafter we've seen a bit of a slip up. It was down nearly 3% after that as well. Somit here with all that's happening with regard to the seesaw on that one. Somit.
Well, if you look at the chart, intraday chart of PI Industries, it looks very interesting. In fact, the stock opened 5% lower in trade, then it managed to recover throughout the day and was at one point of time higher than around 2% and then again we saw a fall of around 3% in the share price. As you can see, it opened 5% lower here, then it gained almost 8.5% to the day's highest point, and from day's highest point it slipped around 4% to the lowest point. So what's been happening with PI Industries throughout the day? Firstly, when the stock opened 5% lower, it was on the back of a Nuvama sales note which said that the export data was flagging off steeper price correction in one of the key products of the company, that is pyroxasulfane. Now, as per them, the price had dropped by nearly 10% from $86 earlier to $75 earlier, or $75 now, and they were expecting this price correction or pricing pressure for this product to continue even going forward. Now, they were saying that the patent expiry has happened in the US, because of which this product is now exposed to generic competition, and that had led to pricing pressure. Along with that, there was high inventory in the US markets because a lot of dealers had already taken up a lot of inventory with them, and the new orders were coming in delayed. And lastly, they were expecting aggressive price cuts to happen for PI Industries EPS also on the back of the pricing pressure for this key product, that is pyroxasulfane. Now, from the day's lowest point, the stock did manage to gain around 8.5%, and some of these gains were largely on the back of the fact that Kumi AI, which is one of the key clients for PI Industries and one of the key clients which imports this product, that is pyroxasulfane from PI Industries, reported a very much stable set of numbers. Now, if you look at Kumi AI's number on a YOY basis, the company's revenue grew nearly 10%, operating profit jumped 37%, net profit increased by nearly 61%, and more importantly, the company did not change their guidance for 2025. So because of this positive points, we saw the stock gain higher by around 2% at one point of the day. But later, when Kumi AI came out with its presentation and more finer details with the number, the stock saw a massive decline of around 4% from the day's highest point, and this was because Kumi AI's presentation guided a decline in pyroxasulfane's sales by around 5 billion yen. And if Kumi AI's sales decline, this could have a direct impact on PI Industries as well. They also said that they're expecting pressure on sales to continue for throughout the 2025, and this could seriously impact PI Industries' fourth quarter numbers and the 8th month of FY26 numbers as well. And hence, we have seen a decline coming in for PI Industries. And also, PI Industries came out with a presentation later in the day where they are saying that they are seeing strong growth in all the segments. In fact, for CRDMO business, pharma CRDMO business, they have said that they expect the revenues to grow nearly 3 times over the next 3 to 4 years. So PI Industries has clearly been the stock of the day, wild moves that we have seen throughout the day for PI Industries.
Right. Thanks so much for that, Somit. For breaking that down quite comprehensively for us. Meghna, let me come to you with regard to the gyration on the stock price. What's the sense like, and what would you advise at this point? What should one do?
See, PI Industries, technically if you see, I'm really loving the formation on daily chart. I mean, there's something called as drives on Bollinger Bands, technical term, but for if you get it. So it's made the drive inside. And if you see, the latest downtrend was with extremely dry volumes, which is again a good sign of bottoming out. The momentum that it's catching up today, the price that it came up to, that seemed to be an excellent buying point. Those who did, he did. But then we've had, so today the formation seems to be like an indecisive candle pattern with extraordinarily high volumes, and rightly so explained here also. So I think this is a good stock to buy, only if the risk reward is in your favor, because the stock seems to have gyrated quite a bit. And so if the risk is in your favor, I could see, I mean, the latest top that it's made around, 3680, I'd see that surpassing it pretty quick. So this seems to be a good buy to me, technically.
Okay. Sonam, your quick take with regard to PI Industries, because stock has fallen 33% now from the 52-week high. Would you call this an opportunity to buy at this point?
Yeah, I think if you look at the valuations, right, definitely this is in a good zone, right? I think the strong has strong sort of growth expectations, and it's been a historically a favorite stock in this particular industry, right, where it has been sort of immune to any sort of price pressures, and very recently we've seen corrections in this stock. So I would assume that it could be a good buy. But yeah, I think with all the news flow coming around, we sort of have to be mindful of that, right?
Okay. All right. Thanks so much, Meghna, Sonam, for joining us this afternoon, giving us all of those views and perspectives.
Thank you.
And we'll let you go. Also, Hiral joining. Hiral, the one key big factor which has been plaguing markets over the last couple of days at least is yesterday you had Credit Access come out with their numbers and disclose that while growth overall seems to be rebounding, Karnataka is a bit of a challenge. And how asset quality is actually getting better ex Karnataka. And also, of course, today we had Vishy coming in and giving us perspective that the RBI is not entirely comfortable, if I can use that term, with regard to the way in which their gold loans circular has been interpreted and implemented.
Absolutely, and I think it's more about scrutiny, and whether they are complying with the latest circular that they've come out with as well, right? And it's interesting to see how the divergence in the stock price performance of Muthoot as well as Manappuram in 2025 itself.
Yes.
Because you have a Muthoot which has really not done much.
Yes.
In fact, it's probably given negative returns. And if you talk about a Manappuram, Harsh, it's almost, I think if I'm not mistaken, in double digits in 2025. So it's interesting to see how both the companies in the same business are actually performing right now.
Absolutely. Just let's take the conversation further, Hiral. We have Shweta Daptardar, who's the Vice President BFSI at Elara Securities, who's going to talk to us about some of these. Shweta, I read your note this morning with regard to Credit Access, and what really fascinated me was the fact that you've downgraded the EPS estimates, but you have maintained your target price. Just give us perspective on what you can what your expectations first off are from a Credit Access, and why not therefore downgrade the target price as well if EPS is getting trimmed.
Yeah, thank you for having me on the show. So as you rightly pointed out, EPS or earnings have been under pressure for the whole sector per se, for all the players in the microfinance space, and rightly so, because for past over a year, we have seen this sector plagued by several challenges. So be it overall indebtedness at the borrower level, be it increased regulatory oversight, and therefore the growth calibration as well as asset quality challenges that have been raising their ugly head. So from that perspective, definitely earnings are under pressure. Also, referring to the even Credit Access Grameen's business update yesterday that came through for data for January and February, the hints are clear wherein although there has been slighter progress in terms of disbursements and loans gradually picking up, there has been observed regional disparity in terms of delinquencies across states. So, from that perspective, we still believe most of these companies are going to miss their growth targets for the full FY25 year. So, we are here talking about 4,000 billion odd microfinance industry, which was reporting 24-29% kind of annual growth until last year, and even higher, say 30% plus a year ago levels, that is somewhere in 2023, would now be falling into early single digits for FY25. So that has been one of the key parameters to sort of percolate into EPS pressures for most of these players. Second is, of course, the elevated credit cost. So while we thought Q3
would have peaked out in terms of asset quality challenges. The underlying data, which has been coming through from the ground, which is still plagued by challenges of certain regional pressures, such as, say, Karnataka ordinance or floods in Tamil Nadu, or over-leveraging concerns in certain states such as UP, Bihar, Gujarat, have definitely led to more additional buffers or even write-offs, putting pressure on P&L of these companies. So that's the another reason why EPS downgrade stood imminent. Now, coming from the stock valuations perspective, so you've seen that there has been massive correction in most of these stocks, and even the market leader that we are talking about here. So, given the fact that the correction is already in place, the worst is already captured in the valuation multiple of 1.7x price to book FY27 or the forward multiple for Credit Access Grameen, we felt the downside is limited, but also upside is limited going forward. So valuations will continue to lurch. While we have accumulated rating on the stock, we continue to monitor closely the trends on asset quality as we progress in the new financial year.
So that's Shweta with regards to where credit access goes in a way. But if you have to look at microfinance as a basket currently, how are you seeing the cycle from here on? Number one, and what would your view be with regards to advising investors what should be done?
Yeah, so we are actually another 3 quarters away from seeing normalization of trends, both in terms of growth as well as credit quality challenges. So we continue to see sluggish traction on the business front, particularly because of increased guardrails or increased regulatory oversight in terms of per borrower and lender per borrower exposure. So, because of increased oversight from the regulatory front, because of lenders getting more cautious on incremental borrower acquisition, like mentioned earlier, certain geographies still posing unique set of challenges. We certainly believe growth challenges will persist for another 2 to 3 quarters. Simultaneously, the triggers to bottom line growth or ROAs are still missing. So we will continue to see NIM pressures or calibration on the yields front. We will continue to see credit cost continuing to sort of remain at elevated levels for another 2 quarters or so. So recovery is still distant, perhaps closer to end of FY26. We would see some respite for microfinanciers in the space. Having said that, the underlying data trends definitely are sort of inching up for better. We continue to monitor it closely. For now, we continue to advise clients to stay away from the space.
Okay. Okay, so stay away as of now. I also want your take with regard to everything that's happening in gold loans, because interesting, right? Today's news, which has come out, seems to suggest that not fully compliant with the gold loan guidances issued by RBI. You at a ground level as an analyst, do you believe that's the case? And if so, what pockets do you believe that there is this concern with regard to where gold loans is in subject?
Yes, we have to understand the fact that where the RBI concerns are stemming from, and that's where is we refer to the exponential growth in gold lending space, especially from the banks and NBFCs front for over 2 years now. So one concern is the exponential growth. Second is because gold price has been catching up on the higher side for several months now. There has been invariably, unintentionally flouting of LTV norms. So while LTVs have been lower at origination, they end up turning out to be higher towards the end of the tenure of the loans, leaving borrowers incapacitated to pay back the loans which they had raised, at the original rates. So that has been the primary concern of RBI. Second most important point which RBI has been highlighting is the gold lending underwriting practices. So there has been lack of transparency in terms of evaluation of the pledged gold. There has been lack of transparency in terms of ownership of the gold that is pledged. Also, there have been third party agents involved in evaluation and measuring the tenacity of the gold. So all of these have been brought up by RBI, and therefore in the interim periods, we'll see how banks. So I think it's more to do with banks than gold financiers, because likes of Muthoot and Manappuram, we felt that have been largely, mostly adhering to the norms as far as the compliance is concerned. But nonetheless, RBI is here highlighting and directing most of the players, including NBFCs, in terms of having a relook at the underwriting practices and keeping the regulator updated.
Thank you, Shweta, so much for joining us on the show and sharing the views with us. That gives you a perspective of the way you should be looking at the microfinance space, the gold loan businesses as well from here on, and the picks that you should be watching out for. But let's quickly slip into a short break. Up next, we will be speaking to Teresa John of Nirmal Bang as well, and you have the Herndon Street segment on NDTV Profit. Please stay tuned.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breading also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers, and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Reviksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breading also. You have to come down. So the correction And healthy correction is a very, very integral part of the market.
The private
Welcome back. You're watching India Market Close here on NDTV Profit. That time of the show where we bring in Somi to get us all the dealing room chatter with our special segment Heard on the Street. Somi, what are you hearing?
Well, it has been a positive week. In fact, this is the first week that we are closing in positive in the last 4 weeks. So dealers are quite happy with at least that. Some stock-specific names that have been in focus. Firstly, it's UPL and Tube Investments. Both these counters are seeing strong buy flows on FI desk. On the other side, there's Bharat Forge and Sun Pharma. Both these stocks are seeing good buy flows when it comes to domestic institution and HNI desk. So keep an eye out for these 4 stocks. Then there are cement names like Ambuja, ACC, Shree Cement, Ultratech. All these stocks are seeing well bid by institutions. That means both mutual funds and FIs are actively buying cement names in trade today. Stable prices, stable demand, and lower raw material costs are some of the key triggers that have been highlighted by dealers. And last stock, which is the most important one today, is IndusInd Bank. It's down around 4% in trade. Now the buzz on the street is that RBI may not extend Suman Katpalia's term, which ends on March 23rd, 2024. And do remember that the board has already given an approval for 3 years extension for his term, but RBI approval is still awaiting. And the buzz on the street is that this approval might not come in, and that's the reason we are seeing such kind of a downtick when it comes to IndusInd Bank.
That's huge, right, Somit? I mean, this will be a big one. While the optics of it, no real major difference in the sense that even if new leadership were to come, the fundamentals of IndusInd Bank technically don't change right off the bat. But non-renewal of MD CEO status and he's already been pulled up. I mean, he asked for 3 years last time, he got only 2.
Right.
And now again, this time around, not getting renewed. That'll be a big one.
Well, yes, it can be taken negatively by the street, given the fact that after the MFI relaxation, a lot of investors and in fact a couple of analysts also came out with this note where they were expecting that his extension might come in, and for 3 years is what the street was expecting. But right now the buzz is that even if he gets for 1 year extension, that could also be taken negatively by the street.
Yeah, I mean, likely so, and stock clearly reacting, and we've been wondering as to why this has been languishing, but clearly this seems to be the answer. Thanks so much, Swami, for all of those insights as always. But we're joined by a special guest now to talk tariffs. And Mahima, this has been a subject where it's been talk of town. And we had a very interesting note coming out with regard to reciprocal tariffs and what the impact on India could be. Your sense with regard to what this means?
Right, absolutely. And just to give context, this will be from 2nd of April. We've already seen that tariffs have already been imposed on aluminium and steel, and this is under 25% because of the kind of, India exports being done to US. But to take this further, we're joined by Teresa John, Deputy Head of Research and Lead Economist at Nirmal Bang, who's joining us now. Teresa, very good afternoon to you. My first, before I go on to the question, a very happy Women's Day to you. And of course, my first question being to you is that how do you think will reciprocal tariffs play its role, and how will India, go ahead and tackle it?
So first, thank you for having me. We think reciprocal tariffs, President Trump has said that it could be imposed on the 2nd of April. We've already seen the tariffs on steel and aluminum, which is a global tariff, not specific to India. If you see how India could actually tackle it, let me start with which are the commodities which are likely to be impacted. So if you see some of the US trade reports, they have actually spoken about high tariffs on agricultural products. high tariffs on auto, and then tariffs on products like you have gems and jewelry, then you have some of the other items like even some of the pharmaceutical products, chemicals, etc. So if you see the tariff differential between India and the US, obviously that is highest for agricultural products. So the reciprocal tariffs could come on agricultural products, but for India per se, that is not a very big chunk of our exports to the US. So to that extent, we think there will be some inflation in terms of the overall exports that go into the US. But you could see some impact on sectors like auto, maybe specific chemicals and specific pharmaceuticals. But I don't see this as a long-term trend because India and the US are already in negotiation. In the budget 2025, we saw the reduction in tariffs on some of the motorcycles, reduction in tariffs on some of the alcoholic beverages. So India has already indicated signs that we are willing to come to the negotiating table, and potentially you could, in the long run, you could have a India-US trade deal where some of these issues around tariffs and market access could be addressed.
Therefore, Teresa, Harsh also joining in. What's the likelihood that a lot of this, or rather the market has overshot in terms of the impact with regard to tariffs, in your view?
See, if you look at for India per se, in the worst case scenario that we are building in, we think around 25 to 30% of exports, around 30% of exports to the US could be hit by tariffs, which works out to around close to $25 billion in the worst case scenario. But what we've actually seen, I'm not talking from an India specific standpoint, but even from a global standpoint, is that a lot of the noise around tariff doesn't actually translate into reality. As you've seen even in the case of Mexico and Canada, in February it was imposed first, then it was postponed for 1 month, and again imposed in March. And there has been some, withdrawal that happened. Last night. So what we think President Trump is using tariffs as a bargaining tactic. So if you see the impact of tariffs on even U.S. inflation between 2016 to 2020, inflation did go up, but it was a largely short-lived impact and a limited impact. So I think some of the concerns around tariffs pushing up inflation very significantly globally, I think that is overdone. You could continue to get rate cuts from the US Fed. We are factoring in around 50 basis points. It could be more. But that said, because of the back and forth that we are seeing, the volatility and the uncertainty, that will remain.
All right. And in terms of the pain points for US, what's the talking point there? How do you see that playing out, and how does that overall see an impact in terms of the trade relations?
Yeah, so as I was saying, for India, as far as US, they have highlighted in some of the trade reports, some of the key products are agricultural products ranging from apples to almonds, which are taxed at very high rates in India, automobiles or motorcycles, alcoholic beverages. So then some of the pharmaceutical drugs, they feel as even though they're essential, are taxed at very high rates. So these are some of the pain points as far as the US is concerned. So these could, some of it has been addressed, maybe not to the extent that they would like it. But I think, as I said, this is more of a bargaining tactic. So what India could do is they possibly purchase more US crude oil. We've been purchasing from Russia. Some of that could, crude oil and gas from the US, we could purchase more. We've already talking about more of defense purchases from the US. So it could be a give and take scenario that will actually pan out finally.
Okay, thanks so much, Teresa, for coming in, speaking with us. Great perspective, and of course, it's a space which we'll have to monitor closely as we, close March and enter April. Maybe 2-3 weeks from now, we'll have to continue having those conversations and understanding the impact. But let me bring on board very quickly Kunal Shah from Sharekhan and G. Chokalingam joining us from Economics Research to talk to us about markets and more. Kunal, quickly your take with regard to where we are at currently, this little bit of a bounce back that we've seen this week. Is it sustainable next week as well? You're expecting some bit of green on the screen?
Good afternoon, everyone. Firstly, definitely the bounce what we have seen in Nifty, almost a 600 point kind of a rally what we have seen from the lows. Next week, I think this is going to get continued. On the higher end, what we see for Nifty, 22,800, which is 22,750, 800 zone, which is where the 20 DMA is placed. And once we take out that mark, we will be heading towards 23,000 on the upside. So the view remains bullish on the Nifty indices. Bound approach. 22,200, 300 is now a very strong support on the downside. When it comes to the Bank Nifty index, here this has been a laggard, and we have seen underperformance by the Bank Nifty. So now if Nifty has to move higher, Bank Nifty has to start performing from the current levels. So first of all, for Bank Nifty, the resistance is placed at 48,700 on the upside. And once that is taken out, we expect a sharp rally in the Bank Nifty towards 49,600, 50,000 mark on the upside. So even for Bank Nifty, it's just a wait and watch situation. The condition will be buy above 48,700 on the spot price. That will confirm your breakout. And then one can keep a stop loss of 48,400 on the downside and look for targets of 49,600 to 50,000 on the upside for the Bank Nifty index. So here the view is still sideways. We are waiting for a breakout for the Bank Nifty index. The larger banks like HDFC and ICICI, they need to start participating, and that is where we'll see the momentum coming back in the Bank Nifty index. But overall, the mid cap and small cap space also what we have seen a rally. I think the broader market participation in the last 2 to 3 trading sessions has been absolutely significant, and I think that participation will continue to gain momentum going forward. So overall, we are bullish on the markets.
All right, overall bullish on the market is the view coming in from Kunal. Well, it's the top 3 stocks time in the closing show today. Z Entertainment is the first counter that I've picked. Let's pull up the charts and see how the stock is doing right now. Promoters of Z Entertainment have bought around 2.7 million shares in the counter worth 270 million in the open market. The overall stake has moved to 4.3 now as compared to 4% overall. The stock is up 5% on the back of this. The quantum of this acquisition basically shows a belief in the long-term prospects and growth of the company, and this shall probably boost the confidence of minority investors as well. The second one on my list is Nykaa. UBS did upgrade it to buy from neutral, but they've cut the target price to 200. And which is why we've seen the downtick in the stock. It's down by about 2%. What they're saying is that BPC performance continues to surprise positively, but the growth improving and margins holding up, and this is despite of the competitive pressures coming in. In terms of fashion, management has rightfully taken a calibrated approach by limiting the marketing investment. So these are the reasons as to why UBS is changing its stance on Nykaa. Lastly, Zomato is in focus and it is also under pressure, and this is because Swiggy has cut its platform fee on selective basis. This could be for new users as well. In terms of the platform fee by different platforms, Zomato is at 10, Swiggy is at for select users it's at 6, and for some it's 10. Zepto, Blinkit at 11. Instamart and Big Basket at 8. And in terms of platform fee hike timeline, since August 2023, it has risen from 2 rupees to almost 10 rupees in October 2024. There have been no hikes since October 2024. The impact of this on Zomato is, of course, competitive pressure being built by Swiggy. But overall, an impact on Swiggy, it seems that till it's based and spread across to selective pockets, the impact might not be much. But if they decide to reduce their overall platform fee by 4 rupees, that is to 6 rupees, their overall profitability might be impacted, and taking this into consideration, they're already a loss-making company, so it might be heavy when it comes to when bottom line comes into picture. So that's with respect to 3 stocks. Mr. Chokalingam, I'll come to you. In terms of Nykaa, Q3 panned out very well for the company. In terms of the beauty and personal care segment, grew in double digits. Volume have also been good. What's the view like, and what's the outlook like for the company?
No, I have been giving sell call for more than 1 year. I am not comfortable with in paying hundreds of PE when the profit growth is not proportionate to the PE. So nowhere near the year-on-year profit growth is nowhere near the kind of PE it enjoys. So I will continue to maintain sell call on Nykaa.
That's no surprise, Mr. Chokalingam, that you're negative with regard to Nykaa, as you are with most platform companies. But Kunal, your picks for this afternoon.
I think two picks are there, both are on the buy side. First one is SRF. I think the stock has given a breakout in today's trading session, and on the technical chart structure, the high bottom formations is still intact. Today, even in the F&O data, it has added to close to almost 25% of open interest on the long side. So clearly, F&O data suggesting a bullish stance. So bullish on the stock from the current levels, one can go long. Keep a stop loss of 2860 on the downside, and one can look for targets of 3000 to 3040 on the higher end. So expecting new highs for SRF from the current levels. Second stock, which is looking on the buy side, that is on the cash counter, and this is from the shipping companies. I think shipping companies have done exceedingly well in today's trading session, whether it's a Mazda, a RSC, or a Cochin Shipyard. My pick over here will be Cochin Shipyard. A classical double bottom formation on technical charts plus breaking above the 20-day moving average. So it's a buy from the current levels. 1343 is where it is trading. One can keep a stop loss of 1300 on the downside and look for targets of 1450 to 1500 on the upper end.
That's the view with respect to Kunal's picks. Now, speaking of Swiggy and Zomato, I mean, FMCG distributors body, All India Consumer Products Distributors Federation has filed a case against quick commerce players Zomato, Swiggy, and Zepto, saying that they are, into anti-competitive practices. My colleague Agnidev Bhattacharya brings you more details to that. Agni, take it away.
So quick commerce companies like Zomato and Swiggy are in focus because NDTV Profit has learnt that FMCG distributors have filed a petition with the Competitions Commission against the likes of Zomato, Swiggy and Zepto over alleged anti-competitive practices. So the distributors claim that players like Blinkit, Swiggy and Zepto have been using anti-competitive practices like predatory pricing and even deep discounting. So the petition has not been accepted by the CCI yet. So it's difficult to quantify how much of an effect this will have on the companies mentioned. But sources tell us that the CCI is likely to take a call in the next 4 weeks over whether to order a probe or close the case. So this is the first time the distributors lobby is taking legal recourse against what they allege as predatory practices. Earlier they had written to CCI as well as to the Finance Ministry and Commerce Ministry, and in their letters they had claimed the same, that they are being deeply affected by these quick commerce companies and the practices that they employ for their businesses. So stay tuned, because this is a developing story and it's yet to be seen if the petition will get accepted or not.
Okay. All right. Thanks for that, Agni. Of course, both of those stocks buzzing in trade today. And Kunal, let me take your quick view on this one. Very, very quick 30-second view. Zomato, Swiggy?
Yeah, I think Zomato, if you look at the stock has given a breakdown below its 20-day moving average, sustaining below that mark. So the trend has been weak, and I can expect the stock to go towards the mark of 204 or 200 on the downside, which is the support zone. So the short-term view remains bearish. On the higher end, the resistance is placed at 225.
Thanks so much for that. Of course, stay with us. We have with us Amit Goyal, who's the co-founder and chief global strategist at Pace 360, to talk to us about markets. Amit, what do you make of the current structure? You've seen Nifty fall to 22K levels, but we've seen very strong support there. Thereafter, we've seen a bit of a rebound. What do you make now at this point, and what is it that you're doing from a fund perspective?
Yeah, so thanks for having me on, Harsh. So we are actually very active in the market right now, Harsh, and we have been for some time. And, we have been collating these records which have been made by this market hammering of last 5 months. And, we have collated almost 18 to 20 records that have been made. And, it's pretty extreme for all these things to have happened together in this short period of 5 to 6 months. And I can assure you that if you put all of them together, it's almost like a five sigma event. It's like once in a many decades you can expect this kind of a hammering. For example, MSCI India as a percentage to S&P 500, it made its all-time low last week. And MSCI India versus S&P went down 7 out of 7 months, which is again a record. Nifty IT index went down 14 out of 15 times, again a record. FMCG index went down 15 out of 15 times, again a record. I can just keep on rattling these numbers, but what I'm trying to say here is that this market is looking extremely deeply oversold, and a lot of froth which was in the market since September. And I think a lot of that froth has got cleaned out. So now, as to what we are doing in our asset management company. So in September, we were extremely underweight on equities. We were like less than 5% on equities in September because we just could not see any value in the Indian equities at that point. And then once the market started correcting, we started buying, and we bought all the way up to as recently as yesterday and day before. So we are right now sitting overweight on equities. And we believe that just like what happened in the Indian markets in the last 5 months, it was like a five sigma event. And after each one of those events that we have collated, it would be interesting for you to know that the market has practically almost always gone up after each of these 17, 18 events. Now, if you put all of them together, literally the chances of market going down from its, from where it is, that would be a five sigma event in its own right if the market were not to go up from here. So I think the probability of markets going up from here is more like 95%, whether it is our technicals or it is our macros or it is our India positioning vis-a-vis the rest of the world, India positioning vis-a-vis emerging markets, India positioning vis-a-vis emerging markets ex-China. Everything is absolutely at extremely deeply oversold levels. And we are looking forward to this rally, which hopefully is going to unfold over the next few months. I would say 2 to 3 months is looking like a sweet spot.
Right. So, Amit, is this only on the benchmark or is this even in broader markets? Because broader markets in that sense, in relative terms, don't look as cheap. They're largely in line with your 5-year average valuations. And therefore, is this only on the benchmark that you're constructive on? That's my first part. Second, the rebound that you see, how quickly and how much?
Fantastic. So Harsh, it is, in my opinion, it is going to be across the board.
Okay.
And if you look at what has happened in the small cap and mid cap space over the last 3 to 4 days, so from Monday till now, small cap index has rallied from a low of 41,700 to about 45,700 or 800, wherever it is. So it's almost like a 8%, 9% rebound in just about 4 days. So this is going to be a broader rebound in our opinion. It's not just going to be about Nifty or junior Nifty. It's going to be about small cap and mid cap as well. Now, coming to your point on the valuation, we are not at all long-term comfortable with the valuations on mid cap and small cap even now. So what we are saying is that it's not that I would want to buy small cap and mid cap here from a 3-year horizon. It's just that they are now so deeply oversold. To give you a perspective, Harsh, in the entire history post, let's say, the great financial crisis, the BSE small cap index over the last, let's say, 17 odd years, it is only 6 times that it has moved down by 17% or more in a single 30-day period. And you would be surprised that out of 6 such instances over 17 years, 2 of them have happened in this calendar year. One was in January and the other one was from February to about March beginning. Now, these are extreme numbers, even for the BSE small cap and mid cap. So we are looking at an across the board rally here. And it's just that we have a portfolio which is more large cap oriented and large cap biased. But fact of the matter is that we are looking at an across the board rally. And probably in terms of levels that you spoke about, my sense is that Nifty could probably come up to about 24,500 levels over the next 2 to 3 months. And BSE small cap could come back to, let's say, about 51,000 levels. And again, to put that in a perspective, BSE small cap was close to 51,000 as recently as February beginning. So we are not saying that it'll go back to January levels or it'll go back to December levels. We are only saying that it'll go back to February levels. So let's say 50 to 51K for small cap index, and for Nifty, as I mentioned, 24,500. And I think this recovery should happen if history is any indication, because we have now, with tooth and comb, we've gone over the entire history of Indian markets over the last 35 years, analyzing each and every single move, irrespective of the horizon, irrespective of the event or the time or the, let's say, the landscape around it, and putting everything together. I have to say that the next 2 to 3 months is looking like a very, very big sweet spot. And I think India should outperform emerging markets ex-China. It should outperform emerging markets, including China. It should definitely outperform S&P 500, and it has trounced S&P 500 in the last 4 days. So my sense is that the move has started, but we should not be in a hurry to call the end of this move. I think this move is going to stick, and we are looking at sometime between April and May that you would have some kind of an intermediate top, and then we'll decide whether we want to prune down our holdings at that stage or we would want to take it forward from there.
So what is it that you're buying, Amit?
Okay, so we have an overweight position on PSU stocks. We have bought a lot of defense and railway stocks at very, very beaten down levels. So we bought them at like 40%, 45% discount to their 52-week highs. So we are overweight on OMCs. They have also come down a lot. And I think considering where crude is right now, and considering that the government is committed to give them back their LPG under recoveries for the year 24-25, my sense is that OMCs are in a sweet spot. Gas marketing companies like MGL are in a sweet spot. Your PSU stocks, your PSU bankings. So we have a portfolio which is overweight on these sectors. But of course, we also have stocks like Reliance Industries, and we've got some private banks also in the portfolio. So it's a very diversified portfolio having some 45, 50 different stocks. But I would say that the PSUs and PSU banks put together is they have a 65% weightage on the portfolio. And we are we are feeling very, very confident and good about it. And the last few days have sort of vindicated us, where the market has come up by only about 2 to 3%, but many of these stocks have actually rallied by anything from 10 to 20%. So we believe that we are in a very good space going forward with this portfolio.
Amit, some bit of skepticism with regard to PSU, as well as with regard to maybe railways and defense, that some of these counters had run up way past their typical multiples, and therefore this correction was well warranted. You suggesting that you've bought in, what makes you positive? Just give us maybe 3 key reasons that really makes you bullish on the space.
Fantastic. Thank you for asking me that, Harsh. So I think the most important reason was the valuation. So you would be happy to note that the PSU portfolio which we have, which is about 65% of the portfolio, the blended P ratio of this portfolio is less than 10. So the valuation was a very big reason why we bought those stocks, when they were like hurtling down over the last few weeks and months. This was one. Secondly, I am totally in agreement with you that the valuations that you saw between July and September of last year, those valuations and those levels are not coming back in a hurry. So I'm definitely not a proponent who would say that they'll make new 52-week highs or all-time highs. Definitely not. But, we bought this portfolio at an average discount of something like 30-35% over from their 52-week highs. Considering the valuations, considering they were extremely beaten down, and considering that the froth in them, the overbought positions that operators and traders and speculators had in them have largely been cleaned out in the last 2 months in particular. So these are the reasons why we felt extremely comfortable with them. And I am again telling you that we are not we are not proposing that they will go back to their 52-week highs. But even if they recover 50% of the losses that they have seen over the last 6-7 odd months, we'll get a very handsome return on our portfolio. So these were the various reasons why we bought those stocks.
Thank you so much, Amit, for coming in, giving us those views. Very, very interesting and very, very bullish. So yes, appreciate you coming in and giving us that viewpoint.
Last, I would just want to, wish all the women viewers, audience, and team of NDTV Profit a very, very happy Women's Day in advance. And just to let you know that we are today launching a fund which is called Women Rise by Base 360, which is a step in that, in the direction of empowering women over the next few years and decades. So on that note, thank you so much, for having me in, and thank you so much for your patient hearing.
Thanks, Amit. And on behalf of all the women here, we thank you, and we've got plenty in our team listening in. So thanks, Amit, for that. But you know what? We're gonna slip into a very short break. We have Mr. Chokalingam as well as Kunal, both who will give us views on the other side, because there's plenty to talk about. But this macro view, as well as everything that we've been able to put together, has been very relevant. So stay tuned. We'll start getting stock specific on the other side of this very short break.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers, and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
Welcome back. Thanks for staying with us. Now on to our bull versus bear segment. Inox Wind is in the spotlight. Stock on a tear, 10% higher. 153 megawatt renewable energy order win. But frankly, this 12% kind of move looks a little exaggerated for that quantum of order win. Mika joining us with, the broader picture. What's working, what's not working. The bull versus bear. Mika.
Well, thank you for that, Harsh. So let's get on with the bull versus bear. The first thing we need to talk about is the order book. So it has seen a growth of 34% in terms of the order book when you look at it at Q3 FY25 versus the starting of FY25. Current order book stands at 3.2 gigawatts. However, in terms of how much the order book will grow year on year, well, analysts do expect a lower uptick in FY26. Next, we come to execution. It's been a steady execution so far in FY25. However, on the bear case, there is a tall task of 331 megawatts to meet the FY25 guidance of 800 megawatts in terms of execution. Now, let's just look at the industry landscape. Well, wind tariffs now are at competitive rates to solar tariffs. However, on the bear side, PPAs are seeing delays in terms of signing because of the lower tariffs, because it's not very, advantageous to the discom companies. Then in terms of, your pace of growth, on the bull side, there is a strong focus on renewable capacity additions. The government has put some strong targets for 2030 and beyond. However, wind energy tenders are lower when you compare to others. You have higher pace of growth in solar, and now there's FDRE component which is coming in. FDRE tenders do have wind, but it's a small proportionate of the entire order. In terms of your group foray, well, the Inox group can and could get a competitive edge because of its entry into independent power production as well as the whole solar module supply chain. However, analysts do know that there could be potential conflict of interest with clients within the manufacturing business, which is what Inox Wind mainly focuses on. And when we talk about the street view, well, 6 out of the 7 analysts suggest a buy rating for the stock. However, the stock has corrected 27% in the past 6 months, and the performance has not been so good so far. And when you talk about the valuations, EV to EBITDA is at 51x versus 77x in FY24. However, analysts still find the stock overvalued because the point at which they initiated at attractive valuations, it's not reached there yet.
Okay, well, thanks Mika for all those details. Very comprehensive bull and bear that we are seeing for Inox Wind. But let me go across to our guests to gather their views on this stock. Mr. Shokalingam, I'll come to you. This is Anushi joining in. Again, I want to understand your take on Inox Wind. It's one of those counters which has seen comparatively stronger moves in this kind of a market. Mika pointed out a strong fundamentals, but there are still concerns of the stock being relatively overvalued. What's your view on this counter?
I think it's a very good opportunity to book profit or cut the loss. If I see the consolidated EPS, it is hardly about 2 paisa for the first 9 months of current fiscal, and it has got a huge equity base. And let us not forget the fact that the renewable energy space has been overcrowded. So therefore, I am not comfortable at current price in terms of valuation.
Okay, and Mr. Shah, coming to you, what's your view on Inox Wind?
If I talk about Inox window here, the stock has definitely seen a rally, but there is some strong resistance what we face on the higher end. The supply zone, what I see for the stock on the higher end is at the levels of 180. So if this rally extend, it can have more 10 bucks upside towards 180. But from there, the supply pressure has been very strong. We might see again correction towards the mark of 160, 155 on the downside.
Okay, I'll shift focus, and maybe this this is a space where Mr. Chokalingam starts to get more positive. Mr. Chokalingam, it's the housing finance space. Now you're seeing Canfin Homes, couple of double upgrades and upgrades coming through with regard to Canfin Homes. Today you had an upgrade from Ambit coming through, 17% upside that they see on the stock price. They believe growth will rebound. And on the back of that, while the start of the day stock was quite muted, it's now sitting nice and pretty, 3.5% higher. Your views with regard to housing financiers, Canfin Homes in particular, and what about if I were to urge you to give us a couple of picks within the housing finance space, what would those be?
Yeah. Before giving recommendation, we need to understand that there has been a tremendous slowdown in the NBFC sector in the current year, and it is expected to continue next year. But still, housing finance looks a little attractive. So my first top pick would be PNB Housing. It is very cheaply valued now, particularly after the recent correction. And yes, one can look at Canfin Home as well. These are the two I would recommend within this space.
Point taken. Kunal, your views with regard to a Canfin on charts, how's it looking? Nearly 4% higher today.
So I think Canfin Home has already witnessed a sharp correction from the higher levels. In today's trading session, the stock has taken a support at the 20 days moving average, and it has surpassed the recent swing high, which it had made of 620. So the short-term view remains bullish. This pullback could extend the stock towards the mark of 660, 670 on the higher end.
Another stock that has been in focus is something like RITES Limited, and this has been buzzing in trade today after they received a letter of acceptance for a project worth about 28 crores. In an exclusive conversation, my colleague Tushar spoke to the company's chairman and MD Rahul Mittal about their growth and margin outlook. To listen in.
You see, it's a hard reality in terms of the changing business scenario that the era of giving orders on nomination basis to government companies is reducing across clients, whether it is central government ministries, other PSUs, state governments. So it's a challenge. It depends on whether you want to take it as an opportunity. We have thought of taking this as an opportunity. So as more and more opportunities are coming up, it's in our DNA to bid, because RITES has been bidding for a lot of international orders also for last 5 decades. So we are getting orders, we are capturing clients which were hitherto going to some other our competitors on a nomination basis. So it's a balance, but yes, we are confident that we have seen the bottom of the barrel in terms of margins. You settle down about 20% in EBITDA margin and 15% in PAT margin, and stabilizing at this, we will continue to get more and more orders, so that overall, moving forward, as execution improves, you see better top line and better bottom line.
Mr. Chokalingam, I'll come to you. Firstly, your view on RITES Limited and also on the railway sector. Overall outlook here is being on the execution of certain orders. Now that has been on a slower pace comparatively, even if we see from the third quarter onwards, there were expectations of a pickup in terms of where the order inflows are. We've seen higher competitive intensity in some of these counters which are there. And again, there has been a lot of correction also in some of the major railway names that are there. Want to understand your outlook on RITES Limited and also the overall space?
Yeah, the overall space first. All of us know that the budget has not hiked the capex for railway sector. And I agree with the budget approach of giving importance to fiscal prudence and also lifting the aggregate demand by increasing the expenditure on non-capex areas. So that is going to be a negative factor for railway stocks for throughout the FY26. We are going to see the impact of February budget in financial year FY26. So I remain quite negative. However, RITES, as you rightly mentioned, the stock has already crashed, and one has to look at the valuation also. And I believe for this changed environment, the stock has already paid an enormous price. And you look at the P ratio, which is quite reasonable also, around 22 times on trading basis, which is a very fair valuation and looks a little attractive from that point of view. So one can probably can make 15-20% return in a matter of 6 to 12 months. That's very much possible. So I would give a buy call on rights.
And Mr. Shah, your view, are you also negative on the overall railway space, or do you have any picks in this sector?
So I think railway space has already seen a sharp correction. So the overall, the larger term trend has been weak. Within this trend, we have come at the oversold territories. So bounce cannot be ruled out from the current levels. We expect this bounce can continue a little bit more. Rights, if I specifically talk about, I think here the stock has taken a support at the 20 DMA, and now the immediate hurdle on the upside is 228, 229. So I'm at least expecting a rally towards that mark, and if we have a closing about 229, you can expect this rally to continue towards 249 to 50 on the high end.
Okay. PVR Inox, and we've got some interesting news for movie buffs coming in from Karnataka, which has set 200 rupees as the price cap on movie tickets, a move which is likely to impact PVR Inox. And we had a positive note yesterday from Kotak, even though price was brought down from 1330 to 1200, if I recall right. But it was a positive note nonetheless, and the healthy upside even from here. But PVR Inox has 215 screens in the state, which account for roughly 12% of the company's total screens in the country. This could well impact the numbers with regard to ticket prices. But Anushi, in terms of so while prices could take a knock, you could have other ancillaries, food, beverage, where PVR Inox makes a chunk of its revenue from.
Yeah, absolutely.
And margins as well.
Yeah.
That may just continue, and it may actually be a positive rather than a negative, because it'll push people to go to theaters and to the premium ones at 200 rupees.
But Harsh, the major concern over here is also that lack of superstar related movies which we've been seeing.
That is.
And considering the current lineup also that we are looking at, it is something that one should be watching out for, because now the approach also for the user or for the viewer is that it will come on OTT anyway, so whether they should go or not. So that is something that, we can continue to watch for something like a PVR Inox.
Very interesting. Mr. Chokalingam, let me come to you. This is one of those stocks which since pre-COVID till now has done precious little. Is it a pocket where there could be an opportunity? Do you smell that?
I doubt.
Okay.
Whether there could be an opportunity. In fact, after stock market, I am very passionate about watching movie. So I am a big fan of fever complex. I almost every week 1 or 2 movies I go and see. Rightly you said from COVID. That actually has a lot of meaning in it. There is a structural change post-COVID. All of us know. And the OTT platform has really come off very well. And there's a massive structural change apart from OTT. That's competition for eyeball has increased enormously. You have OTT, you have various social media, and including WhatsApp, YouTube. So today, even on OTT, we don't watch one full movie at a stretch. So that shows the tremendous competition for eyeball. And they built a fine business. I mean, hats off. They made a revolutionary change in the way we watch movie. But unfortunately, I believe that the structural change is going to give a lot more pain to the cinema industry. So that's my view. I may be wrong, but I would avoid in the entire space.
Okay, Kunal, your views with regard to a PVR Inox. And any other consumer names that are looking interesting to you?
Yeah, I think PVR Inox, firstly, the trend has been absolutely down. Yes, definitely trading in an oversold territory, but I can say the pullback, which was likely to happen, is done. The stock has, even in this rally, the pullback rally not surpassed its 20 DMA, so the short-term trend continues to be negative. On the lower end, I can expect the stock to again test the levels of 900 on the downside.
Okay, Kunal, BTST. That time of the show.
See, I think one stock which I would like to highlight over here on the BTST front would be IEX, Indian Energy Exchange. The stock has witnessed short covering on the data perspective, plus the stock is on the verge of a breakout above its 20 DMA. So that's a buy. 163.55 is where it is currently trading. One can keep stop loss of 162 on the downside and look for targets of 167 to 169 on the higher end.
Okay, so but let's shift focus to real estate. Now, Brigade Enterprises has been in focus after launching its premium high-rise project in Chennai's IT corridor. Earlier in the day, we spoke to the company's MD Pavitra Shankar, who spoke about their growth outlook but admitted that the company might miss their FY25 guidance. Listen in.
In terms of the launches, we had originally indicated we do about 12 million square feet of launches. We may just about hit that number or come away a couple of million square feet short. But I'm still pretty happy in terms of what all we've been able to launch so far this year. Knowing that there are certain approvals just coming in right now, we'll be able to hit the launch per se. But in terms of the time we had to make the numbers, that's been dramatically reduced. Here's another use of the word dramatically, but that's kind of where we stand. We may get the launches in, and I think that's what we all need to understand about the real estate sector and industry. It is by nature a lumpy business. So even though we are forced to look at it on a fiscal quarter or fiscal year basis and do these comparisons year on year, I think what we all need to keep in mind is that the market is still strong. Companies are still launching. We are still acquiring land. The demand on ground is still good. It is just a question of which quarter is that coming into, but that isn't really changing the picture on ground.
You know, one of the major concerns in the real estate space is on the lack of launches this year. Now, this is also on the account of lack of approvals which took place in the first 2 quarters. And there are a lot of companies that we are seeing that they might miss their FY25 guidance. There's something like Prestige Estates, which is in focus, along with something like Aditya Birla Real Estate and Kolte Patil Developers. So, but you know, I'll take this across to Mr. Chokalingam and want to get his perspective on the real estate space and also his outlook on Brigade Enterprises.
Yeah, definitely the short term there will be little stress. You know, till a few days ago, we saw more than 100 lakh crore of equity wealth getting wiped out from the secondary market, which was close to 32% of India's nominal GDP of FY25. As a student of economics, I firmly believe that this kind of variation of wealth in the equity market would have little significant impact on the real estate as well. So there could be some headwinds in the short term for the real estate. To be fair, stock like Brigade has already paid a big price on that front. And when I look at the valuation, it is trading at around 32, 33 trading PE. I think which is a fair value for the company. Because considering its the business model and rental model, so I would accumulate recommendation if stock continues to correct even marginally.
So Chokalingam, any other names in the real estate space that stand out to you?
I feel there could be little more fall in the real estate. If somebody wants to consider definitely they want to focus on real estate, then maybe DLF, one can go with the leader. I am not talking, that stock Nesco because I have spoken about that stock many times on the channel. That is one stock related to real estate I like the most, and I hold it through family, myself, company, and I believe that this is going to be a next generation stock for the investors in the small cap space.
Okay, and Mr. Shah, your views on the sector?
I think Nifty reality, if you look at the pullback, what we got, again, the story is that we are not able to surpass the 20 DMA on the higher end. So I'll be bullish on the reality space only if the index crosses 840 levels on the higher end, currently trading somewhere around 815. So still I will wait for a confirmation. Probably from there we can see a good rally on the higher end for the reality space. Similarly, the stocks also like DLF, Oberoi Reality, or a Godrej property, they have not been able to surpass their short-term moving averages in that pullback. So it's still a wait and watch. Once we surpass these marks, then we can see a sharp rally in all the counters.
Wow, very interesting. Anushi, today morning we had a note from Jefferies on DLF, 51% upside on that one. Suggesting that both recurring as well as some bit of turnaround in the business likely to drive the numbers higher. So that one also stood out to me. No reaction on the stock largely at this point, but that note was an interesting one, and at the start of the day we saw a bit of buzz on DLF on the back of that, but realty being the one pocket where there has been pain today. We've seen a bit of a pullback, and it's probably the top sectoral loser at this point in trade.
Just want to point it out to you,
Yes.
DLF is one of those counters that, while we have issues regarding the companies exceeding their pre-sales guidance for this year, in fact, it exceeded its pre-sales guidance in the 9-month period itself. Something like even Macrotech, if we see, Macrotech remains on a comparatively stronger footing, which is there. Oberoi Realty is another counter that could be focused on. It has a very healthy outlook for its FY26 outlook. But yeah, there are a couple of names in the southern side, which, with the likes of Prestige Estates or Brigade Enterprises, is something that we need to watch out for if there is acceleration in their launches or not.
Very interesting. So some of those perspectives with regard to real estate, because that's where some of the pain today is also. But what to watch out for, and we have a weekend in front of us, and therefore quite a few things. One, you'll have the Fed Chair Jerome Powell speaking. We had a couple of governors also talk over the last couple of days and talk about possibly 2 rate cuts through this calendar year, which looks like a reasonable number. They also believe that inflation spiking up has not been built in by markets. So something to ponder if at all that were to happen due to tariffs. But yes, you'll have India foreign exchange reserves in focus. You'll have the Fed Chair Powell speaking. You'll have US unemployment rate that will hold one of the keys to what happens to rates as well through the rest of the year. You'll have Trump speaking at the first crypto summit. You'll have Japan foreign exchange reserves coming through, China inflation data, and China PPI data. So those are just some of things to watch out for. In terms of corporate actions, you'll have the record date for the demerger of Kesoram Industries. That will kick in Monday. But yes, one interesting piece to speak about today as well, and Kunal, let me come to you, is with regard to Reliance Industries. Talk to us about what the view here is. You've got a 3% move on Reliance today, 8% up over the last 3 trading sessions. What's the sense at this point? Very quickly.
Yeah, I think firstly for Reliance, the pullback has been very sharp. The stock has surpassed its 20 DMA, so that is positive. However, the stock is still not able to surpass its 100 DMA on the higher end. So probably it is stuck in a larger range, but within this range, we need to see for the next couple of trading sessions, how does it pan out? Is it the first leg of the move, and then we see some retracement coming in, and then the move continues or not? Too early to call it as a bottom for Reliance at the current levels. But I think a buy and dip approach till the time the stock is able to sustain about the 20 DMA on the lower end. So Reliance, more or less, we could see some bounce back in next week. So any correction in Reliance, that would be a buy opportunity.
Thank you so much, Kunal. Thank you so much, Mr. Chokalingam, for joining us this afternoon, giving us all of those views and perspectives. Quickly on to how we're closing for the week. We're closing largely flat on the Nifty 50 index, but let's talk about the week gone by. Let's pull up the index for the entire week. The Nifty Bank slightly weak on the close, but 1.4% higher. First time in 4 that we're closing higher for this week. So some bit of cheer getting built in this week on the Nifty 50. Let's look at the Nifty Bank. Very similarly, 1/3% lower on the intraday chart, largely flat for the week as well. So 1/5% lower for the week on the Nifty Bank. That's how it's playing out on those 2 benchmarks. But let's also talk about the broader markets, because that's where a bulk of the pain was at the start of this week. There you go. That's on the Nifty Mid-Cap Index. We've closed 1/3% lower for the day, but if we could pull up the weekly chart as well and give perspective for the week, slightly zoomed out, and thereafter the Nifty Small Cap Index. But largely today it's been that kind of a day where Nifty Mid-Cap has been slightly subdued, but the Nifty Small Cap has outperformed. 2.7% higher on the Nifty Mid-Cap for the week, 4.7 on the Nifty Small Cap. So rebound seems to be underway, hopefully, or am I saying it too soon? You'll have to wait and watch for next week for that one. Quickly onto the breadth of the market, the advanced decline, because it's been weak for the financial year at this point. But now we're starting to see a reversal. Fourth straight session where we've seen advances hold up over declines. The breadth improving visibly, especially on Tuesday, Wednesday. We really saw the breadth very, very deeply in favor of the greens. Now we're starting to see a bit of a more balanced approach with how markets are going, but that's how the breadth is stacking up for today. Last off, I want to highlight sectors, and a couple of sectors which were in focus. The Nifty Realty Index was down 1.25%, the largest or the top loser among all sectoral indices. The Nifty IT Index among the large caps, 1% shaved off Nifty IT, subdued on the Nifty Bank as well, because that's the other heavyweight where any amount of pressure largely adds up on the index. The Nifty Pharma Index also closed 0.1% lower. But what's doing well? Metals. Metals have shown this week, and I'm going to pull out the weekly chart on the Nifty Metal Index. I'm fascinated to know where that's gone for the week gone by. 7.5% on the Nifty Metal Index. That's some serious move that we've seen on the Nifty Metal Index this week. But that's how it's played out. Last off, the BSE 500 top gainers, top losers, just some stocks. Those are the ones that have moved. But with that, completely out of time on this edition of India Market Close. From myself, Anushi, Mahima, and everyone who puts the show together, thanks so much for watching. Stay tuned to NDTV Profit. More action on the other side.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers, and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Hello and welcome. Good afternoon. You're watching Market Express and I'm Malika Mishra. Let's get straight into the show. Benchmarks end today's trading session flat. The Nifty holds on to 22,500 mark, whereas the Sensex dips over 20 points to end above 74,300. Broader markets fare mixed. Mid-cap index underperforms, whereas small-cap index ends higher. All sectors barring media, metals and auto end with cuts. Realty falls the most, cracks over 1%, followed by consumer durables. The Indian rupee strengthens by 23 paise to 86.88 levels. Lackluster sentiment worldwide triggered by trade-related uncertainties and relentless outflow of foreign capital from domestic equities trigger decline for the rupee. JP Morgan is cautious on steel stocks. EBITDA per ton has likely bottomed out for Indian steel makers, and US tariffs can concern investors due to possible effect on the demand side. They also see low possibility of supply side reforms from China. They expect housing sector in Tier 2 and Tier 3 Chinese cities to slow down. Goldman Sachs maintains a buy on Adani Ports. It is bullish due to new port ramp-ups and reasonable valuations. It expects revenue and EBITDA from logistics to continue growing. It highlights that the company is quite close to making a 27 to 28% market share in India's port volume. Jindal Stainless divests entire 26% stake in Jindal Coke, while it sells 4.87% stake to JSL overseas. It offloads 21.3% stake to Jindal Coke via buyback offer. Jindal Coke will now no longer be an associate of the company. Ambit upgrades Canfin Homes to buy with a 17% upside. The lender's growth falls from 23% to 9% in FY24 due to one-off events. Ambit says that digitized property registrations have begun in Karnataka, but consistent miss on growth has derated the stock overall. UBS upgrades Nykaa to buy with a target price of 200 rupees. The beauty and personal care segment's performance continues to surprise positively. The growth in the segment is improving and margins are holding up despite competitive pressures. Jefferies maintains a buy on TLF with a target price of 1,000 rupees. There are chances that the strong cash flow coming from Dahlia's project might overblow the Gurugram market concerns. Lease income of the company is set for a 20% uptick. BSE has been under pressure for a few days now. This is after NSE shifted its expiry date to Monday. The regulator had earlier proposed a few new norms, including a change in calculation method of open interest. We spoke to BSE MD and CEO Sundaraman Ramamurthy, and he says that expiry day trading in one exchange creates systemic risk. He explains how a glitch or circuit breaker on that day can disrupt the entire market. He adds that if different products expire on different days, traders can manage risk better. Quest Corp announces three-way demerger. Company receives NCLT's approval for a three-way demerger, which will be Quest Corp, Digitide and Blue Spring. Demerger aims to simplify organization structure, and all three companies will be listed separately. JP Morgan maintains overweight on BEL. Structural growth will, with strong order announcements, lie ahead for the company. The brokerage says 20% correction from peak presents a good entry opportunity. They see a high possibility of company announcing 12,000 crore worth of orders by March 31st. It also points that BEL is the most diversified and consistent play on the defense capex. Kalpataru projects order book grows by 19% year-on-year to over 60,000 crore in the first 9 months of FY25. Order intake till date stood at 22,500 crore rupees. The stock also jumped over 3% today. RVNL receives letter of approval from Southwestern Railway. The order is worth 156 crore rupees. The execution period is 18 months. With this, the company's current order book position stands at 98,000 crore rupees. The company expects the order book of the company to jump 1.5 lakh crore rupees in FY26. Tighter norms for gold loans on RBI's radar. Sources told NDTV Profit that the RBI plans to ask lenders to follow stricter underwriting processes. Now, the central bank will ensure that the lenders monitor end use of gold loans. RBI wants lenders to a certain ownership of gold being mortgaged and to cool down the fast-paced growth in the gold loan segment. Government can invite fresh applications for the post of RBI Deputy Governor. This is as per news reports. Selection panel is yet to decide on the fourth RBI Deputy Governor. Tariffs have been the talk of the town since Trump has assumed power, and as of this morning, several tariffs announced on Canada and Mexico have been delayed. There's also been a lot of chatter about impact of these tariffs on India, as the tariff differential between India and the US is at the highest. Now, we spoke to Pranjal Bhandari, Chief India and Indonesia economist at HSBC, to quantify this very impact. And she says that US tariffs will push the growth lower by 0.3%. She also adds that mid and low tech sectors could see potential foreign inflows. The Supreme Court today declined to stay the ongoing construction work for the Dharavi redevelopment project, refusing to overturn the Bombay High Court's decision in favor of the Adani Group. Hearing an appeal filed by UAE-based Settling Technologies Corporation, the court said that work on the project had already begun, including the demolition of some railway quarters. Settling had challenged the Maharashtra government's decision to award the Dharavi project to Adani Properties after cancelling Settling's earlier bid. The Supreme Court, however, directed that all payments related to the project be made from a single escrow account. The court issued notices to the Maharashtra government and Adani Properties. It has scheduled the next hearing for May 2025. All India Consumer Products Distributions Federation, a trade body representing 4 lakh distributors of fast-moving consumer goods, has approached the Competition Commission of India, alleging deep discounting and predatory pricing practices undertaken by quick commerce companies like Zomato-owned Blinkit, Zepto, Swiggy, Instamart that harm smaller retailers. This has been reported by Economic Times. Last year, the AICPDF had filed a complaint over these issues with the Commerce Ministry. The complaint was later passed on to the Competition Commission of India. Deepali Agrawal, Deputy MD of Exim Bank, says that there are no signs of any asset quality deterioration amidst the tariff wars so far, and that it is too early to gauge the impact of tariff wars in India. She says export targets for the ongoing fiscal unlikely to take a hit as exporters benefit from rupee depreciation. Knowledge Realty Trust, one of India's largest office real estate investment trusts, files for an initial public offering. The Blackstone Satwa joint venture files draft papers for 6,200 crore REIT IPO. Blackstone and Satwa will have 55 and 45% stake in the joint venture. REIT will have 30 assets spread across 6 cities. The Department for Promotion of Industry and Internal Trade and Mercedes-Benz India Private signs a memorandum of understanding. This is to advance India's manufacturing ecosystem, road safety and environmental sustainability. The collaboration will focus on creating structured programs that provide startups with infrastructure, mentorship, funding opportunities and market linkages. Market regulator SEBI issues a warning letter to FMCG giant Nestle for violating norms related to insider trading. Now, the letter received on March 6, 2025 highlights the breach but notes that there is no material impact on the financial, operational or other activities of Nestle India. The company's share price has dropped over 12% in the past 1 month, while the FMCG index has plunged over 17% in the last 6 months. Shares of Reliance Industries relax a bit after analysts don't see major issues on the macro front. Now, this comes after the stock bags multiple upgrades and target hikes. NK maintains a buy and sees gradual margin gains in the retail unit. Macquarie too upgraded the stock to outperform from neutral. Improved earnings momentum, a potential listing of Geo platforms and the gradual commissioning of new energy capacities add to the silver lining for the share prices of Reliance. Morgan Stanley says India is an oversold equity market. The brokerage notes that India's fundamentals appear to be improving after a soft patch, whereas share prices are materially lower. They say that the equity market continues to overlook good news and that this is likely to be a stock pickers market. They remain overweight on financials, consumer discretionary, industrials and technology. The much-anticipated launch of Noida International Airport may face delays, with commercial flight operations unlikely to begin as scheduled on April 17, 2025. Officials from Noida International Airport Limited confirmed that the Directorate General of Civil Aviation is expected to issue the airport's aerodrome license only by April 30th, pushing back the initial timeline. 1.29 lakh registered residential transactions in top cities in 2024 growing 14% annually, reveals a report by Square Yards. The number of women home buyers is steadily rising, with 1.29 lakh residential transactions registered solely by women in 2024, a 14% increase from the previous year across top cities. In comparison, male home buyers saw an 11% growth during the same period. Balrampur Chini Mills will set a biopolymer unit in Uttar Pradesh. We spoke to Avantika Saraugi, the ED of Balrampur Chini Mills earlier today for the reason behind it. And she says that polylactic acid is a better option for the future generations. She says that the company is targeting 50% revenue from polylactic in FY 27-28. Prime Minister Narendra Modi visited the Union Territory of Dadra and Nagar Haveli, Daman and Diu, where he inaugurated several development projects and participated in initiatives aimed at strengthening healthcare, boosting food security and empowering women. During his visit to Silvassa, the Prime Minister inaugurated the first phase of the Namo Hospital, a 450-bed facility built at a cost of over 460 crore rupees. Later in the day, PM Modi laid the foundation stone for multiple development projects in Silvassa worth over 2,580 crore rupees. Ministry of Electronic and Information Technology launches AI Kosh as part of the India AI mission. AI Kosh is India's sovereign datasets platform meant to train AI models. Now, core datasets for AI Kosh will be provided by government ministries. A significant part of their compute capacity will be used for developing sovereign AI models. Union Labour Minister Mansukh Mandavia announced that the Employees Provident Fund Organisation EPFO will soon launch the EPFO 3.0 version, which will allow subscribers to withdraw funds from ATMs along with several other new features. Speaking after inaugurating EPFO's office complex of Telangana Zonal Office and Regional Office here this evening, he said the EPFO 3.0 version will be equivalent to the banking system. Karnataka Chief Minister Siddaramaiah, who also serves as the state's finance minister, announced a 1,800 crore rupees brand Bengaluru state budget. Now, in the budget, he announces that Bengaluru City University will be renamed to Dr. Manmohan Singh. This will be the first university in the country to bear Singh's name, who passed away on December 26, 2024. In the same budget, the Karnataka CM also sets a price cap of 200 rupees on movie tickets. The ticket prices are curbed statewide to enhance affordability. This applies to all films and multiplexes. Omar Abdullah-led Jammu and Kashmir government announces its first budget in 7 years. The state allocates 815 crore rupees for agriculture, 390 crore rupees for tourism development. And now on to the next news. US President Donald Trump signs orders to delay tariffs for Canadian and Mexican imports covered by North American Trade Agreement USMCA. The 25% reciprocal tariffs are on hold until April 2nd. The halt mainly offers relief to automakers but excludes steel and aluminum imports. The tariffs for these are set to take effect next week. A SpaceX rocket exploded shortly after it was launched from Texas, grounding flights and triggering warnings about falling spaceship debris. SpaceX confirmed the uncrewed ship had suffered a rapid, unscheduled disassembly during its ascent into space and lost contact with the ground. The massive SpaceX Starship, the largest rocket ever created, spun out of control shortly after its launch. No injuries or damage have been reported, but images from those in Caribbean Sea island nations show fiery debris raining from the sky. The armed wing of Hamas said that it remained committed to its fragile ceasefire with Israel after Donald Trump told the people of Gaza they would be dead if hostages held there are not freed. The first phase of the 6-week-old truce expired at the weekend, and talks on the deal's future have hit an impasse. Hamas said Trump's threats would encourage Israel to ignore the deal, which largely halted more than 15 months of war in Gaza between Israel and Palestinians militant. A private US company says it has landed a spacecraft close to the moon's south pole, but fears the machine is not upright. The company hopes the scientific instruments on board can still be deployed, including a hopping robot designed to explore a nearby crater and the first lunar mobile communications antenna. It is the second time an intuitive machine spacecraft has landed in an irregular position on the moon. Tens of thousands lose power as tropical cyclone Alfred nears east coast of Australia. Tropical cyclone Alfred remains a Category 2 system. It is moving towards the southeast Queensland coast and expected to cross the Bay Islands in the early hours of Saturday morning. It is then expected to move toward north of the Brisbane CBD. Wind, rainfall, storms, surge and flood risks remain. A thrilling Sunday ahead for all the cricket fans as India faces New Zealand in the finals of the Champions Trophy 2025. India won all 4 of their matches in Dubai, including a 44-run group stage victory over the Black Caps last weekend, which made them qualify for the finals. The world is gearing up for the celebration of International Women's Day on March 8th. On account of this special day, NDTV Profit spoke to a host of women leaders across India's business and finance sector about how women can make informed investment decisions and maximize their savings. Here's Kotak Alternates Asset Managers Lakshmi Iyer about the importance of investments for every woman. Listen in.
Markets are very dynamic, very similar to a woman's role, which is, changing from the time she is born, to the time she starts working, to the time she gets into a family life. And therefore, investments are a bedrock of her, existence for the next, decades or so. And fundamental difference between investments and savings is that investments empower you to grow your wealth over time, whereas savings just kind of helps you do the maintenance mode. So take charge, I would say, take the lagam, I would say, of your investments in your hand, else you will have to pay the inflation lagan if you don't really do it right. So just go for the investment, and there is no right wrong. Understand what your requirements are and just take the plunge. On that note, a very, very happy Women's Day to all of you.
And with that, it's a wrap on Market Express. But do stay tuned to NDTV Profit for more news and updates.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every anlom, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Reviksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Very warm welcome to you all for this NDTV Profit conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Reviksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Very warm welcome to you all for this NDTV Profit conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Reviksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Nifty Sensex end flat. Nifty, however, ends its 3-week losing streak. Sectoral indices ended mixed and metal emerged as the top gaining sector this week. In a move to ensure financial stability and prevent misuse around the gold loan usage, the Reserve Bank of India asks internal auditors to verify whether banks and NBFCs are in compliance with gold loan regulations from September the 30th. The BSE to act on NSE's F&O expiry shift only after hearing out feedback from market voices, says CEO Ramamurthy. He emphasizes that the BSE's approach has always been driven by what traders and investors demand. The Supreme Court, while hearing a petition filed against the Dharavi redevelopment project, refused to stay the construction work that has already been initiated. In a major relief to Mexico and Canada, US President Donald Trump has exempted them from the new 25% tariffs on certain goods and services. The exemption is expected to last until April the 2nd, when Trump plans to enact a fresh round of tariffs. Women at the forefront in all aspects of our lives, be it as a consumer, a voter, or a leader. NDTV Profit brings you conversations and insights from thought leaders, entrepreneurs, and lots more. Good evening, you're watching Profit 360 on NDTV Profit and I'm Sanjana. Along the next half an hour, we're going to bring you the latest in international, national and what's also happening in the markets. So it was actually a flat end to the markets this week, but Nifty did manage to snap its 3-week losing streak. Sectoral indices ended mixed and metal emerged as the top gaining sector this week. My colleague Anushi joining us with a wrap of all of the action today. Anushi, over to you.
Right, thanks for that, Sanjana. Now, what we've seen is a continuous weakness in the last few weeks, in fact, but Nifty has snapped those 3-week losing streak, and here counters like Bharat Electronics and Tata Steel emerged as the top gainers. In fact, if you look at the sectoral-wise performance, Nifty Metal was one of the top gainers in sectors this week, and this was led by performance of Vedanta, Jindal Stainless. If you look at Nifty Pharma, Auto, IT, Finserv and Bank, they also snapped their 3-week losing streaks as well. However, Nifty FMCG snapped its 4-week of losing streak as well. Coming to the sectors, or rather the stocks which were still under pressure, is something like a Nifty Realty. It fell the most, and this was dragged by the performance of Godrej Properties and Prestige Estates. Now, Nifty Metal, the main focus this week was the China stimulus measures, and it gained 5th day in a row, led by Welspun Corporation and Hindalco Limited. Nifty Oil and Gas gained 4th day in a row as well. PSU banks, if we talk about that, that also continued on a gaining streak for the 4th day, led by Punjab and Sindh Bank, Union Bank of India. Coming to Nifty Auto, they gained for a 3rd straight day, and this was led by Apollo Tyres and Bajaj Auto. However, Nifty Bank snapped its 3-day gaining streak, and this was dragged by the performance of IndusInd Bank and AU Small Finance Bank. So this was the overall sectoral trends that we are seeing, and in terms of benchmark and the broader market indices, how the markets have performed so far this week.
Right, Anushi, thank you so much for bringing us those updates as Nifty snaps its 3-week losing streak at the end of the week. Now, moving on, despite the current panic and fear in the market, Dinesh Thakkar, chairman of Angel One, asserts that this is an ideal time to invest in blue chip stocks. He highlights the benefits of compounding and emphasizes that the market has potential to offer a growth of 14 to 15%.
I always look at fundamentals. Has fundamentally anything changed? Are we expecting India growing at a lesser rate than 6.5 or 7? No, I don't think today we are talking about that. So whatever kind of like fundamental indicators are there, which are basic engine for stock price growth, are there. What was there? There was a froth because of excess liquidity, which has gone out. In fact, we are reverse of that. Now FIS selling and retail not being as active in this month. So you will see repercussion of that. And there is an opportunity to enter the market at a good valuation. There's an opportunity to buy good blue chip stocks. For retail investor, I would say, see, they don't have an expertise to select blue chip stocks. So for them, it is good to go and buy index stocks. index funds, ETFs, which gives them a good exposure on this economy. Their bet should be on growth of economy. If I look at economy for next 10, 15 years, I feel we'll continue growing at the rate of 7%, inflation 5-6%. Still, market has a potential to give you a CAGR of around 14 to 15%. What is the right point? It's very difficult for retail to understand what is the right point. They should get an average price. That's the reason SIP is the right way for them to invest. For me, I would say advice to retail would be start your SIP if you haven't started. If you have started, continue with this. It is not that a price at the top or price at the bottom. Average price is important. From there, compounding is important, which is going to happen. So take a call on whether my economy, India's economy is going to grow at a lesser rate. Nobody is having concern on that. So I feel the story of compounding of 14-15% is there. And people like our population is quite huge. If you see, look at our kind of median age, it is 28, 29. So people have still like 30 years of career. And they should think about how do we compound our wealth and which is the right asset class. Simplest, easiest and most profitable asset class would be equity. It's very simple to enter and exit this.
And on to an NDTV Profit exclusive. The RBI is tightening the rules for gold loans to prevent misuse and ensure financial stability, and are now checking to make sure lenders are following these new rules. Now, back in September 2024, the RBI found discrepancies with how gold loans were being given by lenders, how gold was being valued, and how the money from the loans was being used. The RBI then asked banks and non-banking financial companies to fix these problems by December 31st, 2024, as they now want lenders to monitor how loan money is used to ensure its use correctly, improve the valuation of gold that is pledged and as the collateral, and follow stricter rules for lending against gold. So the RBI is now asking internal auditors to verify that banks and NBFCs are following these new rules. My colleague Vishwanath Nair has sent this in.
So sources are telling NDTV Profit that the Reserve Bank of India has reached out to the internal auditors at banks and NBFCs to verify a compliance report to ensure that these lenders are in compliance with the RBI September 2024 gold loan circular. Now, what has exactly happened? In September of 2024, the RBI released a circular where it said that it had found a lot of deficiencies in the way banks and NBFCs do gold loans, and certain specific instances were pointed out. And the RBI had asked banks to comply with the existing norms by December 31st, 2024. After that compliance was achieved, banks were expected to submit a compliance report. And now these independent or internal auditors will review this compliance report, will review the bank's actual operations and tell the RBI whether this compliance is in order or not. Now, why is this important? Well, essentially, this is the first step in a complicated process of supervisory actions that the Reserve Bank of India takes. Once the internal auditor's report is in, the supervisory teams of the Reserve Bank of India will review them, and then if there are any non-compliant lenders found, then action will be taken against them, and these actions could range anywhere from punitive damages to some kind of business restrictions, depending on the gravity of the non-compliance. What does the RBI want these lenders to do? Well, essentially, the RBI wants lenders to better monitor the end use of funds. So borrowers, when they take money while pledging gold, what are they doing, and whether they're doing exactly what was promised to the lenders before the loan was approved. The RBI also wants better processes in assaying the gold, which basically means that valuing the gold that is pledged to them, and a better process will ensure that a better value is determined and the borrower and the lender both are favored properly. Why is this important? Well, essentially, gold loans have been growing very, very sharply, 76% year on year as of January. That's the amount of gold loans, gold loan growth in the banking system alone. And that's why the RBI is a little bit concerned, because gold prices are also going up. So it does not want lenders to expose themselves to any problematic behavior.
Right, stricter norms possibly on gold loans soon. And on to an interesting update observed in our newsroom today. Swiggy may have initiated a cut on platform fee, but only for selective users. Mahima joins in with a detailed report on this.
This platform cut could be for selective users only and could also be just for new users. Just in the newsroom, when we were trying to compare different platform prices for different users, we found out that Swiggy One users and Swiggy Black users still have a 10 rupee fee, but a new user saw that the platform fee for the new user before logging in was 6 rupees. But the question here is that whether that person will be able to order at this particular platform 6 rupees fee without logging in or not is something to be observed. But moving on to how platform fees have fared so far, in terms of Zomato, the platform fee is fixed at 10 rupees. Swiggy could be 6 or 10 for selective users and new users. Zepto is at 11 rupees. The next counter is Blinkit, where again it matches with Zepto. 11 rupees is the platform fee. Instamart is comparatively still lower as compared to Blinkit and Zepto. It's at 8 rupees. BB now is, that is your big basket now, is at 6 rupees, which is lowest of all quick commerce platforms. And in terms of platform fee hike timeline, since August 2023 to October 2024, we've seen a hike from 2 rupees in terms of platform fee to 10 rupees. So this is, grown in a staggered manner in just a span of over 1 year. In terms of the overall impact on Swiggy, going forward, despite of high competition, quick commerce platforms have remained stable in terms of hiking their platform fee, but food delivery is showing some kind of early signs of lowering their platform fee. Now, lowering of platform fee for select users might not have a bigger impact, but if they apply it for all users, this will have an overall impact on their profitability. And considering that losses from quick commerce for Swiggy are very high, this could overall have an overhang on their bottom line going forward as well. So this is the overall report as to how and what will happen to Swiggy if they lower their platform fee from 10 rupee to 6 rupee.
Now, the BSE has been under pressure for a few days now. This after the NSE shifted its expiry date to Monday. Earlier, the regulator had proposed a few new norms, including a change in the calculation method of open interest. How is the company planning to tackle all of this? My colleague Charu spoke to Sundaraman Ramamurthy, MD and CEO BSE, earlier today about both of these headwinds. Let's listen in.
We are a market infrastructure intermediary. Whatever is the voice of the customer, that's what we implement. When we implemented Friday, that was based on market voice. When we implemented Tuesday, that was based on market voice. Whatever market advises us, that's what we will do this time as well. As far as the share prices, for us, share prices are outcome. What is the main purpose for which we exist? To provide a well-governed, well-regulated marketplace with products what the market want. That's how we will look at it.
So are you planning any sort of change again in the expiry dates?
That would depend upon what the market voice is going to be to us. I'm told NSE made a change on 2 days before or something. So once we are able to understand what the market advice for us is, we will accordingly act.
So you wish to look at how things roll out and then take advice and then, take your action.
Yeah, whatever the market participants tell us as to what should be our action point, that's what we will do.
So moving ahead, the Securities and Exchange Board of India also recently floated another consultation paper that was about the calculation of open interest in the FNO segment. Now, from the notional method, there has been a suggestion to change it to a future equivalence method. Now, do you think that if implemented or if this proposal paper in general implemented could also affect the volumes at BSE?
As I said, volumes are outcomes. The most important thing is to provide products as required by the marketplace within the four walls of corporate governance and market regulation. If you recall, there are multiple open interest requirements stipulated by the regulators. One of them was stipulated during COVID times, and that was called as sentimental OI. Now that COVID has gone, we have been requesting the regulators to review it. The purpose for which it was born is now not there, and market regulations themselves should not shape market microstructure into situations which are not warranted. So the regulators are looking at it and they have come out with a paper. The paper talks about future equivalent, as you rightly observed. The regulatory process in India is a co-created process. Market is consulted, the exchanges are consulted, experts are consulted based on whatever their advice is, and based on SEBI's internal thinking, things will come out and get rolled out. I'm sure the market regulatory role and market development role have always been going hand in hand, and SEBI will consider the views and then analyze what the repercussions are, the positives are, and accordingly a decision will be taken.
And now the Supreme Court today declined to stay the ongoing construction work for the Dharavi redevelopment project, also known as the DRP, refusing to overturn the Bombay High Court's decision in favor of the Adani Group. Hearing an appeal filed by UAE-based Seclink Technologies Corporation, the court said that work on the project had already begun, including the demolition of some railway quarters. The Supreme Court, however, directed that all payments related to the project be made from a single escrow account. The court issued notices to the Maharashtra government and Adani Properties and has scheduled the next hearing for May the 25th. India is a high tariff economy and has been for the last decade. Several sectors will be impacted and India's GDP could fall by 0.3% due to the US tariff imposition. This is what Pranjal Bhandari had to say about the markets.
India generally is a very high import tariff economy, and it has been for the last decade. It's almost like we didn't notice it, but now that President Trump is talking about it, everybody's really sitting up to it right now. The truth is we've had this for the last decade. I don't want to underestimate the pain if new tariffs are imposed on India. Like, for example, if we see reciprocal tariffs imposed by the US on India, my back of the envelope calculation suggests that several sectors will get impacted and overall GDP growth in India could fall by about 0.3 percentage points. That's not an insignificant number. So there's definitely short-term pain out there.
Meanwhile, Prime Minister Narendra Modi visited the Union Territory of Dadra and Nagar Haveli, Daman and Diu, where he inaugurated several development projects and participated in initiatives aimed at strengthening healthcare, boosting food security and empowering women. During his visit to Silvassa, the Prime Minister inaugurated the first phase of the Namo Hospital, a 450-bed facility built at a cost of over 460 crore rupees. Later in the day, he laid the foundation stone for multiple development projects in Silvassa worth over 2,580 crore rupees. And as we wrap up this edition of Profit 360, with International Women's Day just around the corner, the world is brimming with excitement for celebrations of March the 8th. Now, women account for an incredible 85% of global consumption spending, a statistic that highlights their powerful influence on markets worldwide. NDTV Profit took a closer look at whether brands are truly meeting the expectations of their female consumers. My colleague Sessa sent in this report.
In a world driven by consumerism, one group stands out as the undeniable powerhouse of the market, that is women. From fashion to technology, they represent a crucial target for brands, many of which are honing their focus to seize the women opportunity.
Women account for a staggering 85% of global consumer spending, as per a recent report by the Boston Consulting Group. In India alone, the shift has been remarkable. A decade ago, women's education achieved parity with men's and now exceeds male enrollment. This progress, combined with increasing workforce participation, has led to a more discerning cohort of women who possess greater financial power. They are now able to make purchasing decisions that align with their values and aspirations. And India Inc. can't afford to ignore the needs of these informed consumers.
We have women in all functions, whether it is sales, massive numbers in product development, supply chain. We have 2 of our lines run exclusively by women in our Haridwar plant and in our Bangalore plants. And any function that you look at in last mile mobility, we have women.
But despite their influence, there's a disconnect. A Kantar study revealed that 72% of Indian women feel brands don't understand them. They feel with men controlling the advertisement narratives, many brands fail to accurately represent the evolved identities of today's women.
Brands definitely do whatever they think will sell their products. And with women growing numbers in financial freedom space, so they're definitely using our face on their ads, representing us more. But there is still a stereotypical notion of us buying makeup, us buying kitchen household.
There are some brands who are achieving the goals of representing women in a better space, but I think according to this situation, they also need to be more authentic, put more efforts in showcasing women as a part of equal representation.
Overall, if men should hire more women, and whenever they are writing or they are looking out for any particular product per se, and then they are working on that particular product, they should always think about how women would feel while they are going to use it or while they are going to buy it. What is their mindset? What do they think about it? Is it the sustainability? Is it about the eco-friendliness, or the packaging of it, or how attractive it can be? Because women do tend to fall for these cute little things, which is kind of missing from the financial sector altogether, or other sections, banking or these things, so that it becomes a little boring, and that is how it is related with women, that women might not be interested in it.
However, there is good news. Brands that do listen and adapt are reaping the benefits. According to Harvard Business Review, women-led startups consumers see 37% higher returns.
See, with so many brands spending so much of money, they must be resonating with women, otherwise why spend all so much of budgets? That having been said, I think, some ads have continued to be successful because they've followed a particular formula. So for 70, 80, 90 years, Lux has always been Filmi Sitaron ka Saundarya Sabun, right? So that formula continued to work, still works. It changed gears with Dove coming in with the real woman, real emotions, real people. That has done well. Now you have newer players like L'Oreal or Mamaearth or whatever. They're trying to portray a much younger woman, a woman who's both successful, is a woman of substance, does many more things than the traditional Indian woman was always supposed to do, right? So in their own way, each one of those brands has carved out some kind of a niche, and in their own respective niche, with the kind of communication that they are doing, I think it's working.
However, there is good news. Brands that do listen and adapt are reaping the benefits. According to Harvard Business Review, women-led startups consumers see 37% higher returns.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every anlom, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Very, very warm welcome to you all for this NDTV Profit conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every anlom, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Very, very warm welcome to you all for this NDTV Profit conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every anlom, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Headlines you start your day with. What matters worldwide